remain on the buy side. They have sold shares of nearly rupees 2,500 crore in the cash market, but it was offset by DIs, which bought shares of nearly rupees 6,000 crore. In futures, we saw FIs cutting long positions by nearly 5,000 contracts. At the same time, they have reduced short positions by 24,000 contracts as well. But interesting data is coming from the option side, where we saw major selling by FIs. In the index option, they have sold shares of nearly rupees 11,600 crore, and in stock options, shares worth rupees 1,200 crore were sold. At the same time, long exposure has moved higher, mainly because of FIs buying in the index futures. Long exposure now stands at 65%, with total long contracts at 1.50 lakhs. In the options, the data reflects major congestion in the range of 24,900 to 25,000. 25,000 call, we saw addition of 22 lakh shares with a premium at 57, and for 24,950 call, we saw addition of 7 lakh shares with a premium of 74. In the put side, major activities were seen in 24,950 and 24,900 strikes. So where are the support and resistance levels for Nifty now? Resistance is again, it remains around 25,000, and support is now moved higher to the level of 24,800, or can say to the near previous day's low. So what all stocks will be in the focus? We have India Cements in the band, and two stocks that I'll focus on. First one is Bandhan Bank and second is PNB. For Bandhan Bank, yesterday we saw delivery buying of almost 700 crore, which is 3 times of 1 month average. And for PNB, delivery buying was 650 crore, almost again 3 times of 1 month average.
Interesting updates there, Sudarshan. Thanks a lot for that. The time for a short break here on Power Breakfast. Up next, we get you highlights from the Reserve Bank's annual report on currency and finances. Stay tuned. Back on the other side.
Kamala.
Hello. Hi.
Hey there.
Oh, hi. You're both together. Oh, it's good to hear you both.
I can't have this phone call without saying to my girl Kamala, I am proud of you. This is going to be historic.
We called to say Michelle and I couldn't be prouder to endorse you and to do everything we can to get you through this election and into the Oval Office.
Oh, my goodness. Michelle, Brock, this means so much to me. I am looking forward to doing this with the two of you, Doug and I both, and getting out there, being on the road. But most of all, I just want to tell you the words you have spoken and the friendship that you have given over all these years mean more than I can express. So thank you both. It means so much. And we're going to have some fun with this too, aren't we?
Hours following Biden's exit, the most for a single day in the 2024 campaign trail. Vice President Kamala Harris hit the ground running with the launch of her 2024 presidential campaign on Sunday.
Welcome back. The Reserve Bank's annual report on currency and finances for FY24 points out that India's digital economy, currently estimated at 1/10 of the country's GDP, is poised to constitute 1/5 of the GDP by 2026. Now, themed India's digital revolution finds that the volume of paper clearing has plummeted while that of digital transactions has soared by over 50%. Ritu Singh is standing by with the highlights as well as the findings of the RBI survey on the state of digital adoption by merchants and consumers alike. Ritu.
The phenomenon that is digital payments is all too well captured in RBI's latest report, pointing to a 52% growth in the volume of digital transactions and 12% growth in the value of these transactions in just the last decade. Take a look at the statistics. The number of transactions per capita of the population has gone up from 0.2 in FY06 to 114 as of FY24, with the average value of these transactions rising from 40,000 rupees to 16.8 lakh rupees. At the same time, the share of the volume of paper clearing has plummeted to 0.4% as of FY24 in total retail payments from nearly 82% in FY06. And not surprisingly, UPI dominated retail digital payments with a near 80% share in total volumes. That was helped by 424 million unique users. And to put that in perspective, it is roughly a third of India's population using UPI today. In value terms, of course, other modes like NEFT still dominate. But what is perhaps the most heartening takeaway from this is that digital adoption is not just concentrated in the metros, with over half of fintech consumers today coming from semi-urban and rural India, and more than a third of digital payment users from rural parts. A quick word on RBI's survey to assess the adoption of digital across both merchants and consumers, where the report finds that the awareness about digital payments is much higher when it comes to merchants when they compare it to consumers. The adoption level was lower among consumers at just 42%, having used any of the digital modes at least once in their lifetime. Similarly, about 36% of consumers were current users of any of the digital payment modes in India. There were higher users among males when compared to females, and of course, no doubt, COVID has been a big catalyst, with 60% of the merchants observing an uptick in digital payments following the pandemic, and 4 in every 10 consumers reporting that they only started using digital payments after the pandemic.
Ritu Singh, thanks a lot for all of those updates there from the RBI report. Time for a short break. Up next, we get you all the highlights from the Olympics that are underway in Paris. Stay tuned. Back on the other side.
Where else do you believe there is a strategic consideration that the government must consider, and where do you believe that the government could look at a much more commercial consideration and take the step forward as far as disinvestment is concerned, or is that not an expectation?
There are many areas where a commercial consideration could lead to privatization or disinvestment, and I'm, as my colleague Mr. Pandey has repeatedly been saying, they are not off the table at all. But it's one thing to say, this year I'm going to sell company X, and then the whole market waits for us to dump X and starts acting in anticipation, versus saying that I'm an investor. I have a portfolio of securities that I own. Some I'll continue to be majority owner in. Some I'll continue to be minority owner in. Some I'll dilute my majority stake. Some I will do nothing and collect dividends. And some I'll hold until they are repaired. And we take a pragmatic and maybe even opportunistic view of what to do with each of these. That is the new approach. But you will see disinvestments happening. They'll happen not perhaps to a declared pre-announced calendar, but you will still see them happening, is our both expectation and policy.
Welcome back, and day 4 of the Paris Olympics is all set for game, and India hopes to win big today. Our reporter Sanjay Suri joins us from Paris to give us a detailed rundown on what to expect and whom to watch out for in today's key sporting events.
Day 4 coming up, and India could be looking at another medal, and again from Manu Bhaker, this time in the company of Sarabjot Singh, and that would be in the 10-meter mixed air pistol event. They qualified for that bronze medal match on Monday, and they'll be up against the South Korean team. But not all shooters have got through. Arjun Babuta missed out so very narrowly. He took 4th place in the 10-meter air rifle finals. He started well, he was going great, and then he wobbled a bit at the end. He broke down after that, and it would have been difficult under the circumstances not to have. In the women's air rifle event, Ramila Jindal finished at 7th position. Rhythm Sangwan and Arjun Singh Chima were eliminated. But further now, again on Tuesday, Indian shooters Shreyasi Singh and Rajeshwari Kumari will be in the trap women's qualification round 1. Prithviraj Tondeman will be in the trap men's qualification round 2. Indians, one has to say, are proving somewhat better at shooting with the gun than with the good old bow and arrow. The Indian team lost to Turkey in the men's archery quarterfinals, but a number of individual competitions on Tuesday could still hold out a good deal of hope for India in archery. In the badminton, women's doubles, Ashwani Ponappa and Tanisha Krasto lost out to the Japanese. They have a final chance of staying in the contest when they play the Australians on Tuesday. The earlier Satwik Chirag double event was cancelled because of an injury to one of the players on the other side, and the two will now play Indonesia on Tuesday. In rowing, another surprise and promising event, Balraj Panwar will be there to watch. He'll be doing the single sculls quarterfinals. In equestrian, do watch out for Anush Agarwala with his horse Sir Caramello Old, India's daring adventure into dressage. It'll be a very determined Anush that we'll see. He's put everything he could and more into dressage. Later also on Tuesday, we have some very promising rounds in boxing with Preeti Pawar. She has shown her performance already. Amit Pangal, Jasmine. And then, not least, who has the nerve to watch what could be another hockey thriller, this one against Ireland. On Monday, India were trailing against Argentina until that last gasp equalizer from Harmanpreet Singh. It was also in the very last stages of that earlier match with New Zealand that India had pulled off that winning goal. This time it was the late but precious equalizer. Both times it was Harmanpreet Singh who scored. So India take on Ireland with some confidence that they can keep their game and their nerve right to the end, but with the need to up the game really. And please don't keep us hanging again until the last minute.
Sanjay Suri there from Paris, and of course all eyes on Manu Bhaker today as well. And in more news now from back home, a massive landslide has hit Kerala's Wayanad region earlier this morning. Several hundreds are feared trapped under the debris. The Kerala State Disaster Management has reported that fire forces and NDRF teams have been deployed at the impacted areas. All the rescue efforts are underway. Heavy rains have slowed down the progress. And in more news updates now, more than 10 coaches of a Howrah to Mumbai mail train derailed in Jharkhand earlier this morning after colliding with a goods train. Authorities say at least 6 persons have been injured following the collision. The Jharkhand government has confirmed that emergency response teams have been dispatched to the scene to assist with the rescue and relief efforts. And that's all we have on this edition of Power Breakfast. From me and the team that put this show together, thank you so much for watching. Bazaar Morning Call takes the action forward.
This budget has a clear direction. The kind of a strong support government had provided over the past 4 years has helped the economy. And what this budget commits, that significant support, our endeavor would be, government endeavor would be, keep continuing providing that support.
So around this 3.5% of GDP?
That is a very high level. For decades we have never been there.
Yes.
And so the idea is that there are 2 other imperatives come in. The other priority needs and fiscal consolidation. So it has to be done. There are the trinity which has to be taken care. The other 2 pieces, and who else have to do the heavy lifting? Government of India has now reached to a level which are the maximum it can sustain proportion to GDP. Second is states as a whole are spending about 2.5% of the GDP or their GSDP in capex. The quality of expenditure has to improve there in terms of infrastructure project itself.
So what would a realistic number be then to have as far as government capex going forward, if you believe that this is the most or the maximum that the government can do?
So look at this manner, that where we are at this point of time, that in terms of the fiscal deficit is 4.9 this year.
Yeah.
That's what we expect to do. Next year 4.5. And that's not the end of the fiscal consolidation. We have to keep on going less, of course, with the different metrics of a debt to GDP ratio. If we are talking about 3% plus to go to capital expenditure, there are expenditure which are on the revenue side, and there also there are fair amount of expenditure, not just on education, health, which are very, very important and will find full attention of the government, but also Government of India provides grants to others to do capital expenditure. It provides to state governments of the order of perhaps about 3 lakh crore plus. Though in our books, meaning Government of India books, there is still revenue expenditure. So keeping it at 3% plus, now it has reached to 3.4%, moving forward, if on a nominal basis that can be maintained, that will be a good achievement.
We are very close to the due date of filing income tax returns, and if you're not done with it yet, let's tell you all that you need to know at the last minute for filing your return. Income tax return documents differ as per the earning sources of the tax filer, but certain documents are mandatory for every taxpayer irrespective of the income source. So let's talk about them first. PAN and Aadhaar number are the basics, of course, that is something you can't do without. But the other ones, Form 26AS, this gives you details of all the details of the taxes paid during a financial year on any transaction. This would include both TDS and TCS deducted. Second is the Annual Information Statement or the AIS. This is more detailed version of 26AS and gives you transaction-wise details and also includes details of interest from fixed deposits and savings bank account as well. Also details of any shares sold. How do you get these two documents? Log into your account on Income Tax website and then go to the e-file tab to view Form 26AS and Services tab to get your AIS. Now for the other income, that is capital gains, you will need to pay taxes. You can get the details of the capital gains that you have earned on sale of mutual funds or shares from your fund house or your stockbroker. This will be available online in your stockbroking account. This will give you details of all the share transactions you've done in the financial year with the amount of capital gains. Similarly, details of dividend income is also important to be considered while filing ITR, and this can be taken from the broker or demat account summary. Also, while AIS gives details of all the interest income that you have earned, always best to check it with the interest certificate you receive from banks. Again, these can be found in your net banking. This would have details of interest paid on home loans as well. Important if you have one, because that can be used to claim deduction in the ITR. This would also mean it's important to keep your home loan statement with you as well at the time of filing a tax return if you have one. Of course, for salaried individuals, Form 16 is another very important document to keep. It is for salaried individuals with details of all TDS deductions done by the employer. Disclosure of all active bank accounts are mandatory in the ITR. Bank account details like your bank name, account number, IFSC and number of accounts you hold must be quoted in the income tax return. Also, one account shall be selected as primary to assist the income tax department in refunding your tax refund by electronic transfer to such account. Also, some of the donations you have made to notify.
India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBCTV18 Motilal Oswal studios in Mumbai.
Well, 25,000 touch and miss, not quite touch, but almost there and miss. That was the story yesterday. Will we be able to claw our way back up once again? Not very far away from where we left off in trade. This is, of course, a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBCTV18 Motilal Oswal studios. I'm Prashant, with me, my colleagues Nigel and Sonia. Guys, good morning.
Hi, good morning, Prashant. Good morning, Nigel.
Morning.
It's called what? Fear of heights, right? Generally, when the markets touch all-time highs and then they come back from there. This morning as well, Asian markets are not looking that great, but let's see. Ours has perpetually been a buy on dips market, so let's see how it goes.
Maybe the equity markets want to wait by to hear from the central bankers. We have the Japanese central bank that will be speaking a bit from now, and also maybe hearing in from what the Fed has to do and what they have to say with regard to the September potential rate cut. So maybe wait and watch till the central bank action gets out of the way.
A lot of action. Actually, last night was the only day, I think, this week where there was low action.
Yeah.
Because next 3 or 4 days, it's full of action. Earnings. Central banks, as you said, and of course, some economic data with the jobs number. So let's sort of rewind the clock back, tell you what happened and where we left off yesterday. So not a bad picture. Broader markets did well. The Nifty ended flat. The Bank Nifty also flattened out. Banks, of course, have been the weaker indices. Bank Nifty ended down last week as well. One of the few indices which ended the last week down. So, it's been sort of struggling a bit as compared to what the Nifty's been doing. So we came within, I think the high was 24,999 point something. Right? That was the high. So practically for all purposes, you're there. But you can't print it till you actually hit it, right? So we'll see. So that acted as a bit of a psychological resistance more than anything else. US equity markets ended flat. This is, of course, last night ahead of a wave of catalysts, as I said, which the market will look forward to. The Nasdaq was almost unchanged. The 10-year lost about 2 basis points. The bond yield, that is. Dollar index went up about 0.2%. We are at about, 104.5. Oil prices, they continue to drop. So there was another 1.5% drop. And now you are under $80 on Brent. In the last 1 month, oil prices have fallen almost 8%. So that is quite a significant fall in a short time span. Now, of course, at the margin, people are talking about what's going to happen in the Middle East, Israel, Lebanon, etc. But, you're coming into all of this with a sharp drop in oil prices. Now, the big catalyst this week, FOMC, this is on Wednesday, and the June jobs data on Friday. I think these are the two big ones from a global market perspective. And of course, you also have numbers from the remainder of the so-called Magnificent Seven companies, Microsoft, Meta, Apple, Amazon, all of them will report. And more than data and more than policy decisions, because so much of what the US market has done has been driven by these large mega cap stocks. Earnings and the direction ahead becomes important. I'll just sort of quickly come back to the levels here. So once again, for the Nifty, the supports become the averages. Because the 20-day is very far away, about 400 points away from where we left off yesterday. You look at the hourly average, and that comes in at 24,625. That's about 200 points away from where we left off yesterday, because the pickup in the rally has been so sharp, especially last Friday. Even there is a bit of a gap. But, that's the closest that you could sort of work with as a support level. So 24,625, and then the 20, which is 24,454. On the way up, broadly, the targets remain 25,000 to 25,337. These are extension levels on the upside. Bank Nifty, it faced selling pressure around basically the 61.8% retracement and the 20-day moving average almost coincided. At the high point, the Bank Nifty crossed both these levels, and then, of course, from there was a very sharp sell-off. So on the way down, the low of 50,438 becomes the important level which the Bank Nifty must hold if the up move has to sustain, even after breaks, etc. And the Nifty Bank needs to take out yesterday's high, which is 52,340. As I said, that coincides with some moving averages like the 20-day, etc. For further up move and further strength to really show up. Lots of catalysts ahead, not very much last night. Earnings remain an important picture, and I will repeat what I said yesterday. Unlike what we've had till last week, you're starting to see surprises on the upside as well. So, NTPC is an example. Colgate is another example this morning. So at least you're getting beats. These are not big stocks which will move the index one way or the other because they've got large weight. But these are important markers for their respective sectors. So it's not such a bad thing. The opening is suggesting about a 70-odd point lower start. Sonia.
Absolutely. And, I guess this fear of heights is something that you can expect, right? Because of the kind of moves that we've seen in the last many days. So this morning as well looks like it's going to be a slightly red start, because across the board, whether it is the Asian markets, a lot of Asian markets are under pressure as well. Yesterday, our own market had a bit of a, tough start to trade, tough end to trade rather. The Nifty fell about 160 points from record highs yesterday. However, if you look at the flows, right, the buying from domestic institutions continues. So there was large buying, almost 5,700 crores of buying from DIIs. However, the selling from FIs is something that is a bit disconcerting. But we're still at record highs, and there's no need to be concerned. Little bit of come-off is, I think, par for the course. Some stocks that I'm looking at, consumption stocks definitely will continue to be in focus. This morning, as Prashant was also pointing out, Colgate could be the big one to look at. 13% revenue growth, high single-digit volume growth in the toothpaste segment. So this is something that I have a close eye on. Apart from that, ACC as well, strong volume growth. 9% volume growth year on year is what ACC has seen. The numbers beat estimates on that front. So, I'm looking at that stock as well. And auto stocks will be in focus. There's so much action over the next couple of days. There are Maruti and M&M's earnings tomorrow. Of course, you have the Ola IPO that opens on Friday, and then you have the auto sales numbers as well. So we have an action-packed next couple of days in the auto sector. Lots to track, and we'll get you up to speed on all of that. But just purely for today, there are several things to watch out for. There's the US two-day Fed meeting that begins today. There are a lot of big tech earnings that come out in the US as well, whether it's Amazon, PayPal, etc. So our eyes will be on that.
Well, that's right. It continues to remain a buy on dips market. And if you look at the FIs, what they did in yesterday's trading session, they unwound some longs as well as they covered some short positions. So the short positioning went down by close to around 20,000 contracts. They remain net long, but close to around 65% of their positions on the long side. If you look at it in absolute terms, well, at the start of the series, the net long positions from the FIs were roughly around 60,000 contracts. Now, in the last few sessions, that as well has moved up. And as of current reckoning, but it's holding at around 1.5 lakh contracts. So not overtly net long. In the last series, remember, we saw numbers of closer to around 4 lakh contracts as well on the net long side. So it's at around that 1.5 par for the course, I would say. The client positioning, well, they had moved into the net short positions. And now, in fact, the short positioning is at around that 46,000 contracts. That's on the short side. And, that's the long contracts in terms of lakh contracts that we're looking at. So both of them on opposite ends of the spectrum, but not at extreme levels. So that's how they are positioned. Let's give a word on all three indices now today. Today, the Nifty Financial Services Index, that will play out the weekly expiry. Yesterday, it ended as flat as can be. Today, it could be a mover, particularly in the second half of trade. Then on the Nifty, going by the options data, the 25,050 odd mark, that seems to be a bit of a resistance zone because the 25,000 call is seeing a fair bit of open interest. And the premium out there is roughly around 50 rupees. So that's the line in the sand on the upside. On the downside, the 20 DMA, till that holds out, you'll have to say that it's pretty much a buy on dips market. And moving to the Nifty Bank, that's likely to be the big mover. It did a couple of days of underperformance last week. But yesterday, what was heartening to see was that, in fact, it made a higher low. All the other previous trading sessions, and after 7 sessions, actually, it made a higher low. So that was encouraging to see. Otherwise, you saw that it was a declining trend. Yesterday, it broke that. So getting to the levels on the Nifty Bank then, it's currently in the middle of the 50 as well as the 20 DMA. So till that 20 DMA, is holding out, till the 50 DMA is holding out, you'll have to say that still this one has the potential to move higher. So let's get the absolute numbers then up for you on the screen. Well, the Nifty Bank, the 20 DMA, we crossed it intraday yesterday. We couldn't hold on to that. So that's the resistance zone that you're looking at. The high as well yesterday closer to that level. The 50 DMA is at around the 50,800 odd mark. You don't want to break that on the downside. You actually want the Nifty Bank to move up. So I think buy on dips continues in terms of the Nifty. The Nifty Bank should be the mover, and the Nifty Financial Services Index plays out the weekly expiry.
Okay, thanks a lot, Nigel, for that. So those are all the cues that you need to watch out for as we begin a brand new day of trade. And of course, there's so much in terms of, global action as well that we're tracking for you. But first up, let's get you some money market views as we begin the day. On the rupee front, Abhishek Goenka of India Forex and Asset Management says that the focus this week will be on the Fed policy. Though the US Central Bank is expected to keep the rates unchanged, the Fed is likely to prepare the market for a September rate cut. If that happens, the market may perhaps be emboldened to price in more aggressive cuts, and this could cause the US rates to rally and the dollar to weaken. He expects the Indian rupee to underperform amidst broad dollar weakness as the RBI may look to correct overvaluation. Abhishek sees the rupee trade in an 82.90 to 83.90 range over the very medium term.
Okay, Vishal Goenka of IndiaBonds.com weighs in on the bond market. He says that bonds rallied last week on the back of technical factors such as global index inclusion, inflows and proposed LCR changes for banks, which may further decrease demand for government securities. This week will give further cues on world interest rates with policy decisions due from the US Fed and Bank of Japan, followed by Bank of England. On Thursday, he expects the RBI to hold rates unchanged in its policy next week, with the 10-year GSEC expected to trade between 6.9 to 6.95%.
Well, we've got plenty of stocks to track for you, but let's highlight the top 10 that we're looking at. We'll get into further detail in just a bit. For the time being, we run you through the list. We're looking at ACC, Colgate, KEI Industries, Data Patterns, as well as Jindal SAW. They'll all be reacting to positive news flow, and we are split down the middle. 5 in the green, 5 in the red. You have HPCL, Kalpataru, Idea Forge. You have Maharashtra Seamless, as well as PNB Housing Finance. They'll be reacting to negative news flow. Okay, all right. Well, time to slip into a short break, actually. On the other side, we'll get chatting with Neeraj Seth of BlackRock, who will be joining us to analyze all the global cues that are stacked up. Stay with us.
relief funds, charitable organizations that will be eligible for deduction under ATG. So keep that handy as well. Always good to file your return in time, but if you're late, this basic checklist could help you.
Welcome back. Neeraj Seth is CIO and head of APAC Fundamental Fixed Income at BlackRock. He's joining us now. Neeraj, great to have you with us here on the program. Good to see you. Prashant this side. We're talking to you, I think, in the absolutely the right week, right? Lots of central bank decisions with potential, and many of them live in that sense. Which is the most important cue to your mind? Let's start with the Bank of Japan in that sense. Any expectations, Neeraj?
Sure. So I think all central bank meetings are critical. I would say, in fact, FOMC is the core, but certainly Bank of Japan is live, and two key expectations there. The first, obviously, in terms of the shift in the bond buying program or the quantitative easing that they have been running for a long time. So do expect to see a shift there in the bond buying program. And there is a possibility that you do get a rate hike, although I would argue that that's still a 50-50 in terms of BOJ moving with regards to policy normalization here. And market is somewhat divided on that. So certainly it's a live meeting. The inflation data is supportive, but Bank of Japan, as we have seen over the last 12 months, has been very, very gradual in terms of their monetary policy normalization. So I think you can actually call it a done deal for BOJ to hike rates.
Okay,
for the Fed, Neeraj, as you said, that's a crucial meet. Do you think they will give a clear indication that conditions are now falling in place to start cutting rates?
I would put a reasonable chance that the Fed actually paves the path for transitioning towards the easing cycle starting as early as September. Now, to some extent, it always comes down to obviously the level of agreement within the FOMC and specifically the voting members in terms of where they get to. But the key here is I do expect the Fed to have a more balanced tone, first of all, in terms of the dual objective of price stability and unemployment or full employment. So I do think the labor market will come back in focus, which has been the case in the last couple of meetings, and a reasonable chance that they actually do open the door, given what we have seen on the inflation data, which is 2.6 on the core PCE, 3% on the CPI, 3.3 on the core CPI, which has been drifting lower, and the unemployment, which has not touched 4.1 and slightly, in fact, inching higher. So all in all, I think the balance is shifting towards the normalization or the easing cycle to begin in September. So I do expect to see an indication from the Fed while keeping the policy rates unchanged this week.
Okay, so you're saying that the policy rates will remain unchanged this week, but there could be an indication of the easing of the rate cutting cycle from the September policy. What does all of this mean for a market like India?
So the key here is broadly, let's start with what it means for the rest of the world. Obviously, if you think about the emerging markets, most of the countries have been in somewhat of a bind to not start cutting rates ahead of Fed. Now, specifically for India, I do in fact think that RBI is less constrained by the Fed, but the Fed starting on the easing cycle does open the window for RBI to look more at the domestic conditions and not get constrained by the global DM policy. I don't expect RBI to cut in the near term. It still might be a few months away, but it certainly eases up the window for RBI to look at the other side in terms of the easing cycle. So all in all, I think it actually starts creating room for the RBI to look at the easing, as I said.
Okay, hi Neeraj, good morning. Nigel on this side, and good to see you win. Well, the big event that passed us in the week gone by was the budget 2024. And there was some angst with regard to taxation on capital gains going up, particularly on equities. How did you read it, and what about the fiscal prudence that the FM stuck to?
Sure. So first of all, I do believe overall it was a good budget, and it did strike a balance between inclusive growth, infrastructure build, and the fiscal prudence and the path of fiscal consolidation. Now, there's no perfect budget. There always will be some parts where something got to give. And the increase in the long-term capital gains tax was somewhat negative, but I don't think from a long-term perspective, it changes the India story or the attractiveness of Indian risk assets. So I was not too worried about it, but you could always see an immediate knee-jerk reaction from the market. But broadly, I do believe the budget was actually good.
I mean, it was actually exactly just a knee-jerk reaction. It was exactly that, Neeraj, as I think we all saw, right? It didn't even last maybe an hour, 2 hours or so, and the market moved right back up. A great conversation, Neeraj. Hope to see you more often here on the channel. Thank you very much for joining us this morning for a quick sort of snapshot view on the most important things. We'll take a break. We are back with our top stocks with our research team on the other side. Stay tuned.
Markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Welcome back to Bazaar Morning Call. Well, our research team is standing by with the list of top 10 stocks as we begin a brand new day of trade. So let's get straight to it. Nigel, you're watching out for ACC. How are the numbers?
Well, that's right. ACC's numbers actually were pretty much in line with what we were working with. And I'm going with green out there because on the top line, there was a bit of a beat owing to higher volumes. So the volumes came in at in excess of around 10 million tons. We were working with around 9.7 million tons. We'll have to find out further about, how much of it was solely ACC. Or was it something to do with, the deal they have with Sanghi unit or maybe the Asian Concrete unit as well? But short point is that they beat out there. EBITDA, well, that was pattern line. The EBITDA margins, though, came in a little bit lower. How do they manage this? Because realizations were rather weak, which were down by 3% sequentially. Employee cost was lower, power and fuel cost was lower, and freight and forwarding cost as well was lower. The profit number, though, that came in lower by close to 20%, higher depreciation, higher finance costs, and lower other income. Since the numbers are in line, going with green on that name.
Okay, going with green on ACC, a 9% volume growth there. But Sonal is with us to talk about HPCL and how that one looked. Sonal, over to you.
Good morning, Sonia. It was a weak set, much lower than what the poll was suggesting. Revenues came in flat at 1.14 lakh crore rupees on a quarter-on-quarter basis. EBITDA, though, halved on a quarter-on-quarter basis, leading to margins of 1.9% versus 4.2%, and profits were down 87% to come in at 356 crore rupees. The poll suggested anywhere to the tune of 1,000 to 1,200 crore rupees. It was led by the refining segment. The reported GRMs came in lower at $5 per barrel, not so much lower than what the poll was suggesting, but they did take a hit of LPG under recovery, and that is the reason there was a negative buffer of 2,440 crore rupees. The company did see the impact of Russian crude oil discounting. That's why they reported GRMs even lower than BPCL. Jefferies has an underperform with a target price of 315. JP Morgan has a neutral with a target price of 335. But Citi is very bullish on the stock. However, going with red on the weakness that we saw this quarter.
All right, Sonal, thanks very much for that. I think there was I think UBS upgraded their rating on oil marketing companies, as Nimesh was telling us yesterday. But that's a space which will continue to be active, as Sonal said. Colgate, perhaps, is also something which would stand out today with the strong earnings. Mangalam is here with details. Mangalam, morning.
Very strong earnings from Colgate this time around. It could well be the result of the season for the FMCG company. A big beat across all parameters, high single-digit volume growth in the toothpaste business, and continued pickup in rural markets for the second consecutive quarter. So if you just take a look at the numbers, revenue just shy of 1,500 crores. The street was working with a number of 1,430 crores. EBITDA above 500 crores. The street was working with a number of 470 crores. Margins at 34%. And the net profit also came in much higher, 364 crores versus expectations of 332 crores as well. And even if you look at it year on year, 13% revenue growth, 21% EBITDA growth, and 33% net profit growth is impressive, whichever way you look at it. High single-digit volume growth in toothpaste compares to street expectations of 2 to 3%. Gross margins improved, and this despite the company not scaling back on ad spend. So ad spends increased by about 10% as well. See some green on the stock despite it having run up 70% over the last 12 months.
Okay, all right, Mangalam, thanks a lot for that. Well, let's go to Upasana, who's here to tell us about KEI Industries. Upasana?
Good morning. Well, it was a good Q1 for KEI Industries. The revenue saw an uptick of 16% on a YoY basis. Cables and wires saw good growth while stainless steel and EPC projects lagged. Now, the main revenue growth came in from cables and wire division, where revenue was up about 17% and EBITDA margins expanded by 220 basis points at 11%. Gross margins stood at 26.3% versus 25.7% on a YoY basis, and EBITDA margins also expanded sharply from 9.9% to 10.4%. Company's pending order stands at 3,590 crores. And mind you, earlier company had given their FY25 guidance in which revenue they had said would range between 15 to 16%, which is pretty much in line with Q1. And EBITDA margins also they had guided would range between 10.5 to 11%, which is again nearly in line with the Q1 numbers. So all in all, good set of numbers coming in from KEI Industries in its Q1 FY25.
Okay, good quarter from KEI Industries. Do note we will be connecting with the management of KEI Industries at 9:30 a.m. later today, so do stay tuned in for that. But there are plenty of other stocks to watch out for. Kalpataru Projects is one of them. Vivek is here to tell us more about that. Vivek, how did it look?
Well, good morning. Kalpataru Projects are in line with its peer set, where both KEC International as well as L&T call out the fact that there was labor unavailability due to the elections. The top line growth has been quite muted, execution has been muted. Now, along with that, Kalpataru also suffered from an inferior revenue mix and also weakness as far as one particular segment, that is the water segment, was concerned. Now, looking at the numbers, revenue is higher by 8.2%. This is lower than what the company anticipates for the full year. EBITDA to down almost 1%, margins 80 basis points lower, and profitability lower quite sharply at 20% on a year-on-year basis. The company said that the water business revenue was impacted due to lower collections and also shortage of manpower, and the company said margins were impacted on account of the project mix variation. What bodes well for the company, the order inflow as well as the order book remains quite strong. Order inflows of over 7,000 crore in FY25 so far, order book at 57,195 crore, and the company is L1 in orders worth almost 5,000 crores. So order book is strong, but execution this quarter has been quite muted.
All right, Vivek, thank you very much for that. Well, more numbers. Upasana has got that list. Upasana, morning.
Well, first up, let me start with data patterns. The company reported a steady set of results. The revenue saw an uptick of 16% on a YoY basis. EBITDA stood at 37 crores versus 28 crores with an uptick of 34% on a YoY basis. And company reported a strong EBITDA margin of 35.7% versus 31% on a YoY basis. PAT stood at 33 crores with an uptick of 27%, which was mainly led by higher other income. The company's won orders worth 38 crore in Q1 FY25, which is lowest in last 12 quarters, taking the total order book to 1,020 crores. Next up is IdeaForge. The company reported a weak set of numbers. The revenue saw a downtick of 11% on a YoY basis. Gross margins stood at 33% versus 56% on a YoY basis, and margins stood at just about 4% versus 29% on a YoY basis. PAT also saw a degrowth of 90% and stood at 2 crores. Order book stood at just about 4.2 crores versus 125 crores on a sequential basis, which is lowest in last 4 quarters. So weak order book and higher cost of materials has led to such a low growth in IdeaForge Technologies.
Thanks a lot for that, Upasana. Well, I'm focusing on two more stocks, one in the green, one in the red. Jindal Saw, numbers look very good, top line growth of close to around 12%, that's beautiful. But the margin picture for the third straight quarter, it's holding at around 17%. So it seems that that margin band has readjusted to the late teens instead of the early teens. So that's good news as well. The profit number was up by close to around 70%. The consolidated debt, yes, it moved up on a sequential basis, but that's more to do with working capital getting stretched. The long-term debt, well, that came down, in fact, on a sequential basis. So wouldn't read too much of a negative in that. The positive as well is that the current order book continues to swell up. Now it's holding at around $1.65 billion, which is giving you visibility for the next 3 to around 4 quarters. So thumbs up on that one. Red, though, on Maharashtra Seamless, it'll have to be a thumbs down there because revenue was degrown by close to around 6%. The EBITDA took a hard knock, down more than 45%, close to around 50% actually. And margins coming in at a multi-quarter low at only around 11%. The EBITDA per ton is something that we look at, and the seamless business that normally drives the EBITDA, well, that came in at less than 10,000 rupees per ton. The ERW, well, that was more or less stable on a year-to-year basis. Two positives, though. One is that the order book is still healthy, and they have cash of close to around 2,000 crores, which effectively is nearly 25% of the current market cap. So the stock starts off in the red, but later on, we'll connect with the management of Maharashtra Seamless later on the show at around 9:40 a.m. later today. So we'll try to understand what went wrong in the past quarter.
Okay, well, that is coming up at 9:40, so do stay tuned in for that. But PNB Housing is the other one that we're focusing on this morning. Vivek is here to give us the fine print. Vivek, how did it look?
Well, after a whole slew of earnings, one company that we need to focus on the back of a likely block deal today. We accessed the term sheet last evening, and we understand that the Carlyle Group, which holds stake in PNB Housing under the name of Quality Investment Holdings, is looking to sell up to 6.4% stake via a block deal. We understand that the total size of the offer is a little over 1,250 crores. The floor price is at almost a significant discount at 755 rupees a share. There is a 90-day lock-in on further sale of shares by, and the book-running lead managers are Motilal Oswal as well as IIFL Securities. Remember, the Carlyle Group holds almost 32.68% stake in the company, so they're looking to pair around 6.4% stake in today's block deal.
Okay, thanks a lot for that. Here's a quick recap of our top stocks with positive news flow. There's ACC, Colgate-Palmolive, KEI Industries, Data Patterns, and Jindal Saw. While stocks with negative news flow, there's HPCL, Kalpataru Projects, Idea Forge Tech, Maharashtra Seamless, and PNB Housing Finance. Let's take a quick commercial break. On the other side of the break, Siddharth Khemka, the head of retail research at Motilal Oswal Financial Services, will be with us for some fundamental stock analysis. Stay tuned.
Over the last 25 years, CNBCTV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
1,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC TV18, embarking on a quarter century of excellence.
Kamala.
Hello. Hi.
Hey there.
Oh, hi, you're both together. Oh, it's good to hear you both.
I can't have this phone call without saying to my girl Kamala, I am proud of you. This is going to be historic.
We called to say Michelle and I couldn't be prouder to endorse you and to do everything we can to get you through this election and into the Oval Office.
Oh my goodness. Michelle, Barack, this means so much to me. I'm looking forward to doing this with the two of you, Doug and I both, and getting out there, being on the road. But most of all, I just want to tell you the words you have spoken and the friendship that you have given over all these years mean more than I can express. So thank you both. It means so much. And we're going to have some fun with this too, aren't we?
Welcome back. Well, we have Sneha Seth, who's the derivatives research analyst at Angel One, who joins us now. Sneha, hi, good morning and good to have you on the show. You know, this market has been a bit confusing, right? So while the headline index is hitting new highs, now there's an expectation of consolidation. Your thoughts and what are the stocks that you're looking at today?
Very good morning, Sonia. If you look at market, yes, yesterday's profit taking from the higher levels with especially writing in call options and unwinding in put options. We have also seen unwinding in 24,600, 700 strikes. So that clearly indicates that we may see some further profit taking from current levels. So on the higher side, 25,000 should be acting as a very strong hurdle. On the lower side, 24,500, 600 should be acting as a support. So individual counters, however, they are showing decent risk reward ratio at this point in time. So one can focus there. So in individual counters, the first counter which I like is L&T. This counter was up nearly 2.5%. It has given a breakout above the resistance zone place around 3,700. So I believe we can see this counter moving towards 3,900. So one can keep a strict stop loss around 3,710. Apart from this, Jubilant for this counter looks good. This counter again looks poised for an up move beyond the resistance zone of 590, 595 zone. So I would recommend buying this counter with a strict stop loss of 584 and the target expected will be around 620.
Okay, thanks a lot for that. So those are a couple of ideas coming in from Angel One. But moving on, the RBI has said that the coming new issue of 14-year and 30-year government bonds won't be issued under the FAR route or the fully accessible route, which means foreigners can't buy unlimited quantities of these bonds. What does this really mean? Lata is here with her editor's take. Lata, over to you.
Yes, both government and RBI have moved in and said that any future issuance of 14-year and 30-year bonds will not be classified under the fully accessible route. Now, when was this fully accessible route born? It was born in FY20 with the aim that one day Indian bonds will be included in the index. And that's what happened a few months back. India got included in the JP Morgan index. One of the rules of the index is that a large number of bonds should be available in a particular category to be included in the index. There should never be a liquidity crunch in those bonds. Now, with this restriction coming in, these bonds will come into the non-FAR category. In the non-FAR category, it was before, the index inclusion. All bonds, FIs are eligible only to buy up to 6%. So now in the new issuances, it will be 6%. And in all the non-FAR bonds, the FIs can buy up to 6%. What is the impact? Or first, what is the reason? The big reason for this is Reserve Bank and Government of India have always been uncomfortable to allow too much of debt money. They have no problem if unlimited amount of equity flows in, but India being indebted, especially the sovereign being indebted to foreign entities, is foreign to Indian idea. The immediate fear, market fear, is also that the tail will wag the dog. At some points in time, all emerging market countries' debt is dumped, and we could be people in India could get hurt, even corporates, because when government bonds fall, even CPs and CDs tend to fall. So there was that fear, and perhaps all that has led to this restriction. Now, there is a crib among some people I spoke to that, this means there is policy flip-flop, policy uncertainty. But no dealer expects actual bond prices to be hurt. One, because, when the index inclusion happened, $400 billion worth of Indian bonds became eligible for index buying. But what is the total buying that will come even when the index inclusion is fully 10%? Just about 25 or 30 billion. So, fears are exaggerated. As well, the FIs normally prefer shorter term bonds, like, below 5 year. So even the normal under 6% route, they were not really buying the longer term. If you looked at the 14-year and the 30-year itself, in 30-year, they are hardly there. About 500 million they have bought. In the 14-year, they've bought over 6%. But it's really not going to impact actual prices. But yeah, sentiment could be mauled.
Okay, all right. Thanks a lot for that, Lata. Well, we're getting some pre-open rates that are coming in as well, and a few stocks that are calling for attention. One of them is ITD Cementation. That's up more than 5%. Jindal Saw as well was higher. And the big stock of the day is really Colgate. That is up, I think, close to 7% in pre-open. And also the other one is HPCL. We'll get some analysis going. That's down close to 10% in pre-open rates. But let's focus on Zen Technologies. Q1 was a decent one. The revenues grew by more than 90% and also had a 60% growth in profitability. The gross margins contracted a little bit and new order wins was a little bit subdued. Mr. Ashok Atluri, the chairman and MD of the company, joins us on the show. Hi, Mr. Atluri. Good morning and always good to have you on the show. Give us a couple of basic details first. You had guided that in this year, the revenues will double in comparison to last year. You look to be on track for that. Do you want to stick to that guidance or do you want to up it? And also exports, I think you guided for close around 300 crores of revenues from exports. In Q1, it was absent. You want to revise that number downwards?
Yeah, so we have assured that we would do about 900 crores. So we expect to do about 900 crores. And that guidance remains, Nigel. And with respect to the exports, so again, the export target absolutely remains that it will be 300 crores. And we, again, it's not in a perfect proportions that the domestic and exports happen every quarter. But over the year, this is what was, and we still stand by that. So those are two things, yeah.
Mr. Atluri, morning. I mean, last time we spoke, you said it's an unprecedented positive environment for the business. It's been an unprecedented positive environment for your stock as well, which is zoomed. Now, you also told us that you're looking for acquisition opportunities at that point with some IP. Are you closer now than you were a month, 2 months back?
Yeah, I mean, we are talking to some companies, but we haven't really any near to closing the deal. But yeah, we have been talking to both Indian and foreign companies. But maybe in the next couple of quarters, we should be able to hear something about it.
Next 2 quarters, you'll
close quarters,
something.
Yeah, we may be closer to announcing something. Yeah, so
okay.
At this point in time, there's nothing. Yeah.
And what kind of size, etc.? I mean, broadly, roughly.
I mean, it will depend on the kind of, but we are little flexible between 100 to 500 crores kind of thing. But yeah, we are flexible about it.
Okay, Mr. Atluri, good morning. I wanted to talk a little bit about your order book and the order wins. The order book currently stands at 1160 crores, but I noticed that your new order wins stood at just about 11 crores. Can you tell us a little bit about that? Are you seeing slower movement in terms of orders? And what is the kind of visibility that you have? Any reason why there's no significant win in this quarter?
So we have indicated almost in a couple of quarters back that all our orders will be expected in the fourth quarter, but some may start trickling in on the third quarter. So this is a typical order cycle that we have seen in over many decades. Only last year there was an exception because there was some emergency procurement was done. But the regular procurement typically is heavily weighted towards the last quarter.
Okay.
So any numbers that you want to give us in terms of, any fresh orders on the export side, on the domestic side? 70% of your domestic order book comes from the training simulators space, and you also have anti-drones, of course. But going forward, where do you see a large chunk of your orders coming from?
So, we will continue to get the orders from these two segments. I think maybe it will be a little more in favorable of anti-drone systems, because we are seeing that lot of traction that product has now, a lot of demand, not only domestic but exports also. So yes, we expect the orders to come in during the third and fourth quarter, and they will significantly, again, we are saying that we should be able to achieve a CAGR of 50% next year onwards. So we still feel confident that may be reached by us.
Okay, all right. You want to comment on the margins, Mr. Atluri? 40% margins on an average for the year. Should we stick to that?
So we have been saying that it will be around 35 to 37% EBITDA and around 25% PAT, and we would like to stick to that.
Okay, all right. Mr. Atluri, we here at CNBC TV18 had covered the stock and explained it to the viewers when the market capitalization was less than 1,000 crores. Currently, your market capitalization is around 14,000 crores. We have just explained it to our viewers. The question I'm asking you is, now you could potentially raise 1,000 crores via QIP route. And that's something that the markets are waiting for. When does that take place? Is it dependent on that inorganic acquisition? Or do you think any which ways you'll go ahead, say in this quarter or so? That's the second quarter.
So we have an enabling provision we have passed in with the shareholders, and that is available to us. And depending on the internal decisions and the discussions, we will raise the money so I think both may happen simultaneously or little consequentially, but yeah, we have the power to raise the money. There's no doubt about that, and if required, we will raise it.
So a couple of quarters to hear about that inorganic growth, and maybe in the next couple of quarters, we'll hear about this QIP as well. In calendar year 2024, both will be folded up, right?
Yeah, so I wouldn't really mention the dates like that, but yeah, we would be moving in that direction, absolutely.
Appreciate you joining in, Mr. Atluri. 900 crores of revenues for this year, margins at around 35 to around 37%. Exports, you're sticking to that 300 crores and sounding extremely confident about business. Look forward to chatting up with you rather soon. Just take a look at that. 40% in the last 1 year or so, but I think in the last 6 years, the stock is up more than 10 times. That's the big move that we've seen. Well, Sudarshan Sukhani is back with us for the 9:10 call. Sudarshan, please go ahead.
Consider buying Balkrishna Industries with a stop under 3,200.
Got it. And Mitesh, what about you?
I'll go with the buy on Bandhan Bank on a mild decline, add here for targets of 232.
Okay, a couple of stocks that are, in focus this morning. Of course, Colgate is the one that I want to look at, given the kind of, very strong numbers that the company came out with. A lot of positive brokerage reports, so Colgate will be up for you on your screen. And then you also have ACC. Despite a decent set of numbers in pre-opening, the stock is down in trade. So lots of stocks in focus. Nimesh is here to give us a standout brokerage report of the day. Nimesh, over to you.
Hi, morning, Sonia. So today's standout is on MCX. Well, the stock did react to earnings yesterday. UBS has gone ahead and raised the target price on MCX further to 5,000 versus the earlier target price of 4,300. Now, they believe that while quarter one was good, quarter two is going to be even more stronger. So on back of that, they've raised the earnings estimate for FY25 and FY26 by 10% and 16% respectively. They believe that the operating leverage benefit with rising volumes is still not priced in the market, and further new product launches, including the weekly expiries, can potentially add further in terms of earnings. So they're justifying the high multiples given the strong growth outlook as well as supportive regulatory environment. So on back of this, a big upgrade on UBA on MCX now. Target price raised to 5,000 from 4,300, and they've raised the earnings as well by 10 to 16%.
Okay, all right. Nimesh, thanks very much for that. Let's look at HPCL as well. Once again, Sonal is here with details. Sonal.
Well, that's right. HPCL reported a weak set of numbers. It was a top-down miss that we saw this time. Revenues were flat at 1.14 lakh crore rupees. EBITDA almost half to come at 2,110 crore rupees. Margins at 1.9%, which is much lower than what the street was working with at around 3%. Profits were down 87.5% as well. The reported GRMs came in at $5 per barrel versus an estimate of $5.50 per barrel. This was led by the narrowing Russian crude oil discounts. That is what has impacted HPCL, and they have the highest exposure to the marketing segment as well. They reported GRMs which were lower than BPCL as well. The company has a negative buffer of 2,440 crore rupees. This is because of the LPG subsidy under recoveries, and that is something which impacted BPCL as well. Brokerages, they are divided but largely on the underperform side. Jefferies, for instance, has an underperform with target price of 315. JP Morgan has a neutral with target price of 335, and Citi has a buy with a target price of 420 on the stock. But yes, overall it was missed this time around.
Okay, and Colgate really will be looked at very closely. Mangalam is here to tell us more about that. Mangalam, people can't be brushing their teeth a lot more than they already are. So more people brushing their teeth perhaps, right?
You'll be surprised at how little people brush their teeth as against what they're supposed to, especially in, you know, some part of the urban India and a large part of the rural India as well. And that's exactly what's working for the company. Their brush twice daily campaign. So 13% revenue growth, 21% EBITDA growth and 33% net profit growth is what the company has posted. High single-digit volume growth in toothpaste business as well. We have some brokerage notes coming in. Jefferies has upgraded their EPS by 6%, and they are saying that this is the third straight quarter of EPS upgrades. They've retained their buy and revised the target price to around 35.70 as well. ICICI Securities, they estimate the volume growth at 8%, price mix growth at 5% as well. They're only saying a risk is that market share losses to naturals because of the price hikes that the company is taking in their toothpaste could be a bit of a risk. At 50 times, they retain hold rating. And Bank of America, they already have an underperform rating on the stock, but they've upped their target from 26.60 to 31.75. They've ascribed a 20% premium to the average forward multiple over the last 5 years as well, but they still say that valuations factor in medium-term upsides. But for now, these numbers are good. Let's see how the stock reacts today.
All right, lots to track. Mangalam, thank you very much for that. So that's Colgate on the upside, HPCL on the downside. And I think we'll have MCX come up as well in the pre-open session where we can take a look at it. Maybe just a few other names. That's Colgate, MCX and HP. By the way, the Nifty is absolutely flat. At the end of the pre-open session, nothing at all. So it's a very, very quiet indicative opening on the Nifty. So 24,839, a 3-point change is what the pre-open has left us with. And I think something similar out there in the Sensex as well. Lots of follow-through moves maybe from yesterday because the broader market was vibrant. 1% gains on the mid-cap and small-cap indices yesterday. So we'll keep an eye out on that as well. This morning, at least the indicative opening on those indices is slightly better than what large caps are going to start the day at. So just a few seconds now, Sonia.
Just a few seconds, but I'm still thinking about what Mangalam said, where not all Indians are brushing their teeth twice a day. So only 1/5 Indians brush their teeth twice a day. I mean, that is like either that's a marketing gimmick on Colgate's front or...
That's a big That's a big damn. You know? All right, that's the market open. The first rate starting to come through. We've got what 20. It's slightly red, sort of flipping into the negative. 9-10 points, 12 points, 24,818. Flattish start actually. 60 points down on the Sensex, 81,285, and this is basically what you have in terms of the opening rates. So very, very quiet. Now the Bank Nifty is down about 100 points, about 0.25% lower that is. And I think the mid and small cap indices perhaps better because you can see the market breadth in terms of how stocks are starting out. And that is in the positive, 2:1 in favor of advances. Small cap index is up about a quarter, mid cap index is more flat. So, I think we'll have to go straight to stocks because as far as indices go, not very much.
Absolutely. So, the top mover right now is NTPC. NTPC actually reported a good set of numbers and a lot of brokerages have raised their target price on the stock. Jefferies has raised it to 485, which is a big upside to the current market price. So that's your top gainer on the index. Apart from that, you have Power Grid, Asian Paints. M&M comes out with numbers tomorrow. Ahead of that, the stock is up in the green. So keep an eye out there. Dr. Reddy's, Titan and Adani Ports are a couple of other stocks. Stocks in the news, Colgate, let's take a look at that one. Strong earnings, revenue growth of 13%, high single-digit volume growth in the toothpaste segment. That's really, off the charts right now. So 3% higher on Colgate. ACC, let's look at that one. The volume growth was not bad, 9%, but the stock in pre-opening was seeing a little bit of pressure. In terms of result reactions, I want to look at data patterns because the earnings were very strong. The EBITDA growth was 34%. The margins have improved quite a bit. This stock has gained quite a bit over the last many weeks and months, so maybe some profit taking right now. And a couple of other names, Maruti, M&M will be reporting their earnings tomorrow. So ahead of that, these two stocks will definitely be in focus. There's a large trade that has taken place with PNB Housing as was expected. So keep an eye out on that. PNB Housing now down about 1.5%. And on the upside, ITD Cementation has some positive business updates going for itself. So ITD Cementation is up almost about 1.5%.
Well, that's right, Sonia. Let's highlight a few more movers. Pfizer, the first quarter's numbers were quite good. Revenues are up only 6%, but EBITDA was up by close to around 60%. So that one, in fact, the margins are coming in excess of around 31%. That explains why that's running away. Idea Foods, that's casualty of the morning. The revenues came in lower by 11%. The margins as well have contracted to just around 4%. Remember, this one had listed with solid gains. For the time being, the one's getting clobbered. It's down close to around 10%. So big downtick is what we're seeing on that one. Zentech, we just had the promoter joining us on the show. And in fact, sounding very, very optimistic about the year. They're saying they're going to be doubling their revenues at around 900 crores, sticking to the export guidance as well of around 300 crores. And also mentioning that there could be at QIP an inorganic growth in the offing. So it's up close to around 4%. A few more notable movers. You have Maharashtra Seamless. Numbers are very disappointing. In the next 20 minutes, we'll know why. The stock is down close to around 5%. And Jindal Saw, well, that should have opened up well in the green. Margins holding at around 17%. Solid order inflow as well. That's something that the street likes. That one as well. Flying away as we speak. Another big mover actually is, Asahi Songwon. That's up close to around 15%. Volumes are only around 200,000 odd on that one. So maybe lower volumes. But that one, in fact, is up big time as we speak. Prashant.
We were talking about NTPC, so keep an eye out on that. 2.25% higher. It's a solid start. And maybe the other it's the entire ancillary space as well, right? There is the utilities, there are equipment companies, transformer companies, financiers. NTPC is the flag bearer, the torch bearer for the sector. I mean, NTPC says, well, they want to add capacities in the future. It needs to be financed, equipment needs to be supplied. Of course, prices and valuations will matter, but for now the stock is higher. I'm looking at REC. It's kind of flat right now. Look at Power Grid. Power Grid is up about 1.5%. And maybe some of the other big movers in the transformer, smaller companies really. These are the big ones. I mean, names like the financing side, and of course the utilities like NTPC and Power Grid as well. In the broader market, Colgate is starting to see some attraction once again. It's up 4%. Suzlon is up 3.5%. Crompton, I think we mentioned it. It's up 5%. ITD we mentioned. Paytm is starting about 3% in the green. CESC, we had that interview with our colleague Shireen interviewed Sanjeev Goenka. 4% higher on CESC. Stocks at about 174. And the other one, which is Philips Carbon Black, again a Sanjeev Goenka Group company, 3.5% higher. Those are the two companies, and very aggressive guidance from Mr. Goenka to us yesterday in that interview for both these businesses, especially for Philips Carbon Black. Novama had a big day yesterday on the wealth management side. It's up another 3% or so. 6199 is where Novama is now trading at. And there was 361 as well, which did very well in terms of trade. And we'll see if that is true right now as well. I think we'll take it to our next company, and we'll come back to the market in just a little later. We'll have Pankaj Tibrewal joining us, but we'll talk about KEI Industries for now. So first quarter was a good quarter for the company. They've seen improvement in revenues and margins. Cable and wire segment also saw healthy growth, but stainless steel and EPC projects lagged a bit. Mr. Anil Gupta is Chairman and Managing Director at KEI Industries. He's with us right now. Mr. Gupta, good morning, sir. Thank you very much for joining us. I want to just start with what's the situation on the input side, Mr. Gupta? What has been happening? Because you've been telling us our last two interactions that you've been revising your price lists every 10-15 days because of what's happening on the copper side. Could you tell us what is the latest now?
Yeah, good morning, Prashant. In fact, the latest position is that copper prices has come down substantially, and a lot of price increase were done in April, May, and June. And now there is a bit of downward trend, and so we are revising the prices lower. So as I have been saying in last several years of my interactions with you, that we are always maintaining our price level and with respect to the input cost, and also keeping the inventories of inputs, like especially the metals like copper and aluminium, linked to our order booking. So we have never had any issue with the, increase or decrease in the prices of metals.
Okay. Okay, all right. Hi, Mr. Gupta. Good morning and always good to see you. And the numbers look quite good, actually. And if I compare it with your peer group, you seem to have grown faster than what the peer group has grown. So if you could tell us, according to your analysis, do you think you have gained some market share? And also earlier, you were guiding for around mid-teens growth in this year. Sticking to that, you want to up it?
I stick to the growth projection, which I had given earlier, around 16 to 17% in the whole year. This quarter, we have grown by around 18%, 17%, and 16%. But in volume terms, we have grown by 18%. And truly speaking, we had up the production by 25%, but a lot of material could not be dispatched due to, quarter end issues and logistics, especially the exports. That is the reason that we still have given lower sales volume and lower sales growth.
Okay, so you produced more, but some part of that, because of logistic constraints, you couldn't push it out. So my question to you is, have you gained market share? If I look at the cables and wires business of your peer group, you have done a little bit better. So according to your analysis, you think you gained market share?
We have not analyzed that aspect, and I don't have any comments on that.
Okay. Sir, good morning and thanks for joining in. You had spoken earlier that your long-term goal is to reach 20% of export sales. How are the export markets doing right now? What kind of growth are you looking at in the near term?
This year, export markets are doing very well, and we expect to grow our exports this year by around 30 to 35% over last year in the overall scenario. Maybe in some quarter it may be less, or in some quarter it may be more. And as soon as our new capacities comes on board, we will push towards more exports from our new plants.
Okay, so you're saying 30 to 35% growth in the export markets for FY25 is what you're penciling in, and as soon as your new plants kick in, then more growth will go in towards the exports. Got that. So your export revenue share, what is it at now, and by when do you think you can get it to say 18 to 20%?
This quarter we achieved around 11%. This year our goal is to achieve around 15% of our sales coming from exports overall in the full year, and maybe FY26 we could reach to 18 to 20% level.
Exports, earlier you were guiding for higher growth. Now you're talking about 35% growth. I think earlier you were guiding for 45 to 50%. Not that 35% is not great, but I think exports you were talking about 45 to 50% growth, right, on a year-on-year basis?
It may happen. I mean, I'm a bit conservative because we still have little capacity constraints in our some of the products, especially the HT cables. So that is why I am giving little lesser, projection. But there is no dearth of orders. There are orders. Okay. It depends on what we can produce.
So as of now, you're saying exports will grow by 35%. We got that. Right. Earlier you were guiding for a higher number. You're being conservative. Overall, though, the growth will be 16, 17%. So as a consolidated entity, it won't hurt you too much. What about margins? Margins, I think you were guiding for around 11%. It's a little bit shy of that. What's the guidance for a year on an average?
According to our calculation, the EBITDA, what we the way we calculate it is 11.28%. So the EBITDA is grown by around 0.8% compared to last year, same period. And maybe if you remove the exchange fluctuation and interest income, you may say that it is 10.5%. But the way we calculate it, it has grown, and we hope to grow it by a little bit more in the coming months.
So, I mean, okay. So, by around 11% for 25 is what you'd said. And I'm assuming that you stick to that, right?
Yes.
Okay.
Yes.
You briefly alluded to how you have some capacity constraints still. So, could you give us an idea on Sanand and some of the other expansions which were underway?
Yeah, our new expansion at Pathredi is likely to be commissioned in the Q2 of this year. Earlier, it was projected to be commissioned in Q1, but there is some delay by around 2 months. So we expect it to commission it by August or September this year. And so far as Sanand is concerned, we expect to commission first phase of the project by end of FY25.
Okay, all right. What about the debtor days, sir? Are you on track to see some reduction in the number of days? I think you were guiding for 10 to 15 days reduction in this year. On track?
Yeah, it is on track. The debtors have gone down. I don't have the exact number at the moment with me.
Okay. All right. We will leave it at that. All the best for the quarters to come, and hopefully you will achieve all your targets. That's KEI Industries. Quite optimistic, actually, and the stock as well is up almost about 2.5%. Just wanted to point out a few things about the market. One is that the market may be quiet, but there is plenty of action in the broader market, so don't lose sight of that. And plenty of stocks are sitting at fresh 52-week highs. So whether it's something like an IEX, BPCL, Jindal SAW, NTPC, Power Grid, all at fresh 52-week highs right now. Quess Corp also is at a fresh 52-week high. So don't be fooled by the flatline move of the market. Individual stocks are doing their bit at the moment. CAMS, by the way, is one stock which has had a dream run this year. CAMS is the one I'm talking about. It's at 4,400 now. It's a fresh high there, and the stock is up 66% in 2024. So this is that kind of a market, I guess. But Pankaj Tibrewal is joining in. He is the founder and CIO of Ikigai Asset Manager. Pankaj, hi, good morning, and good to see you in on the show. The market has been very, very strong and has rewarded a lot of long-term retail investors. But what now? Most of the triggers are behind us, including triggers like, the union budget. Now, of course, there's expectations of rate cuts as well from the Fed. But going forward, how are you approaching the markets?
Good morning, Sonia. If you look at one of the primary reasons of the kind of strength we are seeing in the market is the fundamental earnings growth for the last 2 years, which we saw from FY22 to FY24. However, we believe that the first quarter has started on a very muted note. If you look at the 175 companies out of the NSE 500 companies, which have declared results till day before yesterday, the numbers are not very encouraging. If you look at the headline numbers, it's 6% earnings growth. But if you bifurcate into two parts, 58 companies, which are BFSI companies, they have delivered 27% earnings growth. But the 118 companies, which are non-BFSI companies, which is largely the broader market, they have delivered negative 8% earnings growth. So the idea is that the earnings growth has started to slow down. And our sense is this year it will be a 10 to 12% earnings growth for the broader market as a whole. And that, I think, should weigh on the overall market movement at some point of time. Second, if you look at Nifty also, 30 companies in Nifty have reported, and it's a flattish earnings growth. And if you again bifurcate between BFSI and non-BFSI have seen negative earnings growth. It's BFSI which is pulling up the earnings growth. So we believe that earnings momentum is slowing down. Margin lever, which was the main contribution of earnings growth last year, is receding. And hence we need to be very careful in the markets because there are certain pockets which are full of exuberance. For example, look at the railways and defense as a total market cap. It's now about 18 lakh crores. FY19, this total combination was 1.2 lakh crores, which is about 67% CAGR in market cap. But the profits have grown at 21% CAGR. So certain times in markets, you need to be careful of what not to do. And I think the elimination method works the best. This is the time in the market where you need to be absolutely clear what to avoid and what not to invest in. And I think if you can navigate this over the next 12 to 18 months, I think you should be okay. So I think we need to be careful in the markets in terms of stock picking.
No, that's very well put. What not to do is also a decision, right? And what to do, of course, is one. Pankaj, hi, morning. Always great to speak with you. So I think we get a sense of what not to do from you, right? I mean, you cited that stunning statistics, almost 70% CAGR in market cap of those two sectors from 19 onwards. But, money is still coming in. And you being handed money from investors at KEI, so you got to put that to work as well. So let's talk about what can one do, and what should one do, Pankaj? Sectors and themes, etc. You're still comfortable with?
Prashant, I think one sector which is seeing reversion of margins is consumer durables. I think we saw a very strong summer, and the ground feedback is that there is decent demand uptick across the board, whether it be smaller appliances or larger appliances, and the industry profitability pool is at a decadal low. So we believe that this year you could see margin reversion in certain consumer segments, whether it be discretionary, durables, or in terms of FMCG as well. The second is pharma. I think we continue to remain positive on the US generic space plus the domestic space. And there are certain pockets like CDMOs. In our view, that's probably a next 2 to 3 year story. And if the law gets passed in US, which restricts the imports from China on CDMO and others, I think Indian players have a very long runway of growth. So that's another segment which is looking good. Financials, I think, is reasonably valued, especially the private sector banks. And I think given their franchise and the long runway for growth, I think after a long time, you are getting few of the good franchises at very reasonable valuations. Fourth, I think auto ancillaries is another very interesting space, because what we are seeing in certain auto ancillaries is the texture of the company is changing for good. All this while they were dependent on auto sectors, whether it be two-wheeler, four-wheelers, or commercial vehicles. But certain auto and companies have also pivoted themselves to industrials. And in many cases, 30 to 50% of their incremental revenue is coming from industrial sector, which is seeing decent growth, and they have a right to win. So I think auto ancillary selectively also is looking good. And last but not the least, metal prices are at intra-year low. We believe that there could be a case as a contra call to look at metals as a sector. I believe that the prices across the board, whether it be ferrous and non-ferrous, have fallen across, and valuations are reasonable if you look at some of the companies from a capacity perspective. So these will be the few sectors, I think, where one can deploy incremental capital. But again, I repeat, it will be a stock pickers market. I believe the breadth of the market has started to narrow down. Only 40 to 45% of mid and small cap companies have been able to outperform the index, which is the first sign that market has started to differentiate between companies. So I believe that this next 12 months, be careful in terms of picking up stocks, and it's a stock pickers market.
Okay, all right. Hi, Pankaj. Good morning. Always good to see you again. So it looks like the easy money has been made. Now you'll have to work a little bit harder or a lot more harder from here on to make some money, going by earnings, going by the the entire investment scenario. Let's talk about you briefly spoke about metals. Let's talk about cement. What are you making of this entire consolidation that we are seeing? In the near term, there could be pain on prices, which will reflect on profitability as well. But it seems the street is more focused on maybe 4 or 5 big players in the times to come, and the large will get larger, which will be a longer term positive. Your take?
Yeah, Nigel, absolutely you're right. This is a consolidation phase, and our sense is that the top 5-6 players will command more than 60% market share in India. And that's happening region-wise. If you look at South, the latest move by Ultratech is a welcoming step. And there's a significant consolidation which is happening in South as well. And over the last decade or so, we have seen 200 million tons of cement capacity change hands, which is worth about $25 to $30 billion. And I think more is on the anvil, the way things are moving around. And we believe that once the consolidation phase is behind us, the cement prices have not really reacted. If you look at the CAGR of cement prices, it's about 1 to 2% over the last decade, which is lower than the inflation rate. So I think there's a long runway. Once the consolidation phase gets over the next 1 or 2 years, I think you will see cement prices inching up. So companies which are very strong on cost curve, companies which have a good brand where they command premium, and also the balance sheet is in good shape, I think will be the companies to bet on. So if you take a 3 to 5 year view, cement is in a very sweet spot. And we believe that the demand growth can outpace supply growth over a period of time. And don't forget limestone is not in abundance. There are only few pockets in India where limestone is available, and that will become bottleneck from an incremental, supply perspective. So keep that in mind. And I think if one is patient enough, this sector can be rewarding over a 3-5 year period.
The other space I wanted to talk to you about, Pankaj, was autos, because, come Friday, we have the Ola Electric IPO, and this one is gaining a lot of traction purely because it's the first pure play electric two-wheeler, manufacturer that will be listing on the exchanges. But we do know that Ola has its own fair share of problems, whether it's higher losses, higher attrition, all of that, right? So in that space, the electric two-wheeler space, do you think it makes more sense to stick to the listed players despite them having lower market share, or is this an IPO that you would be interested in?
So rather than commenting on stock specific, I think let's look at the trend. I think over the last 5-6 years, EV globally has been a talking point. We have seen changes, and the changes will happen over a period of time as you move and pivot from fossil fuels to EVs. But last 12 months to 18 months, if you look at, there's been a significant change. Toyota is one of the best performing auto stocks, and they have never pivoted themselves to EV. They never believed in that thought. And they've always said that hybrid is the way to go. On the other hand, some of the EV makers across China and US are having troubles when you look at their stock prices and in terms of volume growth. So clearly the change is there on the canvas, but the change may not be as fast as the markets were expecting a couple of years back. So I think ICE is there to stay. And we believe that there are certain companies which have significant, market share in this space. And people were giving a negative terminal value to them, say a couple of years back, which has changed now. And I think both will coexist as we move ahead. And the change may not be as fast as what the markets were expecting. So I believe that having a right combination in the portfolio of both the ICE engine companies as well as the EV players will be the right strategy rather than either or all.
Pankaj, just a few points. So consumer durables, so buy the brand or buy one of these sort of EMS companies? That is one. Auto ancillaries, are we talking about sort of bearing companies? I mean, if you could give us some sense without actually not as stock recommendations. And metals, what exactly? Are we talking about steel in particular that you like?
So Prashant, I think on the durable side, we believe the companies with strong brands can do well. And we are seeing in certain cases market share wins. And my broader thesis is that the industry profitability is at a decadal low. And there could be reversion in margins as competitive intensity starts to come down in certain pockets, which we have started to see. Second point is on the EMS space, you need to be very careful that many companies are not generating operating cash. So they are trading between 20 to 30,000 crore market cap. But when you look at the cumulative operating cash flow of the last 4 to 5 years, it's flat to negative. And I get very worried when I see companies with only earnings growth but no cash flow. Finally, top line is vanity, bottom line is sanity, and cash in bank is reality. And if companies without cash flow and only growth are recipe for disaster. So one need to be careful on those companies which are not generating cash flows on EMS space because these are wafer thin margin businesses. Second, on your point on metals. Yeah, on metals, I think certain companies, both on steel and non-ferrous, probably are looking good if you take a 2-3 year perspective. And we are seeing that incremental return on capital on some of these names are in double digits, which is very, very encouraging because they will like to sweat the assets on the capex done over the last couple of years. And steel and non-ferrous, especially aluminum, looks to be in a decent space.
And auto ancillaries, if you can go one step down.
And auto ancillaries, in terms of auto ancillaries, we believe that, as I said, there are certain companies which are changing in terms of business competition. We are very excited about those few companies where industrial is also becoming an important component apart from autos. So there are certain companies which are catering to aerospace, defense, which are catering to wind, which are catering to renewables. And I think once you start moving into that, you have a balanced portfolio on both the autos as well as non-autos. And some of them are also pivoting themselves to engine agnostic technologies. So whether it be ICE or EV, which time will only suggest which one is the winner, but they will be riding on both. So I think that terminal value concept of the terminal value question may not come true for a few of them. So we are also looking at few of the auto names on that side.
And sort of just share your thinking on this entire power space as well, Pankaj, if you will. NTPC had that analyst meet yesterday. Market's very excited. There's that renewable play in it, and there's, of course, a runway for thermal expansion as well. So just your thoughts.
Prashant, I think power is a decadal story, not only in India, but globally. Look at few of the data points. For 20 years, power demand in US was flat. And suddenly over the last few years, you have seen a very sharp increase. Why? Because for everything you need incrementally, you need electricity. Whether it be Bitcoin, whether it be electric vehicles or electric anything onto EV side, or whether it be data centers. And what used to happen earlier globally was the large amount of power used to get consumed when a big steel plant used to come, when a big aluminum plant used to come, which used to take 3-5 years, and you could have planned your supply accordingly on power. But now data centers take 8 to 12 months, and so many other consumption of power takes very little time. So you have to match the supply according to the demand. And renewables are doing that. But the problem is on transmission. Globally, the grid is, choco-blocked, and especially in India, also if you look at the day power rates in northern India is higher. The day power rates across and an average in India is 2 rupees, but in northern India is higher. What does it suggest? That the transmission is not happening. And I think a large part of investment globally and in India over a period of time has to move into transmission to make sure that electricity travels across the board. And in my view, over the next 5-10 years, power as a value chain can throw a lot of winners. We need to be careful because a lot of them are pricing and they are pricing and valuation. That's the only challenge. But if you take a macro construct, I think globally there's a demand which is increasing in power and supply is not catching pace. And the bigger issue is transmission. I think the grid is choco-blocked across and we need significant incremental investments. That's why I was not very surprised when Power Grid at their analyst meet yesterday upgraded the guidance on capex from 15,000 crores to 18,000 crores. And I think India needs significant amount of investment on the transmission side.
Okay, all right. Macro opportunities there, definitely. But what about stock-specific opportunity and how much is in the price? That's always the question. Pankaj, great to have you with us here. Thank you very much for your time. Appreciate it. I just want to highlight just one stock. Philips Carbon Black is up 8% now. It's a Sanjeev Goenka Group company. We should actually put that out as an alert. We had some very aggressive targets being put out by Mr. Goenka yesterday, and we'll play out snippets of that piece today as well. So 323 on PCBL at this point. And CESC is the other one, which is up 5%. Stocks at about 175 at this point. Lots happening. The Nifty is also moved up. It's not flat or down anymore. It's up 45 points. That's PCBL, Philips Carbon Black. Look at the volumes as well. 7 million shares. We don't see that much on that one at all, but it is trading with heavy volumes. We'll take a break. We're back. We'll connect with the management of Maharashtra Seamless, which reported numbers as well. Stay tuned. That's coming up.
Welcome back. Well, let's focus on one of the stocks that are getting clunked back today. That's Maharashtra Seamless. The numbers are quite disappointing. But to understand what went on, Mr. Saket Jindal, the MD of the company, joins us on the show. Hi, Mr. Jindal. Good morning and good to see you. Well, the street is clearly disappointed on the margins front. It appears that higher raw material cost has hit you and maybe some inventory loss as well. Could you tell us from this 11% margin, do you see margins recover on a blended basis? And also on an EBITDA per ton basis, the seamless vertical, well, you have the EBITDA per ton coming sub 10,000 rupees, and even some pressure is what we saw in the ERW business. So guidance on both these two on the EBITDA per ton.
Right. So this quarter, there was some dip in the margins because of some 5% dip in sales, and largely due to raw material, and we had bought some higher value in March. So on an accounting basis, on FIFO basis, the accounting is showing in the increased liquid inventory some fluctuation, which is largely causing the difference in the margin. And there's been some other expenses which are booked in this quarter, which was pertaining to earlier, and we made provision earlier. And now we have booked those expenses pertaining to earlier quarter. So this is the three reasons why there is a dip in the EBITDA. And we are hopeful that in the next quarter, definitely we will post as per earlier quarters, because our production has been consistent, and both in seamless and ERW, if you notice, our production has been consistent, not much fluctuation, maybe 4-5% maximum.
Okay.
So production is consistent, and the accounting factor has led, and raw material and all, to the dip. And we expect to post again in the next quarter as per earlier, and maintain the growth rate.
Okay. All right. So margins go back to the 19-20% that you delivered earlier. Is that correct?
Yeah, hopefully, because there is also one more factor that Chinese material has also started coming into the country. So in some sectors, not all sectors, like so that has led to more competition.
Okay. And, which sectors, sir? Which sectors are you seeing imports coming?
Mainly in the boiler and engineering sector.
Okay.
So we are presenting with the government to enhance the anti-dumping duties, and also to put better quality standards so that substandard material doesn't get imported into the country.
Okay. So what is your representation? How much you want them to increase the ADD to protect you?
That is still workable, because currently there's a floor price of $960 or so. So that floor price is not enough to contain the imports, and there is some unofficial imports also. So we want a better way of checking this through custom duties, which are more relevant, or which are more effective. So we are trying to work out the best solution.
Okay, you know, when you joined us last time, you told us the base case for seamless will be around 15,000 rupees per ton. And on ERW, you were guiding for a wide range of 6,000 to 11,000 rupees. What is the revised number? Because this time around, it's come in sub that 15,000 rupees, the seamless business. So you think you get back to those numbers? Seamless goes back to 15,000 and ERW will be in that vicinity of around 6,000-7,000?
Yeah, that's a reasonable figure, and we want to come back to that figure. And I believe that's a reasonable figure.
Okay, you know what's supporting you, sir, is your cash in books. And in the past, there have been, you have given some hefty dividends at times. Now, since the stock price has come off, my director pulls up the chart, the stock price had gone to 1,000 rupees and it's corrected from there. So two-part question. One is, at times you have come and you have bought from the open market. Do you think you'll be looking to do the same at current prices? And point number two, how do you want to deploy this 2,000 crores of cash?
Right. So some consolidation in holding can happen. That is part of our strategy. And second is the extra cash which you're mentioning. We will definitely deploy them, and we have two projects in hand. One is a premium connection project for high pressure applications in the oil and gas sector, in ONGC and all. And the second is cold drawn project, which is again a value-added product for heat exchangers and other boiler applications, which also uses our mother pipe, the hot fill pipe, and the hot finish pipe is used to make the cold drawn.
No, so I didn't get that. The consolidation of holding will be, you could be looking at buying some shares from the open market. Is that what you're hinting at?
Yeah, some creeping acquisition gradually, not so much significant.
Got it. We have your order book, sir. That's roughly around 1,800 crores or thereabouts in terms of your order book. How much of it is exports?
Yeah, so exports have dipped in the last 1 year. Earlier, it used to be 25-30%. And currently, it's dipped to, I believe, less than 10%. So the reason is, again, the international geopolitics, where, in US and Canada, there is no competition from other countries. And even Ukraine and Southeast countries have started exporting to US and Canada because of the geopolitics and the difference in demand supply. So it is stiff competition, and we expect it to ease out in the future.
Okay, all right. Final question. Volumes last year on the seamless side, you did around 400,000. On the ERW, did around 100,000. So for this year, you're saying volumes will be more or less constant or flattish. So no big growth in both these two numbers for this year. The growth comes in FY26. Is that correct? In
the production volume?
Yes.
Right. So we expect to maintain consistency this year.
Okay, all right. Mr. Jindal, thanks a lot for joining in. So we look forward to this guidance that you've given us. Flattish volumes, but you expect margins to go back towards that 19 to 20% and maybe some kind of support on the price, given that you have cash in the books, as well as you could consolidate your holding as well.
Okay, that's Maharashtra Seamless. By the way, the market is, it's not doing too much, but there are many stocks that are looking pretty good at this point in time. Let's do one thing. Let's talk about Kansai Nerolac Paints. Q1 was a muted quarter for them on expected external weakness. Their decorative business was also impacted by elections as well as the heat wave. Anuj Jain, who is the managing director of Kansai Nerolac Paints, joins us now. Anuj, thanks a lot for joining in. You know, it is this muted performance that is kind of worrying, but that's been the case with the entire industry. So your company is no different. I wanted to understand a little bit about what the volume growth was in both the decorative and the automotive business in the quarter gone by, and what are the targets for the full year?
So overall, if you see, the volume growth was mid-single digit. Decorative, you can say low single digit. And I think the growth was driven by auto in the first quarter. And as you rightly said, in decorative, it was muted. The non-auto also, it was muted. But I think going forward, because the monsoons are good, and the first quarter, I think it is clearly understood that why the demand was low. And we have seen some pickup in the month of June. And therefore, we foresee that the demand in decorative will improve gradually. And non-auto, in fact, we have seen the good uptick in the month of June. And based on the continued thrust on the infrastructure and the order pipeline, what we see, we feel that it is going to be a strong growth in the coming quarters.
Okay, strong growth in the coming quarters. Got it. So, any price hikes, since growth is looking good, do you think you can take more price hikes, you can pass on more price hikes to the consumer? If yes, what has the quantum been so far, and how much do you plan to do further?
We have seen some 1.5 to 2% of inflation, which already happened. And to mitigate that, two price increases have already been, so one is already implemented and one is in pipeline. So overall, between 1.5 to 2% of price increase is what we are going for.
So hi, morning. So you're saying that both are done now in terms of price increases? One will go into effect?
One is done and the other will come into effect in the coming month.
Okay, got it. Now, could you tell us, so both on the decorative side, non-auto and auto, what kind of volume growth are we to expect? I remember you telling us on the auto side, you'd much rather look at the value growth, decorative volume growth. So could you give us where you're at and what you see for the full year, FY25?
So if you remember last time also I discussed that in automotive, we are expecting a production growth of 6 to 7%, and therefore the paint growth could be similar to that. In decorative for the entire year, there could be some kind of up and down during the quarters, but we still feel that higher single-digit volume growth is definitely possible, during the year.
Okay, all right. Hi, sir. Good morning and good to see you in. If you could tell us about your premium product business as well. You've exited some low-margin businesses. What is the mix currently, premium versus economy, and how do you see it panning out?
So one of part of our strategy was to increase the saliency of the premium item, and that is applicable in decorative also. That is applicable in some segments of the industrial segment also. And in that regard, last 1.5 years, we have taken a lot of initiative, and it is doing well. So the premium saliency, even in the first quarter, in decorative has gone up, and even in the other parts of the non-auto industrial business, it has gone up. And that is something which you can see is reflecting in the expansion of our gross margins.
Okay, but you want to put a percent to it?
In decorative, it is closer to 30%, the premium saliency now.
Okay, in decorative, 30% is coming in from the premium part of it. Got it. Also, a word on competition. Birla Opus, they have been quite competitive in their pricing, but now you have price hikes that are coming about. So how do you see the competitive landscape shape up?
I think this market is quite big, and industry growth consistently it is growing. I said earlier also that per capita consumption of paint is lower. 25% is coming from the informal sector. So I think, and also this, especially in the decorative, the industry is more dependent on the influencer. So with the more competition coming in, I see a positive that it will spur a better growth of the industry over a period of time. Because when new good people participate in the market, more communication, more visibility. So this helps in terms of increasing the penetration. We have seen in some other categories also. Also, this effort will result into bringing consumer more closer to the category. So that also will help. So overall, I feel that over a period of time, it's a positive impact in the industry because market growth through per capita or the informal to formal will go up, and more involvement of the consumer, and that will be good for the entire category.
Okay. So when you talk about the category growth, right, overall, in the slightly medium to longer term, now that there is broadening of the category, more players are coming in, more, distribution is picking up, more capex is being put on board. What kind of sort of sustainable growth do you see for the industry over the next 1 to 2 years?
I can comment, if you see last 5-10 years, industry has been growing in double digit, and I see no reason that why over a period of 3-5 years, why the industry will not grow at the rate of same, double digit growth. And in that growth, if new players are there and maybe 2%, 3%, 5% of the growth gets allocated to the new player, it's fine. I think over a period of time, industry will get reset. But I do see advantage to the industry in terms of 1 or 2% additional growth coming in because of the new competition and therefore the innovations, and so that is how I see it.
What about the adhesives business, sir? How much does it contribute to your total revenues? And I think you had given a target of 5% of total sales. You could correct me on that number, but if you could tell me by when.
So adhesive is a part of our new business. In new businesses, we have construction chemical, waterproofing, adhesive, and in totality, now this new business is contributing approximately 10% to our total business. Adhesive is a separate subsidiary, and there we have industrial adhesives and the consumer adhesives also. But it's a part of a total new business which contribute about 10% to us.
Okay, we will end this discussion on that note. Thanks a lot for joining in. That's Kansai Nerolac with their view on the business and the way forward. By the way, the market is very quiet, so let's take a quick break. On the other side of the break, we have Puneet Lalbhai, the Vice Chairman of Arvind, to discuss their Q1 earnings performance. Stay tuned.
Where else do you believe there is a strategic consideration that the government must consider, and where do you believe that the government could look at a much more commercial consideration and take the step forward as far as disinvestment is concerned, or is that not an expectation?
There are many areas where a commercial consideration could lead to privatization or disinvestment, and I'm as my colleague Mr. Pandey has repeatedly been saying, they are not off the table at all. But it's one thing to say this year I'm going to sell company X, and then the whole market waits for us to dump X and starts acting in anticipation, versus saying that I'm an investor. I have a portfolio of securities that I own. Some I'll continue to be majority owner in. Some I'll continue to be minority owner in. Some I'll dilute my majority stake. Some I will do nothing and collect dividends. And some I'll hold until they are repaired. And we take a pragmatic and maybe even opportunistic view of what to do with each of these. That is the new approach. But you will see disinvestments happening. They'll happen not perhaps to a declared pre-announced calendar, but you will still see them happening, is our both expectation and policy.
This budget has a clear direction. The kind of a strong support government had provided over the past 4 years has helped the economy. And what this budget commits, that significant support, our endeavor would be.
Welcome back. Let's focus on Arvind Limited now. Their Q1 performance saw a hit because of the worker strike that took place. The strike affected their main business, including the woven denim segment. Management says that domestic demand is likely to improve tangibly in Q2 given festive season and wedding buying. We have Puneet Lalbhai, the Vice Chairman of Arvind, who joins us now to talk about that. Puneet, thanks a lot for joining in. You know, before we talk about your overall business, just I wanted one word on this workers' unrest. What kind of impact has it had on your business? I'm sure it's caused a lot of inconvenience, but if you can share some numbers with us on the kind of damage it would have done.
Sure. So I think it would have taken away about 200 crores of revenue and about 60 crores out of EBITDA.
Okay, so the impact is 200 crores on revenues and 60 crores on EBITDA, right? So, I mean, what kind of clarity can you give us in terms of what revenue growth could look like going forward? What are the trends like currently in terms of demand and, any kind of targets that you're looking at?
So demand for our business is quite robust. Our export garment orders are looking quite full, the order books. And the domestic demand, as you mentioned earlier, is also picking up. And we have excellent demand on fabric exports as well. Advanced materials continues to do well. So we are still feeling as if, we'll see robust growth in the next 3 quarters, and we should be back on plan by the end of the year.
Puneet, hi, morning. So strong double-digit growth for 25?
Well, it will be double-digit. Early double digits is what I'm talking.
Okay. And what about margins, Puneet? Because I think there was a freight impact as well in this quarter, and that perhaps will continue to show up in the coming quarters as well?
So there will be some pluses and minuses, but on the whole, we worked very hard on locking our margin for the last couple of years. And I think we should now start stabilizing at this level before we start with.
Okay, all right. Hi, Puneet. Good morning and good to see you in. This is Nigel on this side. Margins in the past quarter were around 8.2%. But since you'll have operating leverage that will play out, should we work with the number of closer to around 10% for the year?
Yes, so we've been around that 10% for the whole of last year.
Okay.
To study the numbers. This quarter, of course, is very difficult to study the margins and conclude anything because of the disruption that we saw due to the strike. But in that 10% to 11% area is where we are hoping to land margins.
Okay, all right. The positive, I think, in the past quarter was garments. You had done, I think, close to around 10 million pieces. And I think you were guiding for a number of more than 35 to 40 million. What is the volume targets you're looking at in garments as well as denim and woven?
So we are keeping all our volume targets on garments exactly the same. And both on wovens and denims, we will be operating at close to 100% capacity in the next 3 months.
Okay, all right. You guided for revenue growth in double digits, Puneet, low double digits. What's the breakup? I mean, AMD will grow how much and your textiles will grow by how much?
AMD will grow closer to 20%, hopefully cross 20%. And textiles will be approaching double digits, so 9 to 10%. So the overall margin will sort of spill into the low double digits.
Okay, all right. Also, you have laid out a capex plan. I think it is around 450 crores. What is the asset turn that we'll see on this? And the capex plan, any change there from that 450 crores?
So if you look at the capex plan, there are 3 components to it. About 40% will go towards the advanced materials division. About 35% should go towards garmenting. Both of these businesses have very good asset turns. So they would average between 3 and 4 times capex. And the rest of the 1/3 of the investment will go towards core textiles, where we'll be doing innovation investments, debottlenecking capacity, and of course, doing a lot of maintenance capex.
So on a whole, this 450 crores could result in revenues of around 13 to 1500 crores?
That's fairly accurate. Of course, it will take a couple of years to achieve 100% utilization of this capex. So it will come in a staggered way, and I think in year 3 we should see that full turnover manifesting itself. So it will be this sort of a rolling thing. Next year there will be another capex plan. So yes, on an average, you can say 3 times the investment.
Puneet, just one last question from my side. On the AMD side, where you said you're expecting 20% growth, that's advanced materials. Which are the segments which are seeing the fastest growth? And I think you're calling for 2,000 crores in revenues in the next 2 years. Is that correct?
Yes, that is correct. We should cross 2,000 crores year after next quite comfortably at the current run rate. The division is broken up into 3 major components. There is a human protection business, there is an industrial fabrics business, and then there is the composites business. And all 3 are growing at around that 20%.
Okay. All right, Puneet, we'll leave it at that. Thanks a lot for joining in. That is the Vice Chairman of Arvind. Let's slip into a quick break. Up next, we'll be joined by Sumant Katpalia, the MD and CEO of IndusInd Bank, to discuss the company's performance for the quarter gone by. Stay tuned.
Keep continuing providing that support.
So around this 3.5% of GDP?
That is a very high level. For decades, we have never been there.
Yes.
And so the idea is that there are 2 other imperatives come in. The other priority needs and fiscal consolidations. It has to be done. There are the trinity which has to be taken care. The other 2 pieces, and who else have to do the heavy lifting? Government of India has now reached to a level which are the maximum it can sustain proportion to GDP. Second is states as a whole are spending about 2.5% of the GDP or their GSDP in capex. The quality of expenditure has to improve there in terms of infrastructure project itself.
So what would a realistic number be then to have as far as government capex going forward, if you believe that this is the most or the maximum that the government can do?
So look at this manner, that where we are at this point of time, that in terms of the fiscal deficit is 4.9 this year. Yeah. That's what we expect to do. Next year, 4.5. And that's not the end of the fiscal consolidation. We have to keep on going less, of course, with the different metrics of a debt to GDP ratio. If we are talking about 3% plus to go to capital expenditure, we are still, there are expenditure which are on the revenue side, and there also there are fair amount of expenditure, not just on education, health, which are very, very important and will find full attention of the government, but also Government of India provides grants to others to do capital expenditure. It provides to state governments of the order of perhaps about 3 lakh crore plus. Though in our books, meaning Government of India books, there is still revenue expenditure. So keeping it at 3% plus, now it has reached to 3.4%, moving forward, if on a nominal basis that can be maintained, that will be a good achievement.
We are very close to the due date of filing income tax returns, and if you're not done with it yet, let's tell you all that you need to know at the last minute for filing your return. Income tax return documents differ as per the earning sources of the tax filer, but certain documents are mandatory for every taxpayer irrespective of the income source. So let's talk about them first. PAN and Aadhaar number are the basics, of course, that is something you can't do without. But the other ones, Form 26AS, this gives you details of all the details of the taxes paid during a financial year on any transaction. This would include both TDS and TCS deducted. Second is the Annual Information Statement or the AIS. This is more detailed version of 26AS and gives you transaction-wise details and also includes details of interest from fixed deposits and savings bank account as well. Also details of any shares sold. How do you get these two documents? Log into your account on income tax website.
Welcome back. We continue with our earnings focus. This time it's IndusInd Bank. The first quarter FY25 was a bit below street estimates. Net interest margin came in at a 7-quarter low, just marginally lower than previous quarter. Asset quality also saw some trouble, but the business momentum was healthy, 15% growth in deposits and almost that much in advances. Sumant Katfalia, Managing Director and CEO of IndusInd Bank, is with us. Sumant, good morning and thank you very much for joining us. You know, actually the banking sector itself has been under a bit of pressure, but I'm looking at the analyst reports written about you. ROE, ROA are both lower than the previous quarter, as was the net interest margin. According to you, what was the problem?
So, good morning and thank you for inviting me. I think it was a very stable quarter. And yeah, of course, the quarter one is generally a weaker quarter and it got also impacted by some external factors. But I continue to believe if you look at, you know, our two domains, which is microfinance as well as vehicle finance, and specifically in the rural belt, we did have a slowdown to a large extent, and they are high-yielding portfolios of ours. And we did not want to push it at this point of time also. So I think if you look at the revenue growth was a tad lower, but I think our NIMs were maintained. Our fee, because of the processing fee going down, I think it got impacted. And if you look at our expense, actually for the first time our expenses have come under control in the last 4 quarters, and we were 2% quarter-on-quarter growth. So I continue to believe once our acquisition ramps up, I think, and which is already happening, I think you will start seeing us getting back into the ROA margins which we've set to ourselves, which is 1.8 to 2.2%.
Okay. By when do you think you can get over there? I mean, you're not a big distance from there, but when do you see 1.8? When do you see 2%?
So I think quarter 3 onwards, you start seeing 1.8 coming back. And I think by quarter 4, we should be between 1.9 and 2.
Okay. To some extent, you know, God is against the banks. And by God, I mean RBI. The LCR rules are clearly going to mean that you have to put aside a little more money into government bonds, which obviously are not going to fetch you more than 6-7%. So how much do you think your costs may go up? What is your LDR now anyway?
122%. LDR is about 88%, 87.5.
87, okay, sorry. LDR is 87.
LCR is about 122.
Okay, so will you want to bring it to, will you want to keep it at 122, or will you now be okay with 110?
So our board is, we've got an internal guideline that we should be 110% and above, but we've always kept it at 115% and above for ourselves. So I think while the LCR guidelines are being finalized, I think there is a single digit impact to us which we've calculated, and we should be able to fine tune our liability strategy to take care of that.
Okay. Regardless, there will be a war for term deposits because there is an obvious attraction there, and deposits have been growing far slower than advances. So therefore, how will NIMs pan out in the current and next quarter? When do you see it perhaps inching up?
So we've always said that our NIMs are range bound between 4.2 and 4.3. You should have seen it in the last 8 quarters. We are very range bound between 4.2 and 4.3. And I think in higher interest rates, we will be at 4.2, 4.3. In lower interest rates, even with the LCR, we should be at 4.2 to 4.3.
Yeah, of course, you're a distance from 4.2 anyway. And as you point out, you have an LCR buffer. The slippage bit now. You speak about, you said that MFI and some rural pockets did see stress. Is this likely to abate? Because, I mean, while I agree with you that agri loans are always a first quarter thingy, MFI has been a matter of concern for the last 6 months, even with NBFCs. So how do you see the overall stress panning out?
So I think, Lata, what is more important in an MFI business is the approach which you take towards credit. Growth is not the only criteria you should be looking at. You should be able to identify districts and states where you think over-leveraging or some external pressures are building up. So, for example, there were states like Odisha or Punjab, for example, I'm saying it. We actually started slowing down our businesses 6 months before that. So, if you look at, we've always said our MFI portfolio will have a gross NP of 3.5% and 2.5% credit cost. We've been range bound in that. So even if you see this quarter flow, it's 330 crores flow. So it's not that we've increased our flow dramatically on MFI, contrary to what the market is saying. So we are range bound between 330 to 350 crores, which is about 3.5%, and our credit cost is between 2.5% to 3%, and we've been range bound in that.
No, fair point. I mean, all businesses, all banks have some high risk, high return businesses and low risk, low return businesses. I take your point on that. I think the market's getting disconcerted because slippages did go up. The slippage ratio has gone up. So, I mean, what is the guidance on that, therefore?
So, we don't give guidance on slippages because we have some cyclical portfolios. For example, first quarter is a very weak quarter on the vehicle finance business. We had 680 crores of flow against the 475 crores of flow. So if you look at our flow, the 10% increase, 90% of that has happened in the vehicle finance business.
Okay.
And I think we don't give guidance, but we've given guidance on the credit cost, which is 110 to 130. And if you see us, we've never busted 110 to 130 basis points of credit cost.
What is your cost of funds, Sumant, and how much might it inch up in this phase of war for deposits?
So I think from last quarter to this quarter, we had a 5 basis point increase in cost of deposits and 3 basis points increase in cost of funds. Overall, our cost of deposits over the last 7 quarters has inched up by about 130 basis points.
Okay. Do you think banks in general
because more and more is moving to term deposits?
Okay. Yeah, absolutely. Do you think banks will rely more on
to term deposits?
I'm sorry, there is a voice lag. Do you see banks like yourselves going more into CDs now because the bond market rates are dipping for other reasons, bond index, LCR demand, etc.?
I think I've said that our dependency on the CD market should not be more than 3 to 5%. We've always kept that. If you look at today also, we are at 2.8%. I continuously feel that you should not take shortcuts in this. We are low on retail. I think we have to granularize the portfolio. Our dependency on borrowings as well as CD markets will be low. But in the deposits, we may play for some time the bulk deposit game.
Sumant, what is the likely impact of the project finance provisioning that is going to come in sooner or later?
So Lata, we've looked at our portfolio, and if you look at the composition of our portfolio, the impact will come more in the real estate side for us. I think it's a couple of hundreds of crores over a period of time. So I think, and we will do some pricing adjustments once the regulations are clear. So it's not such a big impact because we've not focused on project finance so much. We have some real estate portfolio, 5% of our book is in real estate. So that's the only impact.
Okay. Now to come to capital raising, markets in a kind zone, with Nifty nudging 25,000. Will you all want to use the opportunity to raise money?
We've just assessed our capital needs. You've seen the results. It's 16.15 CET1 and overall capital adequacy ratio of 17.5. I really don't think there is a need for us to raise capital. If we are growing at 18 to 22%, our internal accrual should be sufficient to take care of that as long as we are managing our risk-weight assets. We will assess it in another 6 months now, and we will see whether we want to raise capital. As of now, we don't have a need to raise capital.
No, there's this strange thing about capital, isn't it? When you don't want it, the market is very kind. But sometimes when the market is unkind, you need the money. And that's why people normally pick it up when it's available. Anyway, we will know in 6 months. Just a final question. There is this constant chatter in the media about Reserve Bank giving permission to the Hinduja group to raise its stake to 26. Anything you can, clarify for us with certainty?
So I can't talk about the promoter entity, but I can only say they've asked us for the fit and proper, and that's where we've given our submission, whatever the Reserve Bank asked us. And I think it's between the promoter and the regulator. We've not heard anything from the regulator.
Okay, that's most useful. Thank you very much. Clarifies a lot of doubts. Sumant Katfalia, always a pleasure speaking with you. Thank you very much, and hope you have an eminently successful FY25 too. Okay, so that's the word. That's the word coming in from IndusInd. They are staying in a range, whether it is ROA or whether it is margins, within that 4.2, 4.3% band as far as margins are concerned, and credit costs under control, as they say. Guidance is 110 basis points. Well, markets still in absolutely flat terrain except for the mid caps. But on that green note, we wrap up on Bazaar. Chartbusters coming up.
Tab to view Form 26AS and Services tab to get your AIS. Now for the other income, that is capital gains, you will need to pay taxes. You can get the details of the capital gains that you have earned on sale of mutual funds or shares from your fund house or your stockbroker. This will be available online in your stockbroking account. This will give you details of all the share transactions you've done in the financial year with the amount of capital gains. Similarly, details of dividend income is also important to be considered while filing ITR, and this can be taken from the broker or demat account summary. Also, while AIS gives details of all the interest income that you have earned, always best to check it with the interest certificate you receive from banks. Again, these can be found in your net banking. This would have details of interest paid on home loans as well. Important if you have one, because that can be used to claim deduction in the ITR. This would also mean it's important to keep your home loan statement with you as well at the time of filing a tax return if you have one. Of course, for salaried individuals, Form 16 is another very important document to keep. It is for salaried individuals with details of all TDS deductions done by the employer. Disclosure of all active bank accounts are mandatory in the ITR. Bank account details like your bank name, account number, IFSC and number of accounts you hold must be quoted in the income tax return. Also, one account shall be selected as primary to assist the income tax department in refunding your tax refund by electronic transfer to such account. Also, some of the donations you have made to notified organizations, relief funds, charitable organizations that will be eligible for deduction under ATG. So keep that handy as well. Always good to file your return in time, but if you're late, this basic checklist could help you.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBCTV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
NTPC is among the top Nifty gainers today. The company guides for strong capacity target addition and strong capex till FY32 post robust first quarter earnings. Brokerage is positive on the stock.
Colgate-Palmolive surge is reacting to a stellar set of quarterly numbers that were a beat across parameters. The company also witnessed continued demand pickup in rural markets.
Pfizer climbs nearly 3% after the company reported its quarterly numbers. The net profit climbed over 60% year-on-year as the margins expanded nearly 1,000 basis points.
Jindal saw zooms after reporting a good set of numbers in the past quarter. The revenues are up by close to 12% on a year-on-year basis. The profitability as well surges 70% year-on-year.
Idea Forge slips more than 10% after a poor quarterly performance. The company reported 11% decline in revenue from operations on a year-on-year basis, whereas the EBITDA saw a sharp contraction. The margins came down from 29% to 4%.
Hello and welcome to Chartbusters. I'm Nigel D'Souza. Joining me as always, Mangala Malu. And as you see at the top of the screen, well, all the indices have moved into the green. This morning we started off in the red, but in fact that buy on dips does continue. The Nifty doing well, the Nifty Bank up close to around 200 points, and Mangalam, the breadth of the market as well. No worries whatsoever.
No worries whatsoever. And whatever the stocks which are moving today, you know, they're backed by earnings.
Yeah.
Either way, the move on the way up or on the way down have earnings as their reason. And that's how market should be, right? So good going for the markets. We've seen a recovery from the lows and the broader markets doing well as well with earnings in focus. So let's talk about those earnings itself. Kalpataru Projects, that clocked in a weakish first quarter performance as we had seen in the sector itself marred by higher heat waves and disruptions due to elections, etc. We have Amit Uplenchwar, who's the director of Kalpataru Projects International, joining in to discuss the numbers in details. Thanks a lot, Amit, for joining in. The first quarter, you did see profits decline by 19%. Revenue grew just about 8%, as against your own expectations for the full year, upwards of 20%. Now that we're in the middle of the second quarter, I wanted to know if you've seen any recovery in the pace of execution. If you could give us a sense of whether you will continue to maintain your 20% growth guidance for the full year.
So first of all, 100% we are confident that we will maintain our guidance of growth for the entire year. You made my job easier. Yes, the first quarter was exceptional with extreme heat waves and severe crisis of labor at most of our project sites. And that was because of a very long 5-phase election. And as you know, most of them are only starting to come back now. And already we can see the pace of activity picking up. So I'm not overtly worried about a little drop. That was because of less revenue than we had thought. And one of our sectors, which is water, which is primarily government, had a revenue shortfall, which was a one-time event. But I think we'll pick that up in Q3, Q4. So we're pretty confident at the end of the year we should maintain the growth guidance of 20% for the full year.
Got it. All right. Hi, Amit. Good morning and good to see you in. This is Nigel on this side. So revenue growth, you're saying no worries on that front. What about margins? Earlier you had guided from 8 to around 8.5%. Do you think you should be working with that number for the year? And also, if you could give us, what is the order inflow target that you have for the current fiscal?
Yeah. So Nigel, we had always guided that we will do a PBT of between 4.5% to 5%. And if you look at a standalone basis, we are at 4.4% with our PBT for the first quarter. And as I mentioned, we had some of our divisions like water, which are heavily government dependent, couldn't do the revenue as they had anticipated earlier. And I think as in Q3, Q4 that picks up, we are very confident that our overall guidance for the full year of PBT on a standalone basis of 4.5% to 5% will be maintained at the end. So far as EBITDA is concerned, it's practical for us to, we've been always saying that you should track our PBT percentages, whilst EBITDA will be in the range of 8.5% to 9%. We look at our PBT guidance for the full year at 4.5%, 5%, and we are pretty sure we'll maintain that.
And you're going to give us the order inflow as well. I think your order book is at around 57,000 crores, I think. And there is an L1 position of around 50,000 crores. You could give us the updated numbers and what's the inflow target for the year?
So we have an L1, Nigel, this little correction of around 5,000 crores.
5,000 crores, apologies.
We are talking about an overall yearly guidance now that we have clarity post elections of close to 22 to 23,000 crores for the full year. We've done well in the first quarter, and as of date, our inflow of orders is close to 7,000 crores already, and with some L1s, like you mentioned, of 5,000 crores. So we are confident we should be able to do 22 to 23,000 crores at the end of the fiscal.
Are you under-promising here? Because, the first quarter itself, you've done 7,000 crores, and this was marked by a lot of disruptions, like you pointed out earlier as well. You are L1 in 5,000 crores. Together itself, that makes about 12,000 crores. Last year, you did close to 30,000 crores in terms of inflows. So 22 to 23,000 crores as against what you did last year and a couple of years ago as well, one would assume that you are under-promising out here. Could you give us a sense of how this 22, 23,000 crore order wins would be spread across all your segments and what's realistic here?
So if you look at 22, 23,000 crores construct, last year was an exceptional year because we had, as you are aware, from 1st April last year, we transitioned to a merged entity. And it's moving our profile to more EPC projects in nature as against in our yesteryears, wherein the first, 20% of the project duration generally is the engineering phase. And we still continue to grow with 20% year on year in terms of our top line growth. And I think what we are focused being Kalpataru is not just top line, but also bottom line, resource augmentation, management and delivery capability, and ensuring we always deliver our PBT percentages as promised. So I think 22, 23,000 looks like a fair number, given that we have already a very strong order book in position. We are ensuring that, next year and this year, we continue to increase on our margin profile even further. And we believe that this should be a fair number for us to work with, because at the end, what is most important is not just winning orders, but delivering them also to all parameters.
Correct. All right. Very well put, Amit. What about the net working capital days? That's moved up, I think, by around 20 days or so, at around 120 days plus. Tell us, where does this number settle down at? And also the debt numbers, you're very comfortable over there?
So our net working capital, of course, for, after a long time is at a number of 122 days, as you mentioned. We will, at the end of the year, get our working capital days back to below 100, where we've always been. This first quarter, like we said, our revenue could have been more, given the fact that we had elections and there was a slowdown in general. But I think as our order execution picks up steam Q3, Q4, we should be able to come less than 100 days of net working capital at the end of the financial year. So far as debt is concerned, yes. Again, we had some of our inflows from clients which are primarily in government because of capital allocation being delayed. And we are already seeing that change in July and progressively in August and Q3, Q4. So I think that debt number, which went up this Q1, should come down to our regular levels, where our interest cost as a percentage of revenue should be at around 2% at the end of the year.
Right, that makes sense. Final question then. Promoters pared their stake by about 5% in the last month. What's the plan here? Are they looking to pare some more? Because as I see, 33% of the promoters' stake is pledged as well. So what's the plan on depledging that?
So I think if you look at our current YTD pledge numbers for promoters have already come down below 30%. And I think they are just short of 29%, which is one of the lowest that it has been for a very, very long period of time. There was also some of the debt that was repaid as a part of the overall pledge reduction. So going forward from what we are given to understand, I do not see any more pairing of debt happening, at least in the near pairing of percentage shareholding happening in the near term. And so far as pledge is concerned, as you can see from 31st March 24 levels, it has already come down below 30%. And I think that is the only trend that will continue going forward. I don't see, at least in the immediate term, any pledge percentages going up from where they stand currently today.
Okay, all right, Amit, thanks a lot for joining in. It was a bit of a soft quarter, but as you mentioned, a whole host of one-offs, elections, heat wave, and labor shortage as well, but sounding extremely confident about the remainder of this year. Could explain why the stock is only down 1.5% or thereabouts. Well, time to get you some ideas of profit in our special segment from Money Control Pro. Sachin Pal of moneycontrol.com joins us to talk about a stock that is tracking closely. Sachin?
The stock in focus is Apex Frozen Foods, which is one of the largest producers and exporters of frozen shrimp in the country, catering largely to the European as well as the US markets. The financial performance of the business has been quite disappointing of late due to intensive competitive intensity in the international markets. Oversupply of frozen shrimp, especially from the Equator region, has had a negative impact on the realizations as well as the volumes of the company in FY24, and therefore the revenues in FY24 were down compared to last year. Also, the margins were under pressure due to similar reasons. However, things are shaping up for the business, primarily due to the announcement with respect to the budget which the company stands to benefit from. The government has in fact allocated 20,000 crores for the development of the overall marine as well as the aquaculture sector. And also there have been some certain exemptions in terms of the cost of raw materials such as shrimp feed and other raw materials, which should make the business more competitive from a cost standpoint. Therefore, overall cost competitiveness of the domestic shrimp producers would be enhanced with respect to the international players. And Apex Frozen Foods, being one of the largest players in the country, certainly stands to benefit from these developments. The business also enjoys very robust fundamentals, and therefore investors can look forward to acquiring the stock gradually from a long-term standpoint.
All right, take a short break. Come back on the other side. We'll get you more on the market, stock-specific action, get in a couple of managements as well. Stay tuned to Chartbusters.
Way to celebrate our own 25th year with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high. We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC TV18, embarking on a quarter century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBCTV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18, weeknights at 7 p.m.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Welcome back. Well, steel manufacturer Jai Balaji, they released a rather good set of numbers, one of the highest EBITDA margins we have ever seen, profitability as well up more than 20% on a year-on-year basis. Mr. Aditya Jajodia, who is the chairman of Jai Balaji Industries, joins us on the show to help us out with a quick analysis. Hi Aditya, good morning and always good to see you. Congratulations on a good set of numbers. I think the problem is the stock price has risen so much that the street wants even more. So explains why we're not getting a very big positive reaction on the stock price, because it's already up 7-8 times from the recent lows. Let's get to the numbers. Quarter 1 growth is in mid-teens. You're guiding for 25 to 30%, but pricing is under pressure. So what is the volume growth you're looking at, and how confident are you of revenue growth of more than 25% for this year?
See, as far as our guidance for revenue is concerned, firstly, thank you for the very nice
Good to have you.
Yeah. It's nice to see you. So as far as the guidance for the revenue growth is there, we are absolutely sticking to it, because the pricing in the value-added products in which we are making, there has not been a substantial correction. Those prices are more or less holding up, and in fact, demand is very good. And the projects which we were to execute, they're all on time. So the volume growth is also going to happen. So the guidance as far as the revenue growth was concerned, we are sticking absolutely to that.
Yeah, and what about in volume, sir?
Pricing pressure has been more on the commodity items like HR and TMT bars, etc. So it means that percentage of sales in our product portfolio is not very high as such.
Okay, Aditya, give us some numbers. You know, you highlight that ferroalloys as well as DI pipes, they are, you know, some part of that value-added products that you talk about the mix. What are the numbers you're looking at? Last year you did around 74,000 tons of ferroalloys, and I think on DI pipes you did around 2.39 lakh tons. So for this year, what is the growth you're looking at on both those two segments?
See, in this ductile iron pipes, we are looking at a production of around 4 to 4.5 lakh tons annually this year, because the major capex which has been executed, one portion of that will be operational from the month of September. So we'll get 6 months of clear-cut run of the enhanced production. Even in ferroalloys, we are looking at a volume of around 150,000 to be achieved by the end of this year.
Okay,
Right, so
and you're saying production, it'll be sales also will be more or less in line?
Yeah, absolutely. Sales will be in line because demand is robust.
So that's nearly doubling your volumes in ferroalloys over FY24 and almost doubling for the DI pipes as well. 4.5 lakh is what you're guiding for this year versus 2.39 lakh what you had done earlier. Let's talk about a couple of other parameters. Then you said value added. That's going to increase from what, 55% all the way up to 80%. Where does it stand now and when does it go to that 80% mark? What does it do to your margins?
Currently, we are around 50-55%. And by the first quarter of next year, that is by the end of this year or the first quarter next year, we'll be around 75-80%, 85% also.
All right. And what does that do to your margins? Because 17 to 18% is what you've guided for this year. And you had said that once all of this comes on board, it goes to 20%. So, I mean, is there a glide path to that 20%?
Yeah, it is the right path to 20%. So our guidance will be little conservative and muted. So I think our guidance will be in the region of 18 to 20%. So, so I think in this particular quarter itself, we have done 18.5%. And as the share of value reported goes up, this will be enhanced, but let us keep it conservative at 18 to 20%.
Okay, all right. And post this capacity coming on stream, you had told us that your revenue potential will be around 9.5 to 10,000 crores in FY27. Is that on track?
Absolutely on track.
Do you think you can do that 10,000 crores in FY27? You know, the reason I ask you this, Aditya, is because currently your market cap is 16,000 crores. You know, even if you do 10,000 crores and you do an EBITDA of close to 18%, means 1,800 crores. For a, for a steel company or with value-added focus, still you're not going to be very, very cheap, though there'll be big potential from here. So 10,000 crores, 1,800 crores, FY27. That's what you're giving us?
Absolutely. Means as far as the numbers are concerned, our guidance is for the percent. The amount you all can always, you're an analyst, I think you all can calculate better.
I think we calculated correct, right? You'll be in our camp. Yeah, because normally on our show we go for the numbers, and you're giving us those numbers, and the street is listening in. So give us some few numbers. You had taken warrants, and you've been gradually converting those warrants. Wow, it's been a great decision actually to go ahead, because your shareholding in the company as well has moved up from around 50%. You all were in troubled times, and the promoter entity has backed the entity. Now it's moved to around 65%. Once the entire conversion of shares takes place, where does the promoter holding go to? And for someone that has converted shares, got shares at much lower prices, how do you feel as an investor? The stock has already gone up 7 times. Do you keep the faith, or do you think that at some point of time you'll say, might as well take some money off the table?
See, I will answer your question in 2 parts. Number one, the promoter stake will go up to 64% after all the conversion, which has already taken place. Number 2, as far as the faith is concerned, the question of faith arose when the company was in trouble. When the company is out of the woods and when the company is doing well, expansion is going on, and we are about to be debt free. So the question of faith does not arise now. Means the question of faith was 2 years back when all this exercise was done, and when the promoters decided to infuse the capital. So as far as the faith is concerned, it is our child, it is our baby. So our faith will be eternal, obviously.
And you supported the baby at that point of time. But now as an analyst, as a financial analyst, when you're making 8 times on the same share, as a financial analyst, what do you think? Do you think at some point of time, maybe if the price goes a little higher, you'll get tempted, let's take some money off the table, book some profits as well? Or do you say, no, I have shown the faith, this is my baby, I want to hold all 65% in the company?
Exactly. That is we are not financial investors in the company. This is our own company. So we are the promoter, strategic investor in the company. So our view will never be restricted to 7 times, 8 times, 5 times, 2 times, minus whatever.
We got that.
Very, very long term.
Yeah, just one question before we let you go. You might want to hold on to the stake that you own in the company. It may not necessarily amount to 65% if you are looking for some other investors as well. Would you mind looking at some fundraising in the very near future, say 12 to 18 months?
See, as of now, the capex plans which we had announced for 1,000 crores, out of that 600 crores is already complete. And only 400 crores is pending, which we are going to complete. Our guidance is for 12 months, but we are optimistic that in the next 9 months only it will be completed. So as of now, the company has no requirement for funds. So the funds will not be raised just because the markets are good or the markets are going to be bubbly. It is not going to be because of that. Fundraising at immediately at this moment of time, since the company does not require the funds, we have no immediate plans to raise the funds.
Got
As
it.
and when in the near future, अगर एक साल बाद requirement हुआ, 2 साल requirement हुआ, तो फिर उसमें call लिया जाएगा. As per the
And
situation.
at that point of time, we'll be waiting to interview you yet again and find out what is your vision for now. That baby you took care of, it's done very, very well. But the outlook from here on is going to be tracked because, as I mentioned earlier, it's not a small company any longer. The market capitalization is $2 billion. Appreciate you joining in, Aditya, and fielding all our questions. We look forward to having a chat with you at the end of the coming quarter as well. The stock price, well, in the last 1 month is up only around 5%. But if you look at it in the last 1 year, the stock has gone from around 150 rupees all the way to around 900 rupees. Though in the last 3 to 4 months, it's come off from around that 1200 rupee odd mark. Well, time to slip into a short break. Come back, continue our focus on markets and stock-specific action. Don't go anywhere.
On the go with CNBC TV18, now streaming live 24/7 on YouTube.
Well, big news is shaking up the world of Chennai Super Kings as Ultratech has bought out India Cements. Let's break this down for you. First, CSK was demerged from India Cements in 2015. Now, both entities are owned by Mr. Srinivasan and team, but there's a difference. India Cements is listed on the bourses, while CSK is available in the unlisted market. And while CSK as well as India Cements, both of them share a common promoter, India Cements doesn't directly own CSK. So Ultratech buying out India Cements doesn't directly impact CSK, but there are some indirect effects. Let's run that down for you. Firstly, CSK had loaned 180 crore rupees to India Cements. And since India Cements was leveraged, there was this fear that CSK might need to further support it. That concern now disappears post the Ultratech deal. Secondly, India Cements promoters held around 28.4% stake, with 47.5% stake was pledged. Now, post the Ultratech deal, the financial health of the promoter will improve significantly, and this pledge will be released. Now, this in turn would mean the promoters will have the resources as well as the focus to dedicate to CSK. In the unlisted market, CSK shares are priced at around 175 rupees. That means a derived market capitalization of roughly around 5,400 crore rupees. Investors are eagerly watching and waiting. What plans does the promoter have next? Either they go ahead and list CSK, or maybe possibly selling out the franchise. Well, time will tell.
And clearly there was never an intention to show disrespect to any religious group. On the contrary, I think that Thomas Joly really tried to really intend to celebrate community tolerance. That was his word yesterday. And looking at the result of the polls that we shared, we believe that this ambition was achieved. If people have taken any offense, we are of course really sorry.
Blocking of the videos from the organizers' side, there've been some reports on blocking.
It was a ceremony like no other, and those are games like no other. I think that our hosts, it's easy for me to say, and we should all be grateful and thankful, they have put together a vision for these games, which is unprecedented. It's an incredible vision for a games. We're trying to showcase that in the best possible way.
Justement, de choses peut-être qui n'ont pas été, que vous aviez prévues dans l'équipe, qui n'ont pas été réalisées.
Welcome back. Well, the markets are bursting away as we speak, so it's a big up move is what we're seeing from the lows of the day. We're up 150 points, and what's doing well on the headline index is HDFC Life. That was down 2% at the start of trade. We explained this in the past week on Editors Roundtable as well, that valuations are supportive. The insurance part of the market was one of the big underperformers, and no shocker coming from the budget. So that's why the insurance stocks are running along. HDFC Bank, that's the heavier weight in there from the same group. That one is powering away, and ICICI Bank as well. And out of nowhere, the Nifty Bank is now up 275 points. So big up move is what we're seeing. But that's it from Mangalam and myself and the entire team that put the show together. You stay with us. Trading Hour comes up next.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBCTV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
new milestone.
Welcome back. Well, let's talk about the impact that the recent tax changes that have been announced in the budget by the finance minister. What is the impact that they are having on corporates? Well, several companies have already rushed to the street with perhaps buybacks on the horizon. Hormaz is here to take us through what has happened so far. Hormaz.
There is a rush of buybacks on Dalal Street. Now, call it coincidence or just an action and reaction. As many as 7 buyback proposals have either been announced or are to be announced in the next few days. Now, there may be a trigger behind this rush as well. Now, the Finance Minister, Nirmala Sitharaman, in her budget speech last Tuesday, which was the 23rd of July, proposed that the income received via share buybacks will now be taxed at the hands of the shareholder instead of the company, now similar to how dividends are taxed. Now, some market participants worried that such a move may be counterproductive for the industry altogether. But let's take a look at some of the upcoming announcements that were announced post the budget speech. Now, Indus Towers' board meets as early as today. Now, this will be their first share buyback in 8 years. Now, in news just came in, TTK Prestige will consider its buyback proposal on the 2nd of August. Savita Oil on the 3rd of August, Serra Sanitary Ware on the 3rd of August, on the 5th of August, and AIA Engineering on the 7th of August. Aurobindo Pharma, whose buyback was approved before the budget announcement, had its record date, now which is in today's trading session. Now, Wellspun Living also announced its share buyback last week after the budget, and the record date for that has been fixed as the 5th of August. Now, this sudden rush of buybacks has put the spotlight on India's IT companies who are regular announcers or executors of buybacks to reward their shareholders. Now, the SEBI regulation mandates that there needs to be a cool-off period of at least 365 days between 2 buybacks. Now, let's take a look at how these IT companies are placed as of date. TCS, India's largest IT services company, carried out a buyback as early as last year. Now, can it announce another one before the 1st of October, which is when these changes kick in? Well, no, it can't. And that is because the board approval for the previous buyback came on the 20th of October 2023, which means that it will have to wait at least until 20th of October 2024 to seek an approval for another buyback. Now, Infosys also carried out a buyback last year, but unlike TCS, it is eligible to carry out a buyback as its previous one ended in February of last year, meaning that the 12-month cool-off period has passed. HCL Tech has not carried out a buyback since 2018. It can do so now if need be. Wipro too is eligible for announcing a buyback as its previous one closed in June of 2023. Now, Tech Mahindra too has not done a buyback in 5 years, while LTI Mindtree has not done one to begin with. So these two are also eligible for the same. Now, besides these IT companies, there are many others on the last street that regularly carry out share buybacks. I'm highlighting 3 of them here. Ajanta Pharma is the first one. Now, in the last 5 years, the company has carried out buybacks in 2019, 22, 23, and last year as well. But it cannot announce a new one recently, and it will have to wait until May of 2025 to announce another buyback. India Mart is the other one, and that has also been rewarding shareholders either via bonuses or buybacks. And this company has also done buybacks in 22 and 23. Now, the board approval for the last one came in July of 23, so now it is eligible to announce a new one since the 1-year period has passed. And lastly, Aarti Drugs, which carried out buybacks in 2016, 18, 19, 21, and 23 as well. And similar to India Mart, even they got a board approval on the 21st of July, which makes it eligible for a fresh one. So this is summarizing the recent spate of buybacks on Dalal Street. Now, it remains to be seen whether more companies join this buyback bandwagon.
Okay, thank you very much for that interesting analysis. With that, we're going to wrap up on Trading Hour from the entire team. Thank you for watching.
On Dalal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high. We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBCTV18, embarking on a quarter-century of excellence.
Kamala.
Hello. Hi.
Hey there.
Oh, hi, you're both together. Oh, it's good to hear you both.
I can't have this phone call without saying to my girl Kamala, I am proud of you. This is going to be historic.
We called to say Michelle and I couldn't be prouder to endorse you and to do everything we can to get you through this election and into the Oval Office.
Oh my goodness. Michelle, Brock, this means so much to me. I am looking forward to doing this with the two of you, Doug and I both, and getting out there, being on the road. But most of all, I just want to tell you the words you have spoken and the friendship that you have given over all these years mean more than I can express. So thank you both. It means so much. And we're going to have some fun with this too, aren't we?
Hours following Biden's exit, the most for a single day in the 2024 campaign trail. Vice President Kamala Harris hit the ground running with the launch of her 2024 presidential campaign on Sunday.
Where else do you believe there is a strategic consideration that the government must consider, and where do you believe that the government could look at a much more commercial consideration and take the step forward as far as disinvestment is concerned, or is that not an expectation?
There are many areas where a commercial consideration could lead to privatization or disinvestment, and I'm, as my colleague Mr. Pandey has repeatedly been saying, they are not off the table at all. But it's one thing to say, this year I'm going to sell company X, and then the whole market waits for us to dump X and starts acting in anticipation, versus saying that I'm an investor. I have a portfolio of securities that I own. Some I'll continue to be majority owner in. Some I'll continue to be minority owner in. Some I'll dilute my majority stake. Some I will do nothing and collect dividends. And some I'll hold until they are repaired. And we take a pragmatic and maybe even opportunistic view of what to do with each of these. That is the new approach. But you will see disinvestments happening. They'll happen not perhaps to a declared pre-announced calendar, but you will still see them happening, is our both expectation and policy.
Stocks climb up after the dip in the last session, with mid-caps leading the charge. Utilities and energy lead gains, while IT is the soft spot.
Power Grid ups its FY25 capex target to 18,000 crores from 15,000 crore and charts an aggressive path ahead all the way up to FY32. NTPC2 stays on track to 26 gigawatts by 2032, lists its green business and eyes double-digit profit growth ahead. Both stocks jump.
Colgate-Palmolive India regains its sparkle, with toothpaste volume growth far exceeding expectations on the back of a pickup in rural demand, and profitability too seeing an improvement. The stock is shining in today's trade.
PCBL and CESE leap after Group Chief Sanjeev Goenka lays out the growth path ahead in an exclusive conversation with CNBCTV18. A weak performance hurts Idea Forge Technology, while a strong show powers up Jindal SAW. Well, it's another day of a big move that we're seeing from the lows. That's been the texture of the market. Every dip has been lapped up by the bulls, starting from last Friday itself, where the Nifty moved over 400 points. I'm Mangalam Malu. With me is Hormas Vatakia. We're watching half-time report. At halfway to the trading session, it looks like an all-green screen on top. The question, once again, will that 25,000 mark come today? Yesterday, we were very close, just 0.25 points away, Hormas. again, that question remains.
That question remains, and this is what the street is also watching out for. It's been a good recovery from the lows of the day at least, and the Nifty now back. It made a high of around 24,950, so we are still continuing to hover around those levels. So that is a good recovery that we have seen on the index. We're looking forward to that 25,000 mark. And what is leading the recovery though? The banking stocks are not performing. The Nifty Bank though is up 0.6%. The PSU banks are seeing some bit of sluggish moves today after the move that it saw yesterday. The Nifty Bank now nearing 51,700. The PSU Bank index has cooled off from the highs of the day, but earnings reactions are aplenty, and there are certain stocks that have had a very good reaction to their results. Colgate is one of them. Idea Forge is the other one that has seen a reaction on the opposite end of the spectrum after a disappointing set of numbers. Colgate is up almost 6% now. We'll talk about that in just a bit. Idea Forge now down 11% as we speak. Now 770 on the stock is Idea Forge. So pull up TTK Prestige as well. There was news that came in just a few minutes earlier, and that was on the back of the fact that the board is going to meet on the 2nd of August to consider a buyback of shares. And the last time they had considered considered a buyback was back in 2017. So 4.5% higher there. That spike that has come in on TTK Prestige is on the back of that announcement. But we spoke about Colgate just a while ago, and the stock has surged post delivering a strong set of first quarter numbers. Now, Mangalam, tell us more. How were the numbers and what's causing this spike?
Well, the company had about a couple of years ago laid down its 4-point strategy, which is one, increase the penetration of toothpaste across the country, increase the usage frequency. At the same time, for those who are already using it as per prescribed norms, they should premiumize, so buy better stuff. And then, the replacement cycle of all the other things that are associated with toothpaste, which is toothbrushes, accessories, etc. All of that, and finally, grow the Palmolive vertical as well. All those 4 things are now bearing fruition for Colgate itself. So if you just take a look at the overall revenue growth of the company this time around, 13% is what they've reported, much ahead of what the street was anticipating as well. EBITDA on the back of that has grown by about 21.5%. Margins have improved by 240 basis points. Net profit 33%. So this makes it the result of the season so far in the FMCG sector, because low teens revenue growth, no company has been posting that yet. And that is led by high single-digit volume growth in toothpaste versus expected 2 to 3% growth. Remember, this category itself grows at around 4 to 5%. So in that high single-digit volume growth implies that, one, being the leader, they've gained market share and they've grown much faster than all the other players as well. The more important part is that brokerages which have already been positive, continue to be positive. The stock has done extremely well in the last 2 years or so. It's doubled. In the last 1 year itself, it's gained almost 70-odd%. Jefferies has upgraded their EPS estimates by 6%, making it the 3rd straight quarter of upgrades. They've increased their target price as well. But because of this outperformance of the stock, valuations at around 50 times FY26 earnings, not particularly cheap, and that's something that worries someone like an ICICI Securities as well. So they have a hold rating on the stock, but the bigger worry is that if the company continues to increase prices, then maybe there could be some market share loss towards naturals itself. Whether that happens or not is something that we'll monitor. And finally, we have a note coming in from Bank of America. They have an underperform rating, but even then, the internals look like, they've raised their target price from 26.60 to 31.75. They've actually increased their forward multiple as well by 20% as against what it was over the last 5 years. But they still believe that medium-term upside potential is factored in by the valuations. What is it that can take the stock higher from here? I believe continued outperformance. Secondly, any sort of inorganic plan that the company does that could again, lead to faster growth than what the street is factoring. And the third one, Palmolive. The company has been backing Palmolive to grow faster, 2 times the average size of the industry or the average company growth rate itself. If they can do that and consistently do that, then it becomes a significant chunk and a revenue driver as well. The stock 65% higher at a record high today. Let's see where it goes from here.
Shining green, if we can say that, for
pearly whites.
Pearly whites and shining green on the stock, almost 6% higher than Colgate. The top gainer on the Nifty Next 50 index as well is Colgate-Palmolive, 6% higher at 3,400 almost. But the other one that's shining bright in today's session is PCBL, and that is after Sanjeev Goenka, the chairman of the RP Sanjeev Goenka Group, while speaking to CNBC TV18 exclusively, said that the profitability of PCBL should see a rise of 5x in the next 5 years. In our special segment, Insight Edge. Sonal is here to get us more details. Sonal, what's the edge that you have for us?
Well, let's just try and understand about the company first. Of course, it is the largest producer of carbon black in the country and has consistently been doing well. The stock is up 12% right now, but if you look at the financials, that has seen a substantial growth as well. From levels of 3,244 crore rupees as per FY20 revenues. Now FY24 saw revenues of around 6,500 crore rupees. Margins have improved from 14% to 16%. They did see levels of 19%, but that was because of a lot of commodity pricing as well that we saw going higher. Profits have gone from around 288 crore rupees to almost 500 crore rupees now. So this has been a continuous outperformer in terms of numbers. The revenue breakup, 91% is standard products, only 9% is specialty products. And company post Q4 did indicate that PCBL will need to add 80,000 to 100,000 tons per annum of capacity. And Asian countries such as Indonesia and Vietnam are the key export markets. But debt continued to be a big problem, which stands at 800 crore rupees. But the company spoke to us yesterday. They spoke about how they are big on expansion plans, and the biggest one will happen in their chemical segment. Margins can go up to 17 to 18% from current 16%. They will be expanding in chemicals business through acquisitions as well, and they'll be back integrating into yellow phosphorus. They'll be investing in oil and gas chemicals. More capacities will be added globally, and cathode chemistries will be seen as well in the EV battery business. And over the next 5 years, they will see profit after tax growing by 5 times, and that is something that the street seems to like. In fact, let's listen into what the management had to tell us earlier.
PCBL will grow in rubber blacks, but more importantly in specialty blacks, so where your margins become much higher. In rubber blacks you make X%, in specialities you make X plus so much, and that's the reason for the 14% going to 16. The 16 would actually probably go up to about 17, 18 as we go along. But more importantly, or as importantly, we will be expanding in chemicals through our acquisition Aquafarm. So we will be expanding in phosphonates in terms of capacity. We will be back integrating into yellow phosphorus. We will expand in the oil and gas chemicals. So we are going to revamp our manufacturing facility in Texas. We are going to add a manufacturing facility in addition to our blending facility in Riyadh. And we are going to start this whole thing on green chelates, which is biodegradable product that goes into the granules that go into the detergents industry.
Okay.
And so there are not many players in the world who do this. So we will be one of the 2 or 3. And in addition to this, we are getting into the cathode chemistry for the EV batteries. I would expect to see over the next 5 years at least a 5 times growth.
A 5 times growth from
5 times growth from what it was, 490. I would expect it to be at the 490 translating into between 2,400 and 2,500.
Sanjeev Goenka there, PCBL 12% higher, nearing a record high. The record high, the earlier one is 343.5. Today's high is 343.45. So just like the Nifty, the PCBL stock also falling short just by a whisker, but it still has almost half the day to try another attempt at making this record high, 12% higher for PCBL. Now moving on then, NTPC and Power Grid are also surging in today's trade, post positive commentary coming in at their analyst meet. Vivek is here with the key takeaways. Vivek, tell us more.
Well, both NTPC and Power Grid at least at fresh 52-week highs. So, post the results that transpired over the weekend, yesterday, both of the companies held analyst meets where they went ahead and gave the guidance in terms of NTPC. The company gave the guidance in terms of the capacity addition that they have planned across the various forms of energy that they are looking to add. And Power Grid, shared both its capex as well as capitalization guidance. Now, talking about NTPC, India will add close to 80 gigawatt of thermal capacity by 2032. NTPC will add close to 26 gigawatt out of the total 80 gigawatt. Between FY25 to FY32, planned capex that the company has is close to 7 trillion rupees, that is 7 lakh crore. targeting thermal capacity addition of 26 gigawatt, like I just mentioned, targeting renewable capacity addition that's very aggressive of close to 60 gigawatt. Targeted commissioning in FY25 this year, what the company has indicated is that thermal, they will add close to 2 to 2.5 gigawatt, and pump hydro, they will add close to 1 gigawatt. Regulated equity, the company says, will see double-digit growth over the next few years. No wonder then, brokerages are quite bullish. Jefferies continues to retain a buy stance. Target price raised to 485 rupees a share. CLSA continues to have an outperform rating with a target price of close to 441. Now, coming to Power Grid, the last couple of years, company on the back of very strong transmission prospects has gone ahead and significantly raised the capex as well as capitalization guidance. So, capex trends, FY24, company ended up doing a capex of close to 12,500 crore versus a guidance of just around 8,800 crore. This year too, in Q1 itself, they've gone ahead and increased or upped the capex to 18,000 crore versus a guidance that they had earlier given of close to 15,000 crore. FY26, FY27, 25 and 30,000 crore is what they have.
All right, Vivek, thanks a lot for that. Meanwhile, as you can see on your screen, it's Prime Minister Modi attending the inaugural session of the CII post-budget conference of Journey Towards Vikasit Bharat. So we can see, the Prime Minister addressing, all the members of the CII, addressing the investor community, the industry, and speaking post-budget and giving his thoughts. So our team will be listening into that as we, go into a short break. And if there is important announcements that are made by the Prime Minister, we'll obviously dip back into it. But as of now, you can see the inaugural, a post-budget CII summit, which is taking place, where the Prime Minister has attended. And as we speak, we have numbers as well.
Numbers coming in, numbers coming in from First Source. Profit is up 1% to around 135 crores. The stock is seeing a bit of a spike of almost 2% higher. More numbers than the profitability figure. The profit is absolutely flat on a sequential basis for First Source Solutions. We'll get more details on the other side, but time for a short break here on Halftime Report. Up next, we get in touch with Arun K. Chittilapilli, the Managing Director of Wonderla Holidays, to discuss their quarter gone by. Stay tuned, back on the other side.
This budget has a clear direction. The kind of a strong support government had provided over the past 4 years has helped the economy. And what this budget commits, that significant support, our endeavor would be, government endeavor would be, keep continuing providing that support.
So around this 3.5% of GDP?
That is a very high level. For decades we have never been there.
Yes.
And so the idea is that there are two other imperatives come in. The other priority needs and fiscal consolidation. So it has to be done. There are
so you're
the trinity which has to be taken care. The other two pieces, and who else have to do the heavy lifting? Government of India has now reached to a level which are the maximum it can sustain proportion to GDP. Second is states as a whole are spending about 2.5% of the GDP or their GSDP in capex. The quality of expenditure has to improve there in terms of infrastructure project itself.
So what would a realistic number be then to have as far as government capex going forward, if you believe that this is the most or the maximum that the government can do?
So look at this manner, that where we are at this point of time, that in terms of the fiscal deficit is 4.9 this year. That's what we expect to do. Next year 4.5. And that's not the end of the fiscal consolidation. We have to keep on going less, of course, with the different metrics of a debt to GDP ratio. If we are talking about 3% plus to go to capital expenditure, we are still, there are expenditure which are on the revenue side, and there also there are fair amount of expenditure, not just on education, health, which are very, very important and will find full attention of the government, but also Government of India provides grants to others to do capital expenditure. It provides to state governments of the order of perhaps about 3 lakh crore plus. Though in our books, meaning Government of India books, there is still revenue expenditure. So keeping it at 3% plus, now it has reached to 3.4%, moving forward, if on a nominal basis that can be maintained, that will be a good achievement.
We are very close to the due date of filing income tax returns, and if you're not done with it yet, let's tell you all that you need to know at the last minute for filing your return. Income tax return documents differ as per the earning sources of the tax filer, but certain documents are mandatory for every taxpayer irrespective of the income source. So let's talk about them first. PAN and Aadhaar number are the basics, of course, that is something you can't do without. But the other ones, Form 26AS, this gives you details of all the details of the taxes paid during a financial year on any transaction. This would include both TDS and TCS deducted. Second is the Annual Information Statement or the AIS. This is more detailed version of 26AS and gives you transaction-wise details and also includes details of interest from fixed deposits and savings bank account as well. Also details of any shares sold. How do you get these two documents? Log into your account on Income Tax website and then go to the e-file tab to view Form 26AS and Services tab to get your AIS. Now for the other income, that is capital gains, you will need to pay taxes. You can get the details of the capital gains that you have earned on sale of mutual funds or shares from your
Welcome back. In an otherwise strong market, what is the one stock which is underperforming in today's trading session? It is Wonderla Holidays, down about 5%. Yesterday also was a weak session, and that's largely because the first quarter was impacted by severe heat wave. There were elections, etc., as a result of which there were a fair amount of disruptions in their parks, and water shortage in Bengaluru aided to the weakness that we overall saw. So this year, in the first quarter, footfalls were at 10 lakh as against 11 lakh the same time last year. Footfalls for the entire year in FY24 were 32.5 lakh. Let's see where this goes, because lower footfall meant 6% lower revenue, EBITDA down by 22% and net profit down by 25% as well. We do have with us Arun Chittilapalli, the Managing Director of the company, to detail those earnings that went by. Thank you, Arun, for joining in. Understandably, the first quarter was impacted by all these factors that I just mentioned. The question is that in the second quarter so far, how have footfalls recovered? And do you maintain your 5% footfall growth guidance and 8 to 12% ARPU guidance for the entire year?
Thanks for having me on the show, Mangalam. A pleasure as always. Yes, this quarter one was extremely challenging for us because, as you guys already know, it's been very bad weather scenarios for us during the first week of April and the second week of April. And we kind of never really recovered from those footfalls. But I think going forward, we should be able to recover some of those footfalls. And the hope is that we still be able to do a minor growth for this financial year. We are not expecting...
Arun, Yep, I apologize. We'll have to ask you to wait a little bit because Prime Minister Narendra Modi is speaking at the inaugural session of the CII post-budget conference. Let's hear him out.
रिसोर्स इन्वेस्टमेंट का सबसे बड़ा प्रोडक्टिव माध्यम कहा जाता है और उसका आंकड़ा बहुत ही इंटरेस्टिंग है। 2004 जब अटल जी की सरकार गई, 2004 में यूपीए सरकार की शुरुआत हुई और यूपीए सरकार के पहले बजट में कैपिटल एक्सपेंडिचर करीब 90,000 करोड़ रुपए था, 90,000 करोड़ रुपीस। 10 साल सरकार चलाने के बाद यानी 2014 में यूपीए सरकार का 10वां वर्ष था। अपने कैपिटल एक्सपेंडिचर का बजट 2 लाख करोड़ रुपए 2 लाख करोड़ रुपए तक पहुंचा पाई थी, यानी 90,000 से 2 लाख करोड़। और आज कैपेक्स 11 लाख करोड़ रुपए से भी ज्यादा है। यानी 2004 टू 2014 के 10th ईयर में कैपेक्स किसी तरह दुगुने पर पहुंचा था, जबकि हमारी सरकार में कैपेक्स 5 गुना ज्यादा से बढ़ा है। और आप अलग अलग सेक्टर्स को देखेंगे तो भी आपको सटीक अंदाजा मिलेगा कि आज भारत किस तरह हर सेक्टर की इकोनॉमी पर फोकस कर रहा है। पहले की सरकार के 10 साल की तुलना में हमारी सरकार ने रेलवे का बजट 8 गुना बढ़ाया है, हाईवेज का बजट 8 गुना बढ़ाया है, एग्रीकल्चर का बजट 4 गुना से ज्यादा बढ़ाया है और डिफेंस का बजट 2 गुने से अधिक बढ़ाया है। और साथियों, हर सेक्टर में बजट में ये रिकॉर्ड बढ़ोतरी और साथ साथ टैक्स में रिकॉर्ड कटौती करने के बाद की गई है। 2014 में 1 करोड़ रुपए कमाने वाली एमएसएमईज को प्रिजम्पटिव टैक्स देना होता था, 1 करोड़। अब 3 करोड़ रुपए तक की आय वाली एमएसएमईज भी इसका लाभ उठा सकती है। 2014 में 50 करोड़ तक कमाने वाली एमएसएमईज को 30% टैक्स देना होता था। आज ये रेट 22% है। 2014 में कंपनियां 30% कॉर्पोरेट टैक्स देती थी, आज 400 करोड़ रुपए तक की आय वाली कंपनियों के लिए रेट 25% है। और फ्रेंड्स, बात सिर्फ बजट एलोकेशन बढ़ाने या टैक्स कम करने की नहीं है, बात गुड गवर्नेंस की भी है। मैं आपको एक उदाहरण देता हूं। अब जैसे कोई कमजोर व्यक्ति होता है जिसका वजन कम हो, लेकिन उसके शरीर में किसी बीमारी के कारण सूजन आए और पहले की तुलना में जरा कपड़े छोटे होने लग जाए, लेकिन क्या उसको हम हेल्दी कहेंगे? क्या वो तंदुरुस्त है ऐसा मानेंगे क्या? वो देखने में भले ही बहुत स्वस्थ लगे, लेकिन हकीकत में तो वो कमजोर होता ही है। 2014 से पहले के बजट का भी ऐसा ही हाल था। तब बजट में बड़ी बड़ी घोषणाएं इसलिए की जाती थी कि दिखाया जा सके कि अर्थव्यवस्था की सेहत अच्छी है, लेकिन सच्चाई ये थी कि बजट में जो घोषणाएं होती थी वो भी जमीन पर पूरी तरह नहीं उतर पाती थी। ये लोग इंफ्रास्ट्रक्चर के लिए तय की गई राशि को भी पूरी तरह खर्च नहीं कर पाते थे। जब घोषित करते थे तो हेडलाइन लेते थे, शेयर मार्केट में भी शायद थोड़ी दिखाई देता होगा। योजनाओं को तय समय पर पूरा करने पर भी पहले की सरकारों का कोई जोर नहीं था। हमने 10 वर्षों में इस स्थिति को बदला है। हमारी सरकार जिस स्पीड और स्केल इसके साथ इंफ्रास्ट्रक्चर का निर्माण कर रही है, आप सब उसके गवाह हैं। यह अभूतपूर्व है। साथियों, आज हम जिस दुनिया में रह रहे हैं वहां बहुत सारी अनिश्चितताओं से भरी हुई है और ऐसी दुनिया में भारत जैसी ग्रोथ और स्टेबिलिटी होना एक्सेप्शन है। ऐसी अनिश्चितता के समय में भी भारत के फॉरेन एक्सचेंज रिजर्व्स में अच्छी खासी वृद्धि हुई है। आज जब सारे देश लो ग्रोथ या हाई इन्फ्लेशन से जूझ रहे हैं, उन परिस्थितियों में भारत हाई ग्रोथ और लो इन्फ्लेशन वाला इकलौता देश है। इतनी बड़ी महामारी के बावजूद भारत का फिस्कल प्रूडेंस पूरी दुनिया के लिए रोल मॉडल है। ग्लोबल गुड एंड सर्विस एक्सपोर्ट में भारत का कंट्रीब्यूशन लगातार बढ़ रहा है। ग्लोबल ग्रोथ में आज भारत का शेयर 16% हो गया है। और आप ध्यान दीजिए, भारत ने ये ग्रोथ तब हासिल करके दिखाई है जब पिछले 10 साल में इकोनॉमी को झटका देने वाले अनेक संकट आए। हमारे कार्यकाल में ये भी एक मुसीबत रही। 100 साल की सबसे बड़ी पेंडेमिक, दुनिया के अलग अलग देशों में युद्ध की स्थिति, भारत में बड़ी बड़ी प्राकृतिक आपदाएं, कभी साइक्लोन, कभी सूखा, कभी भूकंप। हमने हर संकट का मुकाबला किया, हर चुनौती का समाधान किया। अगर ये संकट न आते तो भारत जहां आज पहुंचा है उससे भी कहीं अधिक ऊंचाई पर होता, और ये मेरा विश्वास, मेरे अनुभव के आधार पर मैं कह रहा हूं। साथियों, आज देश विकसित भारत के संकल्प को लेकर चल रहा है। बीते 10 वर्षों में 25 करोड़ लोग गरीबी से बाहर निकले हैं। हम देश के नागरिकों की ईज ऑफ लिविंग पर फोकस कर रहे हैं। हम देश के नागरिकों की क्वालिटी ऑफ लाइफ पर फोकस कर रहे हैं। साथियों, इंडस्ट्री 4.0 को ध्यान में रखते हुए हमारा बहुत अधिक फोकस स्किल डेवलपमेंट और एम्प्लॉयमेंट पर हमने केंद्रित किया है। आज देश के युवाओं में एक मिजाज बना है कि अपने दम पर कुछ करके दिखाना है। इसमें मुद्रा योजना हो, स्टार्टअप इंडिया अभियान हो, स्टैंड अप इंडिया हो, युवाओं की बहुत मदद कर रही है। मुद्रा योजना से लगभग मदद लेकर के 8 करोड़ से ज्यादा साथियों ने पहली बार कोई बिजनेस शुरू किया है। देश में आज करीब 1,40,000 स्टार्टअप्स हैं और इनमें लाखों युवा काम कर रहे हैं, नए नए साहस कर रहे हैं। इस बजट में भी जिस 2 लाख करोड़ रुपए के पीएम पैकेज की घोषणा हुई है, चारों तरफ उसकी वाहवाही हो रही है, खूब प्रशंसा हो रही है। इसका सीधा लाभ 4 करोड़ से अधिक युवाओं को मिलने का। ये पीएम पैकेज होलिस्टिक और कॉम्प्रिहेंसिव है। ये टुकड़ों में नहीं है, ये इंटरलिंक है, एंड टू एंड एक सॉल्यूशन है। इसका विजन स्पष्ट है। भारत की मैन पावर ग्लोबली कॉम्पिटिटिव हो, भारत का प्रोडक्ट ग्लोबली कॉम्पिटिटिव हो और सिर्फ क्वालिटी नहीं बल्कि वैल्यू की दृष्टि से भी वो कॉम्पिटिटिव हो। हमारे युवाओं की स्किल बढ़े, उनका एक्सपोजर बढ़े, उन्हें आसानी से रोजगार मिले, इसके लिए हम इंटर्नशिप स्कीम लेकर आए हैं। एम्प्लॉयमेंट जनरेशन करने वाले आप जैसे जो लोग हैं, उनको लार्ज स्केल पर इंसेंटिव मिले, इसका भी हमने ध्यान रखा है। इसलिए ही सरकार ने ईपीएफओ कंट्रीब्यूशन में इंसेंटिव की घोषणा की है। साथियों, हमारी सरकार का इंटेंट और कमिटमेंट एकदम साफ है। हमारे डायरेक्शन में कोई डायवर्जन नहीं है।
Stockbroker. This will be available online in your stockbroking account. This will give you details of all the share transactions you've done in the financial year with the amount of capital gains. Similarly, details of dividend income is also important to be considered while filing ITR, and this can be taken from the broker or demat account summary. Also, while AIs gives details of all the interest income that you have earned, always best to check it with the interest certificate you receive from banks. Again, these can be found in your net banking. This would have details of interest paid on home loans as well. Important if you have one, because that can be used to claim deduction in the ITR. This would also mean it's important to keep your home loan statement with you as well at the time of filing a tax return if you have one. Of course, for salaried individuals, Form 16 is another very important document to keep. It is for salaried individuals with details of all TDS deductions done by the employer. Disclosure of all active bank accounts are mandatory in the ITR. Bank account details like your bank name, account number, IFSC and number of accounts you hold must be quoted in the income tax return. Also, one account shall be selected as primary to assist the income tax department in refunding your tax refund by electronic transfer to such account. Also, some of the donations you have made to notified organizations, relief funds, charitable organizations that will be eligible for deduction under ATG. So keep that handy as well. Always good to file your return in time, but if you're late, this basic checklist could help you.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBCTV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology.
Welcome back. 100 points on the Nifty, 120 points to be precise, and as a result of which we are seeing some traction in all forms of the market. Perfect time to actually get you up to speed with what's taking place in the F&O end of things. Frontline indices are showing strong recovery. The Nifty is at the high point of trade, as is the Nifty Bank. Now currently just about 30, 40 points away from that 20,000 mark on this index. The good part about today's trading session is that stock-specific moves have all been on the back of results as against anything else, and that's the sign of a healthy market. So 6% up move on Colgate, NTPC, the broader markets as well. Idea Forge down on account of poor numbers. We have Jindal Saw up on account of good numbers as well. It's Nifty Financial Services expiry today. It is 50 points away from 23,500 and 50 points away from 23,400 as well. So those are the options, or those are the markers which are extremely crucial to watch out for. For the Nifty, there has been a fair amount of short covering at the 25,000 call, telling you that maybe in the second half of today itself, 25,000 might happen. The call writers have started to unwind their positions, and the 25,000 put writers have begun to write positions. So at a premium of almost 120, that tells you that today's low is an extremely crucial support. Closer to 24,900 is where you will find support on the frontline index. 25,000 looks like it may happen in the second half of trade today. A lot of long positions added on names like IOC, HPCL, BPCL, the oil marketing companies, and a fair amount of short covering which is taking place in names like Crompton as well. We'll keep an eye out on all of that, but it looks like 25,000 would be here in the second half.
We'll all hope for that. We hoped for that yesterday as well, and we all know what happened after that. But hope is always the key. But Mangalam, thanks for that F&O update. Time for a short break. On the other side, Ravikant Jaipuria, the chairman of Varun Beverages, will be with us to discuss the quarter gone by and the road ahead for the company. Stay tuned. Back on the other side.
Has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the
Today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC TV18 embarking on a quarter century of excellence.
Kamala.
Hello. Hi.
Hey there.
Oh, hi, you're both together. Oh, it's good to hear you both.
I can't have this phone call without saying to my girl Kamala, I am proud of you. This is going to be historic.
We called to say Michelle and I couldn't be prouder to endorse you and to do everything we can to get you through this election and into the Oval Office.
Oh my goodness. Michelle, Barack, this means so much to me. I am looking forward to doing this with the two of you, Doug and I both, and getting out there, being on the road. But most of all, I just want to tell you the words you have spoken and the friendship that you have given over all these years mean more than I can express. So thank you both. It means so much. And we're going to have some fun with this too, aren't we?
Hours following Biden's exit, the most for a single day in the 2024 campaign trail. Vice President Kamala Harris hit the ground running with the launch of her 2024 presidential campaign on Sunday.
Where else do you believe there is a strategic consideration that the government must consider, and where do you believe that the government could look at a much more commercial consideration and take the step forward as far as disinvestment is concerned, or is that not an expectation?
There are many areas where...
Stocks climb up after the dip in the last session, with mid-caps leading the charge today. Utilities and energy lead the gains, while IT is the soft spot in the market.
Power Grid ups its FY25 capex guidance to 18,000 crore from 15,000 crore earlier and charts an aggressive path ahead. NTPC, on the other hand, stays on track to add 26 gigawatt by 2032 and list its green business and eyes double-digit profit growth ahead. Both stocks are jumping in today's session.
Colgate-Palmolive India regains its sparkle, with toothpaste volume growth far exceeding the expectations on the back of a pickup in rural demand, and profitability too seeing an improvement. The stock shines today.
PCBL and CESC leap after Group Chief Sanjeev Goenka lays out the growth path ahead in an exclusive interaction with CNBCTV18. But a weak performance hurts Idea Forge Technologies, while a strong show powers up Jindal SAW.
Prime Minister Narendra Modi in his post-budget CII meet pledges that India will become the third largest economy in the world in his third term. He calls on India Inc. to work with the government towards a Vikasit Bharat. Hello and welcome. You've tuned into Business Lunch. I'm Nisha, and with me as always is Hormaz. So the market is good today, and it's the 25,000 levels waiting that has been on Hormaz. But let's take a look at the market at lunch hour at this point. And Nifty 50 with almost 0.4% gain at this particular moment at 24,930 levels. So many times it's flirted with the 25,000 levels that even the market participants are now just relaxing and just booking profits in some of the categories as well. But overall, it's a green screen today with gains of over 300 points on Sensex and Bank Nifty. That one is clearly showing a slight outperformance to the key indices, 0.6% up, and mid caps continue to gain and 0.5% up in trade. So the market picture as well as the advanced decline ratio in terms of the market breadth and the strength looks stable today. BPCL from yesterday, today again is the top Nifty gainer. Along with that, some of the other PSUs like Power Grid, NTPC, these are the ones from the PSU basket which are looking good. And some of the heavyweights like HDFC Bank is also performing very well. Hindustan Unilever, Maruti. So it's a broad-based gain that we are seeing. On the flip side, Ultratech, Cipla, Hindalco, Grasim, some of the Aditya Birla Group companies are the top losers on Nifty 50, Hormaz.
The wait continues for 25,000. We made a high of 24,960 in today's session just a few minutes ago, and we've cooled off slightly from those levels. What's doing well in today's session? Autos are doing well. The auto index is up. The broader markets continue to do well. The mid-cap index is up 0.5%. The small-cap index has done one better. It's almost up close to 1% now in today's session. The support, though, not coming in from IT. The IT index is down. The metal index is down, and support not coming in from PSU banks as well. But there are plenty of earnings reactions that are coming in. Varun Beverages, we just spoke to the management a few minutes ago, and that stock is down around 5% in today's session. But mind you, that stock has been a doubler in the last 12 months. So some bit of profit booking coming in at higher levels. 5.5% lower is Varun Beverages. And another casualty of the day today is Idea Forge. The numbers on the disappointing side, the stock seeing double-digit losses in today's session. Around 10% lower on last check for Idea Forge, and there you can see now 11.5% higher. Extending the losses is Idea Forge. So earnings reactions both on the good side and on the not so good side as well, but the broader market's doing well, Nisha.
That's right. And also the markets have been very, very sensitive about the earnings picture and have been really giving that impact as well. So let's begin Business Lunch by focusing on two of the stocks, and these are coming in from the PSU basket. NTPC as well as Power Grid are surging post the positive commentary coming in at their analyst meets. In fact, our colleague Vivek Iyer is right here to get us the key takeaways and what it means for the counters. Tell us, Vivek.
Well, good afternoon. Like you rightly mentioned, remember both of the companies actually declared their results of Power Grid on Friday, NTPC over the weekend. Yesterday, the companies actually had their analyst meet. In terms of operational performance, NTPC was very strong, Power Grid was subdued. But today, both the stocks are doing well. This is after the kind of guidance that both the managements have given, analysts after the analyst meet that they conducted yesterday. First, let's look at what NTPC had to say. Now, remember, India plans to add close to 80 gigawatt of thermal power by 2032. Of which NTPC will be adding close to 26 gigawatt itself. The planned capex till 2032 is close to 7 trillion rupees. Within that, the renewable energy capacity addition is close to 60 gigawatt. Now, along with that, the company also says in FY25, the targeted commissioning in thermal is close to 2 to 2.5 gigawatt, and pumped hydro is going to be close to 1 gigawatt. Now, along with that, the regulated equity that the company is targeting is set to see double-digit growth over the next few years. No wonder then brokerages came back quite enthused. Jefferies raised the target price to 485. CLSA retained its outperform rating with a target price of close to 441. Now, on the other hand, Power Grid, operationally slightly muted set of numbers, but look at the capex as well as the capitalization guidance that the company has given. In fact, it's now made a habit to go ahead and beat its own guidance quite strongly. FY24, remember, they had given a guidance of 8,800. They made it 12,500 at the end of the year. FY25 capex guidance, they had a guidance of close to 15,000 crore at the end of Q4. Now they are confident of doing it of over 18,000 crore. FY26, FY27, the numbers that they've given are in excess of 25,000 and 30,000 crore respectively. In terms of capitalization guidance, the guidance given by the company is close to 18,000 crore versus the earlier guidance of close to 15 to 16,000 crore. CAPEX, capitalization guidance increased by Power Grid, and this is something that the street is taking quite a lot of positive cues from.
All right, Vivek, thanks so much for giving us the exhaustive details on both these counters, which are doing very well in anticipation of positive guidance for the future post their numbers. Now, post the recent, remember, tax changes that were announced by the finance minister in the union budget, well, the companies have rushed to the Lal Street with buybacks of their own. In fact, Hormaz is right here to take us through what has happened so far and what may happen going forward. That sounds like a suspense story, Hormaz. So we know that buybacks are going to be taxed as dividends in the hands of the people getting it. So how does it change the scenario? And of course, 1st August is the date. So give us the details.
You know, there is a sudden rush of buybacks on Dalal Street. Now, call it a coincidence or just an action-reaction. As many as 7 buyback proposals have either been announced or are to be announced in the next few days. Now, there may be a trigger behind this rush as well. Now, the Finance Minister, Nirmala Sitharaman, in her budget speech last week, which is on the 23rd of July, proposed that the income received via share buybacks will now be taxed at the hands of the shareholder instead of the company. Now, similar to how dividends are taxed. Now, some market participants were worried that such a move may be counterproductive for the industry and the concept of the buyback altogether. Now, let's take a look at some of the upcoming announcements. Indus Towers' board meets as early as today. Now, this will be their first buyback in 8 years. Now, TTK Prestige today announced that they will consider a buyback proposal on the 2nd of August. Savita Oil will consider its buyback proposal on the 3rd of August, Serra on the 5th, and AIA Engineering on the 7th of August. Aurobindo Pharma, whose buyback was approved before the budget announcement, has its record date today, which is the 30th of July. Now, Welspun Living also announced its share buyback last week, and that record date has also been fixed as the 5th of August. Now, this sudden rush of buybacks has put the spotlight on India's IT companies, who are regular executors of share buybacks to announce to reward their shareholders. Now, the SEBI regulation mandates that there is a need to have a cool-off period of at least 365 days between 2 buybacks. Now, let's take a look at how these IT companies are placed as of date. TCS, which is India's largest IT services company, carried out a buyback as early as last year. Now, can it announce another one before the 1st of October when the changes take place? No, it can't. And that is because the board approval for the previous buyback came in on the 20th of October, which means that it will have to wait until at least 20th of October 2024 to seek board approval for another buyback. Now, Infosys carried out a buyback last year as well, but unlike TCS, it is eligible to carry out a new one as its previous one ended in February of last year, meaning that the 12-month cool-off period has passed. Now, HCL Tech has not carried out a buyback since 2018, so it can do so now if it needs to. Wipro too is eligible for announcing a share buyback as the previous one closed in June of last year. Tech Mahindra has also not done a buyback in 5 years, and LTI Mindtree has not done a buyback to begin with. So these 2 companies are also eligible for the same. Now, besides these IT companies, there are many on Dalal Street that have regularly carried out share buybacks. Now, I'm highlighting 3 of them here. Ajanta Pharma is the first one. Now, in the last 5 years, the company has carried out buybacks in 2019, 22, 23, and this year as well. But it cannot announce a new buyback because the board approval for the same came in May, and it will now have to wait until May of next year to announce another buyback. IndiaMart is the second one, and that company has also regularly rewarded shareholders either via bonus shares, stock splits, or buybacks. And now that company has also done buybacks in 22 and 23, and the board approval for the last buyback came in on July the 20th of 2023, which means that the company is now eligible for announcing another buyback. And lastly, with Aarti Drugs, which has carried out buybacks on 5 instances, at least in the recent past, with 16, 18, 19, 21 and 23. Similar to IndiaMart, they also got the board approval on the 21st of July, making them eligible for a fresh buyback as well. So this is summarizing the recent spate of buybacks on Dalal Street. Now, it remains to be seen whether more companies join this buyback bandwagon.
Thanks so much, Hormaz, for getting us the entire list of companies which could be aspirants of the buyback before the effective date of the budget changes really kick in. You spoke about Indus Towers. That stock is running up in trade. In fact, it has been benefiting from the telecom sector also getting repaired. Keep that on your radar. And with that, we'll slip into a short breather. But when we return, we'll get you the latest on the major landslides triggered in Kerala's Wayanad. Stay tuned for more details on this national update in a minute.
could lead to privatization or disinvestment. And I'm, as my colleague Mr. Pandey has repeatedly been saying, they are not off the table at all. But it's one thing to say, this year I'm going to sell company X, and then the whole market waits for us to dump X and starts acting in anticipation, versus saying that I'm an investor. I have a portfolio of securities that I own. Some I'll continue to be majority owner in. Some I'll continue to be minority owner in. Some I'll dilute my majority stake. Some I will do nothing and collect dividends. And some I'll hold until they are repaired. And we take a pragmatic and maybe even opportunistic view of what to do with each of these. That is the new approach. But you will see disinvestments happening. They'll happen not perhaps to a declared pre-announced calendar, but you will still see them happening, is our both expectation and policy.
This budget has a clear direction. The kind of a strong support government had provided over the past 4 years has helped the economy. And what this budget commits, that significant support, our endeavor would be, government endeavor would be, keep continuing providing that support.
So around this 3.5% of GDP?
That is a very high level. For decades we have never been there.
Yes.
And so the idea is that there are two other imperatives come in. The other priority needs and fiscal consolidations. It has to be done. There are the trinity which has to be taken care. The other two pieces, and who else have to do the heavy lifting? Government of India has now reached to a level which are the maximum it can sustain proportion to GDP. Second is states as a whole are spending about 2.5% of the GDP or their GSDP in capex. The quality of expenditure has to improve there in terms of infrastructure project itself.
So what would a realistic number be then to have as far as government capex going forward, if you believe that this is the most or the maximum that the government can do?
So look at this manner, that where we are at this point of time, that in terms of the fiscal deficit is 4.9 this year. That's what we expect to do. Next year 4.5. And that's not the end of the fiscal consolidation. We have to keep on going less, of course, with the different metrics of a debt to GDP ratio. If we are talking about 3% plus to go to capital expenditure, we are still, there are expenditure which are on the revenue side, and there also there are fair amount of expenditure, not just on education, health, which are very, very important and will find full attention of the government, but also Government of India provides grants to others to do capital expenditure. It provides to state governments of the order of perhaps about 3 lakh crore plus. Though in our books, meaning Government of India books, there is still revenue expenditure. So keeping it at 3% plus, now it has reached to 3.4%, moving forward, if on a nominal basis that can be maintained, that will be a good achievement.
We are very close to the due date of filing income tax returns, and if you're not done with it yet, let's tell you all that you need to know at the last minute for filing your return. Income tax return documents differ as per the earning sources of the tax.
Back with us here on Business Lunch, and heavy rains have spurred landslides in the district of Wayanad in the southern state of Kerala, leading to 54 deaths and leaving several others injured. Now CNN News 18's Neetu now joins us from Kerala with more updates.
A terrible tragedy has happened in Wayanad districts where 2 landslides occurred in the early morning, which has taken the lives of at least 44 people. More than 70 are injured and in various hospitals. About 250 people have been rescued so far in these 2 areas. The biggest issue that the rescue workers are facing is that in one of the areas, which is the Mundakai area where the landslide has happened, the rescue workers have not yet been able to reach there. A bridge leading to that way, to that village, has completely been washed away. Rescue workers are trying to reach there. The State Government Minister MB Rajesh has said that they have almost reached that area. The government has sought air support from the Navy. Army support has been sought in this this area. What we understand from government sources as well as on the ground is that these numbers are likely to rise. The numbers of the death toll are likely to rise because many people are still stuck under the debris. Hundreds of people are still stuck there is what we are understanding. In this one village alone, there are hundreds of families that are living there, which has been completely cut off now. So only once the rescue workers reach there will be able to assess the situation and how bad the situation is right now. About 150 people has been rescued from that nearby Mepadi area, and they are in a resort there. Last night, due to heavy rains, as the water levels have risen, they were brought there. That in that resort area, people have been telling us that there are at least on top of about 40 houses, a landslide when it happened, the debris has fallen. They have not been able to go there and check out. To many people who are in the Mundakai area, when we are trying to reach them, it is unable to reach them. So this is where the rescue operations are standing at the moment. Wayanad is a hilly terrain. The topography is such that it will be difficult. So, but the government has been doing all possible measures to maximize the rescue efforts and to rescue people at the earliest. Coordinated efforts are being done to rescue as many lives as possible.
All right, rescue operations going on in Wayanad. Thanks, Neetu, for giving us that on-ground report on the operations there. And in the news updates from the north coming in, at least 2 people have been killed and more than 20 injured after 18 coaches of a Howrah to Mumbai mail train derailed in Jharkhand early today morning. Now, the accident happened after the train collided with a goods train, and following the accident, the Indian Railway cancelled 5 trains that use the same route. Now, the Southeastern Railway also arranged special bus services to transport the passengers from the derailment site and has paid 50,000 rupees each to 4 injured passengers. So those operations are also on at the moment.
And in news just coming in from Paris, another bronze medal coming in for India. Manu Bhakar and Sarabjot Singh have won bronze in the mixed 10-meter air pistol mixed team events, and that is India's second medal coming in, and the second medal for Manu Bhakar as well. Remember, she opened India's account over the weekend, winning the bronze medal in the 10-meter air pistol event, in the individual event for women as well. So good news coming in for Paris. But time for a short break on Business Lunch. More news and updates continue on the other side.
Certain documents are mandatory for every taxpayer, irrespective of the income source. So let's talk about them first. PAN and Aadhaar number are the basics, of course. That is something you can't do without. But the other ones, Form 26AS, this gives you details of all the details of the taxes paid during a financial year on any transaction. This would include both TDS and TCS deducted. Second is the Annual Information Statement, or the AIS. This is more detailed version of 26AS and gives you transaction-wise details, and also includes details of interest from fixed deposits and savings bank account as well. Also details of any shares sold. How do you get these 2 documents? Log into your account on Income Tax website and then go to the e-file tab to view Form 26AS and Services tab to get your AIS. Now for the other income, that is capital gains, you will need to pay taxes. You can get the details of the capital gains that you have earned on sale of mutual funds or shares from your fund house or your stockbroker. This will be available online in your stockbroking account. This will give you details of all the share transactions you've done in the financial year with the amount of capital gains. Similarly, details of dividend income is also important to be considered while filing ITR, and this can be taken from the broker or demat account summary. Also, while AIS gives details of all the interest income that you have earned, always best to check it with the interest certificate you receive from banks. Again, these can be found in your net banking. This would have details of interest paid on home loans as well. Important if you have one, because that can be used to claim deduction in the ITR. This would also mean it's important to keep your home loan statement with you as well at the time of filing a tax return if you have one. Of course, for salaried individuals, Form 16 is another very important document to keep. It is for salaried individuals with details of all TDS deductions done by the employer. Disclosure of all active bank accounts are mandatory in the ITR. Bank account details like your bank name, account number, IFSC and number of accounts you hold must be quoted in the income tax return. Also, one account shall be selected as primary to assist the income tax department in refunding your tax refund by electronic transfer to such account. Also, some of the donations you have made to notified organizations, relief funds, charitable organizations that will be eligible for deduction under ATG. So keep that handy as well. Always good to file your return in time, but if you're late, this basic checklist could help you.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBCTV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech.
Welcome back. You're watching Business Lunch. Let's now put our focus on the primary market. There has been a lot of action and a very strong pipeline in the IPO market. Akums Drugs and Pharmaceuticals initial public offer has opened today and will close subscription on 1st of August. And Ekta Batra is right here with all the details of this IPO. Ekta, tell us.
Well, yes, Akums is in focus because the IPO opens today. It is the largest CDMO serving the Indian pharmaceutical industry. It gets around 78% of its sales from the CDMO business and 95% of its EBITDA from CDMO. It in fact has 30% of share by value in the Indian market when it comes to the CDMO business. Now, branded and generic formulations is around 16.7% of sales. API is smaller at around 5% of sales. Now, as of FY24, 1,524 clients, over 4,000 formulations manufactured by them across 60 dosage forms. Majority of their sales are from the domestic markets, exports around 17% of their sales. Price band for this IPO is 646 to 679 rupees. Issue size is up to around 1,857 odd crores. Fresh issue 680 odd crores. OFS of up to around 1,176 odd crores. Post issue market cap is around 10,200 odd crores to around 10,687 odd crores. Funds from this IPO will be used to repay debt. So over around 380 odd crores will go into repayment of debt, and the remaining for general corporate purposes. The company's already raised around 828 crores from anchor investors. Now, in terms of the comparison, if you look at it in terms of peers, the adjusted EBITDA for Akim is around 12.2% in terms of margins. It's done FY24 revenues of around 4,178 odd crores. The margins even on an adjusted basis are lower than its peers such as Divi, Suven, which are much larger than the company in terms of market cap, but even Innova CapTab, where the margins were around 15.3%. Now, in terms of a FY24 market cap to sales, Akim is around 2.4 to 2.5 times, and Innova CapTab is at around 3.4 times. And in terms of a PE on an adjusted basis, Akim is at around 28 to 29 times FY24 trailing, Innova CapTab 34 times, so it's at a discount as compared to a couple of its peers.
IPOs are back and we hope for a strong pipeline in the second half. Ekta, thanks a lot for that. And that is a wrap on this edition of Business Lunch from Nisha, me and the team that put this show together. Thank you so much for watching. Midcap Radar up next.
We are very close to the due date of filing income tax returns, and if you're not done with it yet, let's tell you all that you need to know at the last minute for filing your return. Income tax return documents differ as per the earning sources of the tax filer, but certain documents are mandatory for every taxpayer irrespective of the income source. So let's talk about them first. PAN and Aadhaar number are the basics, of course, that is something you can't do without. But the other ones, Form 26AS, this gives you details of all the details of the taxes paid during a financial year on any transaction. This would include both TDS and TCS deducted. Second is the Annual Information Statement or the AIS. This is more detailed version of 26AS and gives you transaction-wise details and also includes details of interest from fixed deposits and savings bank account as well. Also details of any shares sold. How do you get these two documents? Log into your account on Income Tax website and then go to the e-file tab to view Form 26AS and Services tab to get your AIS. Now for the other income, that is capital gains, you will need to pay taxes. You can get the details of the capital gains that you have earned on sale of mutual funds or shares from your fund house or your stockbroker. This will be available online in your stockbroking account. This will give you details of all the share transactions you've done in the financial year with the amount of capital gains. Similarly, details of dividend income is also important to be considered while filing ITR, and this can be taken from the broker or demat account summary. Also, while AIS gives details of all the interest income that you have earned, always best to check it with the interest certificate you receive from banks. Again, these can be found in your net banking. This would have details of interest paid on home loans as well. Important if you have one, because that can be used to claim deduction in the ITR. This would also mean it's important to keep your home loan statement with you as well at the time of filing a tax return if you have one. Of course, for salaried individuals, Form 16 is another very important document to keep. It is for salaried individuals with details of all TDS deductions done by the employer. Disclosure of all active bank accounts are mandatory in the ITR. Bank account details like your bank name, account number, IFSC and number of accounts you hold must be quoted in the income tax return. Also, one account shall be selected as primary to assist the income tax department in refunding your tax refund by electronic transfer to such account. Also, some of the donations you have made to notified organizations, relief funds, charitable organizations that will be eligible for deduction under ATG. So keep that handy as well. Always good to file your return in time, but if you're late, this basic checklist could help you.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBCTV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would
Good afternoon, welcome to Midcap Radar. I'm Sonal Bhutra. With me as always is Vivek Iyer. We have come up from the highs, but it's a decent day so far. Again, it's yet so close and so far from the 25,000 mark. The mid-caps, they continue to do well. The mid-cap index is up 0.5%. Banks are participating today, and it's a lot about individual names and big moves on some of them.
Big moves on some of them. Banks and the entire PSU space, utilities as well as OMCs today, that's something that's actually taking the market higher. Quite a lot lined up on the show. Let's start off with the top headlines. Stocks climb up after the dip in the last session. Oil and gas along with autos lead the gains, while FMCG and pharma come under pressure. Broader markets outperform.
Colgate-Palmolive surges around 6%, reacting to a stellar set of Q1 earnings that were a beat across all parameters. The company also witnessed continued demand pickup in rural areas.
Idea Forge slips more than 11% in trade after poor quarterly performance. The company reported 11% decline in revenue from operations on a year-on-year basis, while EBITDA margin saw a sharp contraction to 4% versus 29% last year.
Granules India is higher in trade after reporting Q1 numbers. Revenue surges 20%, EBITDA and margins also rise. Management says revenue share from North America increased to 74% versus 61% on a YOY basis.
First, the solution surges on a strong Q1 performance. Dollar revenue grows 7% sequentially. The company raises FY25 constant currency revenue growth guidance to 11.5% to 13.5% from 10% to 13% earlier.
Okay, all right. Those are the top headlines. Let's talk about the benchmarks and some individual pockets which are doing well. As I said, markets have come off from the highs around 90 points. Still, it is a market which is trading in the green after that sharp recovery that we saw at the initial trading time as well. The CPSC index, the biggest gainer, 1.5% higher there. And there are more movers right now that we're seeing in the broader markets. The advance decline ratio in favor of advances. The FMCG pack is lower. The IT pack is lower. So is the pharma. So defensive's not doing so well. But there's really nothing to complain in the broader markets. And we'll talk about those stocks in greater detail.
Nothing to complain in the broader end of the markets. As you can see, a lot of results coming by. Vardhaman Textiles, the latest company to go ahead and declare its results. Stock reacting positively, almost 4% higher post the results. But this is the show Midcap Radar, and this is our special segment, Midcap Movers. Today we have Vamakshi, who's standing by the wall to take us to the midcaps that are moving in the session. Vamakshi.
Well, absolutely. Like you rightly said, Vivek, there's nothing to complain about, but let's look at some of the individual stock moves in the trading session today. Let's first look at PCBL. The stock is up in the trading session today. CAMS is also a high flyer. In fact, the stock has been gaining for the second consecutive session. Fine Organics, Nykaa, some other names that are uppers in the trading session today. And Nuvama Wealth reported a good set of numbers yesterday. The stock is up for the second consecutive day. Oil and gas stocks are also a buzz today. And in fact, HPCL reported its numbers. It was a weak set, but the stock is trading higher today. BPCL and Oil India are some other movers in trade. As far as some earnings are concerned, we have some stocks that are reacting negatively to the news flow. And as you can see, Idea Forge reported a very weak set of numbers. The stock is down nearly 12%. Varun Beverages also very recently came up with its numbers. The management also joined us, and in fact, the stock is trading lower by almost 7%. But there are some stocks that are reacting positively to their earnings. That includes Car Trade, Jindal Drilling, Apar Industries, as well as Granules India. All of these counters are buzz in the trading session today on the back of a good set of numbers.
Okay, all right. A very interesting list. A lot of movers in the broader markets. Thank you so much, Vamakshi, for joining us with that list. With that, let's move on now and let's welcome Shrikant Chauhan from Kotak Securities for a technical check on the markets. Shrikant, good afternoon. Thank you so much for joining us. What is the trade suggesting now? We did come off from the highs, but do you think there could be an attempt to go higher from these levels?
Yeah, it looks like the way the market is consolidating before the crossing the level of 25,000. I think it is like on the verge of crossing these levels, and eventually we are going to see the levels of maybe 25,200 or 300 based on its technical formation. So I'm of the view that it may consolidate between 25,000 and 24,700. In case if there is any correction because of any reason, I think we should look for taking some position close to 24,800, 850 with a stop loss at 24,700. But relatively, Bank Nifty is doing much better because there we are seeing entire basket is like trading and sustaining above important levels. So there we are of the view that Bank Nifty is also heading for the levels of 53,000 or 53,500 sort of levels. So Bank Nifty is relatively better, but yes, Nifty is also on the verge of crossing 25,000 level.
Good afternoon, Shrikant. Shrikant, what are your individual picks for the day?
I think, see, there are like a number of stocks which are crossing their all-time highs or they are consolidating for several weeks. And after consolidating for several weeks, they are crossing their highs. So, and these stocks are like relatively better, I mean to say, in terms of their entire, we can say, management quality, or even if we go through with their entire performance of last several years. So in that, we like Ashok Leyland. And here, if you see the technical pattern of the stock, then it has spent nearly 7-8 weeks within the range of 245 and 220. But after crossing these levels, 245, now it is into momentum. So from here, the stock can move to the levels of 300. That's the overall view. It's a buy at current levels. It is correcting from the highs, but it's a buy at current levels around 250, 252 with a stop loss close to 240. And the other stock which we like is Castrol India. And there also the stock has crossed its previous high, I mean to say highest of 2014, which was around some 260-65 levels. And now after crossing this level, the stock is also heading towards the levels of 320 or 330. So there also we are specifically bullish and based on its technical pattern. So it's a buy at current levels, more on dips with a stop loss close to 250.
Okay, Castrol also reports numbers today, so that'll be important to watch. Thank you, Srikanth, for joining us. It's time to slip into a break. Management of Mass Financial Services will join us on the other side to discuss their Q1 numbers and more. Stay tuned for that.
Footfall. Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly,
Beer.
Welcome back. You're still tuned into MF Corner. We still have with us Nasir Salim and Nirav Karkera. We are discussing everything that could impact the changes that we have seen in international funds and fund of funds with the budget. Nirav, let me come to you. Now that we are talking about this change that has come by, and we are of the opinion that maybe, yes, this will be an attractive scheme for investors, are there enough opportunities available globally to invest more money?
Yeah, I feel there is a pretty solid case for global investing. In fact, the opportunity emanates from the listed universe that we have in India versus what we would like to tap into. I could talk about a few examples. For example, we could talk about companies engaging in space tech, engaging in development of electric vehicle components, probably semiconductors, and artificial intelligence on the generative front. And there are a host of several such sectors. Even luxury consumer goods. We all know that these are good, thriving sectors, and they have a pretty solid visibility in terms of having a runway towards growth. But there are very limited companies on the Indian bourses that actually let you capture all of these stories that are happening. I feel while the the straightforward thing is always there, diversifying away from country risk and taking exposure to a cross currency, while those are the standard staples that build the case for international investing, I feel the opportunities in the listed universe is a very key value proposition that most of us don't really appreciate that global funds bring to the table, right? So while India expands and the listed universe also grows to capture many new age companies like we have been seeing, there are also a lot of innovative companies, sectors, and segments, sunrise segments that are getting listed on the bourses abroad as well. Right from dating apps to renewable energy. And to generative AI, there are several places that one can take exposure to and ride the tide if they have access to such global funds. So that's where the case for international investing solidifies even more.
Okay, all right. So there are a lot of places available where there can be an investment done. Nasir, what is your take on this one?
Absolutely, Sonal, I would agree more. I would not agree anymore. This is completely the fact that, the very fact that you can diversify. And I think, interestingly, currently, there is a lot of opportunity available in markets, which will help you diversify. Whether it's the US in terms of US Treasury yield funds, or whether it's in China, we're looking at great valuation there in terms of its multiple, looking very attractive and it's cheap at the moment. So, it definitely gives you a great platform to diversify. I think, softer than expected inflation data and cooling economic indicator. For example, the Fed expects 1 to 2 rate cuts this year, lower treasury yields. These are all factors that you may want to diversify your portfolio into certain US instruments. Then there are, between that, we have also artificial intelligence. I think those are something which is again being very well captured by some of the larger asset managers that we work with and that have been regulated. I think the other quick one, of course, is a global diversification from a return perspective always holds beautifully when you look at the overall portfolio. And to diversify from a currency risk perspective, normal hedging, global hedging, I think all of these factors play out really well. Some of these have actually captured it really well. And we feel that from a portfolio perspective, international diversification of these funds, whether it's in tech, because if, for example, in post 2020, we saw a surge in technology, which led the rally as well in the US. So I think it was very well captured, bodes really well, and augurs really well from a portfolio diversification perspective. And I think yes, it is a big opportunity.
Okay, all right.
Subject to market, subject to one's risk appetite.
Oh yes, of course, that has to be taken into consideration. Nirav, we've seen a lot of changes with a lot of these mutual funds coming out with releases saying that we'll not accept lump sum, we'll not accept SIPs. It's a long list. Which are the ones which are open for subscription? Some of the bigger ones that you can talk about where maybe lump sum is not allowed, but SIP or vice versa, or both are allowed or both are not allowed?
So that's indeed quite a long list, and inadvertently it happens so that most of the large AMCs have at least a couple of options where either the SIP or the lump sum route is open. I feel, the list, my guesstimate is the list is around 45 odd funds where the funds are actually open for, SIP as well as lump sum. But there will be a few cases like probably, a Motilal as well, where the SIP is still active, and at the same time, there could be a few funds like the Franklin India feeder where, a lump sum as well as an SIP is allowed. So there are various combinations, as you said, but, the ones where both are active, it is almost a 45 fund long list. And one thing I can tell you that most larger fund houses and fund houses having, a very strong suite of international funds and FOFs will have at least a few options for retail investors to nibble into. So it's not as if the gates are completely shut. So, with a little bit of hard work, investors can still find some very good opportunities managed by some very good funds.
Okay, take that point. So 45 of them have both the routes open, be it lump sum or SIPs, but some of the other ones have a combination which works for them. Sometimes it doesn't, but take your point there. Nasir, I wanted to understand, are direct investments in US or international stocks more cumbersome, and that's why maybe people go for mutual funds?
Yeah, Sonal, great question again. I think, the investments as far as direct investments in US stocks or international stocks are concerned is obviously could be a little cumbersome, but the investments are subject to double taxation and have been impacted negatively by the 20% TCS, which has been introduced, as we all aware of. However, the 20% TCS combined with the recent budgetary changes, now that have been announced on the 23rd of July, Sonal, we feel that may create a conducive environment for stronger inflows in the international and US Treasury fund. So, definitely, erstwhile, before 23rd July, they were subject to double taxation and they were, majorly impacted because of 20% TCS. But now with this budgetary change, things may start moving around and may start attracting more flows.
Okay. Nirav, your take here?
So I feel it is indeed cumbersome. While the industry is still continuing to demand an expansion of the LRS limits, I feel this is not a ubiquitous problem. This is not the biggest problem that we are facing. What we're facing is getting access at the lowest level possible. And that access is largely restricted due to the operational hassles. So this is a classic case where something is available but not really accessible. There's a thin line differentiating between the two. So the entire rigmarole of going through the additional KYC, the additional disclosures, and going through the route, LRS route, and opening an account there and taking exposure is really cumbersome. And for especially smaller ticket investors, the retail mass, and also good part of the mass affluent segment, the effort to reward just doesn't make a whole lot of sense. I mean, there is a strong value proposition for investing overseas, but the cost and effort benefits must also match or balance or be in tandem with the value proposition out there. So that this entire cumbersome process is quite a deterrent for direct investing, and especially it is a whole lot more pronounced, especially when you have options like mutual funds, where life is not just far more simpler operationally, but also from a cost standpoint is a whole lot more efficient, and from a return standpoint, so much more effective. So, like you said, I feel that is indeed the case where the options of mutual funds makes life so much more simpler that no one's really feeling the pain or recognizing the pain that it would be to take exposure to other stocks otherwise.
Okay, absolutely. Take your point. It's something that you can just invest in and not worry so much about the compliances so much, right? Gentlemen, it's a great conversation, but we have to get into another break. On the other side, we'll continue our discussion with our guests on overseas funds and fund of funds. Stay tuned.
Milestones being achieved on Dalal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBCTV18, embarking on a quarter-century of excellence.
Kamala. Hello. Hi.
Hey there.
back together. Oh, it's good to hear you both.
I can't have this phone call without saying to my girl Kamala, I am proud of you. This is going to be historic.
We called to say Michelle and I couldn't be prouder to endorse you and to do everything we can to get you through this election and into the Oval Office.
Oh my goodness. Michelle, Barack, this means so much to me. I am looking forward to doing this with the two of you, Doug and I both, and getting out there, being on the road. But most of all, I just want to tell you the words you have spoken and the friendship that you have given over all these years mean more than I can express. So thank you both. It means so much. And we're going to have some fun with this too, aren't we?
Hours following Biden's exit, the most for a single day in the 2024 campaign trail. Vice President Kamala Harris hit the ground running with the launch of her 2024 presidential campaign on Sunday.
Where else do you believe there is a strategic consideration that the government must consider, and where do you believe that the government could look at a much more commercial consideration and take the step forward as far as disinvestment is concerned, or is that not an expectation?
There are many areas where a commercial consideration could lead to privatization or disinvestment, and I'm as my colleague Mr. Pandey has repeatedly been saying, they are not off the table at all. But it's one thing to say this year I'm going to sell company X, and then the whole market waits for us to...
Welcome back. You're still tuned into MF Corner. We still have with us Nasir Salim and Nirav Karkera. We are discussing everything about international funds and fund of funds. Nirav, we have discussed it a couple of times, but has that 20% TCS made people a little averse to investments there in general? Is that something that is keeping them away from international investing?
I'd not say that, I'd say that's not the most, that's the most pressing issue at hand right now, but it is a deterrent nonetheless. And the roots lie in something as basic as IRR. So if your initial cost, increases, by a certain extent, in this case, by 20%, because that is the TCS, and I'm calling it a cost because that is an amount that is not deployed, your IRR drops significantly, right? So to make the same amount of money, you will have to, or the same amount of returns, dollar returns, you will have to invest a whole lot more money, right? So this is, this entire 20% TCS really expands your initial outlay and shrinks your IRR to a significant degree, which also reduces the sheen of the proposition to a great extent, especially for investors who are trying to invest for the relative medium term. A 20% initial outlay and the resultant drop in IRRs make it a little lackluster proposition. Still, investors who would like to invest for a much more longer term and strategically for, let's say, for the sake of example, 10 years and onwards, it could still make some sense. But anyone, below that will be slightly conscious because of this entire IRR dilution impact that this 20% TCS is having.
Okay, all right. Nasir, how do you look at the new category that has come by, US Treasury Yield Fund of Funds? We do not have a lot of fund options available here for investing, but is this a great way to take exposure in the US bond markets?
Absolutely, Sonal. I think, the Treasury securities of longer maturities give the benefit of roll-down yield. And I think that is being very well captured by some of them. Currently, I think we have about 4 of such longer maturities available through investments in fund of funds. They're in the nature of Bandhan, DSP, Axis, Aditya. There are 4 of them broadly, and most of them invest in 7 to 10 year treasury bonds invested. However, may even have shorter term maturity securities depending on their outlook on the interest rates. The other quick one is, I think, as federal rates are expected to get cut, yields for off-run older securities increase if the security gives a high rate of interest compared to their one on the current counterparts, and therefore are more valuable in nature. I think the rate cuts being around the corner may impact the US Treasury fund of fund entire segment, Sonal, positively, especially for the longer term maturity funds. And what we feel is also currently, if you see historical average of Fed rates has been, historical long-term average is about 1.86. Current Fed rate is about 5.33 as we speak. So there is a lot of the gap needs to shorten, and that is going to help get capital gains on those bonds. And I think the other quick one is that with these category, as you mentioned clearly, they have multiple maturities available. So we have short term, which is 3 months to 1 year. You have medium term, which is up to 3 to 5 years in terms of maturities. Long term is between 7 to 10 years. So it's a very good, interesting category that is emerging with all asset managers. And I think, does bode well with the current economic environment that we are in as far as the US is concerned.
Okay, all right. Gentlemen, thank you so much for joining us today. It was such an interesting discussion because there have been a lot of budget changes which has impacted these 2 categories. With that, we'll do one thing. We'll take your leave on this edition of MF Corner, but stay tuned for Closing Bell to take you through the last hour of trade.
That's acting in anticipation versus saying that I'm an investor. I have a portfolio of securities that I own. Some I'll continue to be majority owner in. Some I'll continue to be minority owner in. Some I'll dilute my majority stake. Some I will do nothing and collect dividends. And some I'll hold until they are repaired. And we take a pragmatic and maybe even opportunistic view of what to do with each of these. That is the new approach. But you will see disinvestments happening. They'll happen not perhaps to a declared pre-announced calendar, but you will still see them happening is our both expectation and policy.
This budget has a clear direction. The kind of a strong support government had provided over the past 4 years has helped the economy. And what this budget commits, that significant support, our endeavor would be, government endeavor would be, keep continuing providing that support.
So
subject
around
to
this 3.5% of GDP?
That is a very high level. For decades we have never been there.
Yes.
And so the idea is that there are 2 other imperatives come in. The other priority needs and fiscal consolidations. It has to be done. There are the trinity which has to be taken care. The other 2 pieces, and who else have to do the heavy lifting? Government of India has now reached to a level which are the maximum it can sustain proportion to GDP. Second is states as a whole are spending about 2.5% of the GDP or their GSDP in capex. The quality of expenditure has to improve there in terms of infrastructure project itself.
So what would a realistic number be then to have as far as government capex going forward, if you believe that this is the most or the maximum that the government can do?
So look at this manner, that where we are at this point of time, that in terms of the fiscal deficit is 4.9 this year. That's what we expect to do. Next year 4.5. And that's not the end of the fiscal consolidation. We have to keep on going less, of course, with the different metrics of a debt to GDP ratio. If we are talking about 3% plus to go to capital expenditure, we are still, there are expenditure which are on the revenue side, and there also there are fair amount of expenditure, not just on education, health, which are very, very important and will find full attention of the government, but also Government of India provides grants to others to do capital expenditure. It provides to state governments of the order of perhaps about 3 lakh crore plus. Though in our books, meaning Government of India books, there is still revenue expenditure. So keeping it at 3% plus, now it has reached to 3.4%, moving forward, if on a nominal basis that can be maintained, that will be a good achievement.
We are very close to the due date of filing income tax returns, and if you're not done with it yet, let's tell you all that you need to know at the last minute for filing your return. Income tax return documents differ as per the earning sources of the tax filer. But
Asian markets are trading lower. You can see the Hang Seng now down 0.9%.
52% growth in the volume of digital transactions and 12% growth in the value of these transactions.
On the way up broadly, I mean, the targets remain 25,000 to 25,337.
Very strong earnings from Colgate this time around. It could well be the result of the season for the FMCG company.
Any future issuance of 14-year and 30-year bonds will not be classified under the fully accessible route.
10 points, 12 points, 24,818. Flattish start actually.
The first quarter has started on a very muted note.
Now we're up 100 points on the Nifty. The Nifty is comfortably above 24,900.
Ecom Drugs, that's opened its IPO today.
As far as thermal capacity is concerned, NTPC will be adding close to 26 gigawatt.
now FY24 saw revenues of around 6,500 crore rupees.
हर सेक्टर में बजट में ये रिकॉर्ड बढ़ोतरी.
There is a sudden rush of buybacks on Dalal Street.
Markets have come off from the highs around 90 points.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBCTV18 Motilal Oswal Studios in Mumbai.
Well, it's a good-looking screen once again this Tuesday afternoon. This is Closing Bell. That was a day so far, and it's been basically marked by a little bit of doubt, a little bit of this and that. But broadly, as we approach the last 60 minutes of trade, the Nifty has got 100 points to show for it. We're coming to you from the CNBC TV18 Motilal Oswal Studios. I'm Prashant. With me, my colleagues Rima and Surabhi here, and Nigel is joining us from the newsroom floor. Guys, hi, good afternoon.
Hi, good afternoon. Guys, it's going to happen. 25,000, Nigel, what do you say?
Yes, it's happening today.
Okay, he said it. There we go. We're 50 points away from the mark. The highest we got today was, about 30 points away. The day's high was just about 24,970. So let's see. Rima, what's your sense?
Not today.
Oh, not today.
Not
okay.
today. We've got to have both sides, right? This is how we remain unbiased.
I think Surabhi's taking bets.
No, I'm just hearing the two of them.
We've
got a bull and a bear. So, Prashant, you're the tiebreaker.
I mean, I'll weigh in once it hits 25,000.
But it's a big global week also, right? So many earnings, particularly global tech majors. You've got the FOMC minutes meeting. So I guess even that will have a part to play as the week progresses.
No, absolutely. And I think FOMC, the decision tomorrow evening, and then there are all these big earnings, etc. But in any case, I mean, we've had good data, bad data, all kinds of things from the global arena, but the market here is paused, for a day. But that's it. I mean, the trajectory has been unstoppable, and we've continued to move higher and higher. And absolutely no two questions about it. And market breadth is positive, by the way. So you got about 1,700 stocks which are higher, 900 stocks which are lower. So this is once again a very, very vibrant, buzzing screen as far as the mid and small cap part of the market is concerned. If you want to look at sectors and sort of pockets, the government companies are doing very well. The index itself is up 1.5%. So yesterday it was PSU banks, which was the top gaining sector. Today it is the CPSE index, energy, PSE. Actually, the top three gaining sectors are all public sector indices. The small cap index is up 1%. And the private bank index, I can spot, is up about 1% or so as well. So that's a new one, which we've not seen participate in any great fashion, but it is today. Then you got autos as a space which is doing well with about a 0.75% gain. And that's it. So a lot of government companies, you got private banks and autos as far as sectoral spots which are doing well. But I think the real, the market really belongs to single stocks in the broader market, mid caps and small caps. And those are really fighting away once again. Rima.
Well, just to take you through some of them in the broader market. So Kansai Nerolac post numbers is up close to about 10-11%. You've got gains in Philips Carbon Black. We've been talking about it. That's another 10% gain. Nykaa has moved up nearly 7%. Then throw in some of the PSUs like an MMTC. That's up. HPCL, BPCL. So all the oil marketing companies too are on fire.
Absolutely. Throw in more names. I mean, from the SP Goenka Group, you've got stocks like PCBL on the higher side, almost 10% higher. You heard the sound bites, of course, yesterday. Mr. Goenka in conversation with Shireen. Those stocks have done really, really well today. There are more names from the capital market space. There is CAMS about 9% higher. There is IIFL Securities that's having a good day once again. And more names. There's Nykaa 7-8% higher. It's just a long list of winners out there, and a market that's looking good with the Bank Nifty leading it for a change today. 0.8% up on the Bank Nifty. Nigel.
Well, that's right, and we have the Nifty Financial Services Index that plays out the weekly expiry later today in the next 60 minutes or so. So that's going to be important. Just to highlight a few stocks that are moving around. Chambal Fertilizers, it showed a lot of promise at around 530 rupees. Then it corrected to around that 500 bucks. Now in the last few minutes, that one has spiked up. Deepak Nitrite as well seems to have something going for it. So that stock is well bursting away in the last few minutes. So I think a couple of these names are doing a thing of their own. And Exide, after the kind of run that it's had, it's coming for some mild profit taking. But let's find out, how do you trade the Nifty in the last 60 minutes and from here on. Mitesh Thakur is back with us. Mitesh, should we put this question at the start of the show? 25,000 today?
I think, I am slightly on the positive side. The reason being, yesterday we had seen the Bank Nifty weaken as we approached the 25,000 mark. Today that's not happening. And while we have only about an hour left and still 50 odd points to go, I think there's a good chance that we might see that. But if it's not today, then I think maybe after a couple of days of pullback, I think we are very likely to make new highs. So in that sense, stay positive. I have a buy on Navin Fluorine and Bajaj Finserv. So Bajaj Finserv is a buy with a stop below 1645 for targets of 1720. And Navin Fluorine is something which has given a good breakout today after 3 to 4 weeks of consolidation. So buy here with a stop at 3700 for targets of 3900.
Some of the tech names are also pushing higher. So Tech Mahindra is up 0.7%. Infosys is now back in the green. So watch for the technology names too in the last 1 hour. But let's talk about Philips Carbon Black. That's buzzing in trade. Sanjeev Goenka, chairman of RP Sanjeev Goenka Group, said while speaking to CNBC TV18 earlier that profitability of PCBL should see a rise of 5x in the next 5 years. Sonal joins it with the details on this. Sonal.
Well, yes, Philips Carbon Black, now the company has changed the name to PCBL, is the largest manufacturer of carbon black in the country. And the stock is up 10% today. We've seen a good rise in terms of their financials as well. The revenue, it has risen from 3,200 crore rupees in FY20 to levels of 6,420 crore rupees in FY24. Even the margins, after reaching levels of 14% in FY20, are now standing at 16% in FY24. Profits accordingly have also increased from around 288 crore rupees in FY20 to 491 crore rupees in FY24. The management has been on an expansion mode in the chemicals business. This is something that we've seen in their commentary earlier as well. In Q4, they indicated that they need to add capacity of around 80,000 to 100,000 tons per annum of carbon black to meet both their domestic and export demand as well. Asian countries such as Indonesia, Vietnam are the key export markets, and they are likely to remain so as well. The thing is that the street is worried about their debt because they're going on an expansion mode. So the debt currently stands at 800 crore rupees. But how will they fund their future expansion is something that the question is about this particular company. We spoke to the company yesterday and they sounded very bullish. They said that margins can go to levels of 17 to 18% versus 16% right now, which will be aided by the specialty business, which is just 9% right now. They also spoke about largest expansion being in the chemicals and carbon black business. They'll be expanding in chemicals business through acquisitions. Some of them are already done. They'll be doing more of it. They'll be back integrating into yellow phosphorus. They'll be investing in oil and gas business, oil and gas chemicals specifically. More capacities will be added globally. And they're also getting into cathode chemistry for EV batteries. This is a new segment altogether for them. And over the next 5 years, PCBL's PAT should see 5 times growth. That will be around 2,400 to 2,500 crore rupees in next 5 years. Very bullish commentary coming in from the management, and after that we've seen the stock surge. In fact, let's listen into what the management told us earlier.
PCBL will grow in rubber blacks, but more importantly in specialty blacks, so where your margins become much higher. In rubber blacks, you make X%. In specialities, you make X plus so much. And that's the reason for the 14% going to 16. The 16 would actually probably go up to about 17, 18 as we go along. But more importantly, or as importantly, we will be expanding in chemicals through our acquisition Aquafarm. So we will be expanding in phosphonates in terms of capacity. We will be back integrating into yellow phosphorus. We will expand in the oil and gas chemicals. So we are going to revamp our manufacturing facility in Texas. We are going to add a manufacturing facility in addition to our blending facility in Riyadh. And we are going to start this whole thing on green chelates, which is biodegradable product that goes into the granules that go into the detergents industry.
Okay.
And so there are not many players in the world who do this. So we will be one of the 2 or 3. And in addition to this, we are getting into the cathode chemistry for the EV batteries. I would expect to see over the next 5 years at least a 5 times growth.
A 5 times growth from
5
what
times growth from what it was, 490. I would expect it to be at the 490 translating into between 2,400 and 2,500.
Well, that's PCBL up 10%, but another RP Sanjeev Goenka Group company which is doing very well is FirstSource. And this is on the back of their Q1 numbers. It's a very strong start to the year for FirstSource. The company's revenues have gone up by 7% quarter on quarter. Year on year, it's a revenue growth of more than 15%. Part of the growth is attributed to the consolidation of an acquisition that they did. But even if you exclude that, analysts point out that this is higher than what they were anticipating. And when was the last time we had such a strong revenue growth? If you plot the year-on-year revenue trend for the company, 15% has, double-digit revenue growth has not been seen in a while. Because of this Q1 performance, the company is also upped the full-year revenue forecast. So earlier they were guiding for a 10 to 13% revenue growth. Now they're anticipating FY25 revenue growth to be 11.5 to 13.5%. The company's won some good deals, 3 strategic large deals. They've added 10 new logos. That's clients across BFS Healthcare and the CMT, that's Communication, Media and Technology. The company goes on to say the pipeline is robust. EBIT margins, though, have come down to 10.6% versus 10.9%. Hemang Jani is now with us on the show. Hemang, afternoon. Thoughts on PCBL and FirstSource from here?
Yeah, good afternoon, Reema. I think for both the companies, the management commentary and the outlook have been, quite positive. And when you look at the PCBL, the company has added significant capacity in the last 2 years. And now with the management talking about their plans to move up the value chain, the specialty product part would add almost about 180 to 200 basis points to their margins with a significant volume growth. So the stock already has run up quite a bit, and we have a price target of about 380 rupees for the stock. And I think it would be good to kind of try to buy into this at a small dip rather than chasing the stock. As far as FirstSource is concerned, I think the numbers have been very good, and what market took by surprise is the kind of guidance upgrade that we have seen, not only for this year, which has been raised by about 11 to 13%, but they are looking to double the profit over the next, let's say, 2.5 years, which is quite significant, given the backdrop that we are seeing as far as the IT space is concerned. So we have a positive outlook on FSL also, with a price target of 320 rupees.
Okay, so that's PCBL and FirstSource. You've got a positive outlook on both the stocks. Hemang, got that. Good to have you on the show. Let's talk about 2 consumer stocks and very different destiny today in the market on both of them. There's Colgate on one hand. You just can't complain, right? Numbers have been so solid. And then there's Varun Beverages. Very unlikely. We don't see a disappointment from this company too often. But then it seems to have missed the mark. The commentary is not very enthusing either, considering perhaps their best seasonally high summer season is now behind them. What do you think? So would you buy the dip on a Varun? That's one question. And then thoughts on Colgate?
Varun Beverages, a bit of a disappointment, both in terms of revenue, where the disappointment was almost about 300 crore, which is significant. EBITDA impact was about 130-40 crore. And margins, about 27.8% was the expectation. The actual number was much less. Bit expensive stock, and particularly when you have this kind of a disappointment, maybe for at least a reasonable period of time, it's like next 2-3 months, the stock is unlikely to outperform. We should look out for the names where you see upgrades or where the numbers are slightly better. So from that perspective, clearly Colgate was a blowout sort of a quarter. And what was very important is that the volume growth is coming back, right? And the margin picture, if you see the gross margin 70%, the operating profit margin 34% is extremely heartening to see. So would be very comfortable buying into some of the FMCG names, maybe HUL, D-Mart, and of course Colgate would be one of the names that we would be comfortable buying into.
No, got that. In the broader market, there is so much happening, right? Yesterday, around the same time, or maybe a little later, about 3, a little past 3, we were talking about how you had a big move in Voltamp, which was up about 16-17% after numbers had come. Look at what APAR Industries is doing today. That is the big mover of the day right now. So that's about 8% in the green. And I think here as well, of course, numbers are, I think, the reason why you got a sharp spike. And the rally started mid-afternoon at about 12:30 or so. And the stocks moved from about 8,500 to the 9,300 levels. So that is APAR Industries. Do you have coverage on this one, Hemang? APAR? Or, others in the group?
No, Prashant. APAR, we don't cover. Voltamp also, we don't cover at this point of time.
Look at Skipper. Skipper is up 10%. Broadly sort of sticking with that power infrastructure, ancillary kind of space. Lots happening in that area. We got KNR Construction, which is up about 5.5%. You got Jindal Saw, which is up about 6.5%. Nykaa is coming up with a 7% pop. Nykaa still, of course, amongst the companies which listed around the 2021 period remains the stark underperformer. Stocks under 200 rupees, but seeing some activity on decent sized volumes as well. And look at Adani Energy Solutions. Nimesh yesterday pointed out that there perhaps is a QIP coming. There's a fundraise coming, and that stock is up about 6.5% as we speak at this point in time. Hemang, so instead of me throwing a name your way, tell us what you are advising clients to do and what stocks are on your radar.
And purely from a results play perspective, I think Zomato, we are expecting a blowout set of numbers purely because of the kind of momentum that we are seeing in Blinkit. So this would be one of the stocks that we would be comfortable buying into for result. Dixon, today the numbers are going to be out, and because the last quarter was not so good and the management had guided for a better number, so there is an expectation that this time around the numbers are going to be slightly better than what the market is penciling in. And apart from that, we do think that the wealth companies are extremely well positioned, whether it's Nuvama or 360 Wealth. I think if you have any kind of restrictions on the derivative transactions by retail, then the money could flow from the discount brokers or some of the brokerage companies to the wealth companies. I think that could be an interesting theme to look at.
Okay, all right. Hi, Hemang. Good afternoon, and good to see you, Ben. What about Exide? Hemang, I think it came out with its set of numbers. The stock Astis is up close to 115% in the last 1 year or so. For the time being, it's down 4%. From the highs of the day, it slipped a little bit. Any view at around 530 rupees? Bulk of the good news in the price, or is yet to come?
I think, Nigel, both the battery companies, Exide, Amar Raja, they have done well, partly because of the overall growth in their core business and the EV-related, additional, positivity which is around because of the fundraise, the capacity, etc. But I think, given the valuations, we are not comfortable buying these names at this point of time. I think it's time to focus on some of the newer themes which are having their own triggers and valuation comfort both. So I think agri could be an interesting theme to look at. Fertilizers, specialty chemicals, which were out of flavor, but I think now they are kind of seeing much better data points, and we are more positive over there.
Hemang, we'll leave the conversation there. Thank you very much for joining in. Also, keep your eye out on Industars reports numbers today, and along with that, the board will also consider a buyback. So that's something the street is watching closely. Get into a break. On the other side, Ajay Vora of Nuvama Asset Management will join in.
Are mandatory for every taxpayer, irrespective of the income source. So let's talk about them first. PAN and Aadhaar number are the basics, of course, that is something you can't do without. But the other ones, Form 26AS, this gives you details of all the details of the taxes paid during a financial year on any transaction. This would include both TDS and TCS deducted. Second is the Annual Information Statement, or the AIS. This is more detailed version of 26AS and gives you transaction-wise details, and also includes details of interest from fixed deposits and savings bank account as well. Also details of any shares sold. How do you get these two documents? Log into your account on Income Tax website and then go to the e-file tab to view Form 26AS and Services tab to get your AIS. Now for the other income, that is capital gains, you will need to pay taxes. You can get the details of the capital gains that you have earned on sale of mutual funds or shares from your fund house or your stockbroker. This will be available online in your stockbroking account. This will give you details of all the share transactions you've done in the financial year with the amount of capital gains. Similarly, details of dividend income is also important to be considered while filing ITR, and this can be taken from the broker or demat account summary. Also, while AIS gives details of all the interest income that you have earned, always best to check it with the interest certificate you receive from banks. Again, these can be found in your net banking. This would have details of interest paid on home loans as well. Important if you have one, because that can be used to claim deduction in the ITR. This would also mean it's important to keep your home loan statement with you as well at the time of filing a tax return if you have one. Of course, for salaried individuals, Form 16 is another very important document to keep. It is for salaried individuals with details of all TDS deductions done by the employer. Disclosure of all active bank accounts are mandatory in the ITR. Bank account details like your bank name, account number, IFSC and number of accounts you hold must be quoted in the income tax return. Also, one account shall be selected as primary to assist the income tax department in refunding your tax refund by electronic transfer to such account. Also, some of the donations you have made to notified organizations, relief funds, charitable organizations that will be eligible for deduction under ATG. So keep that handy as well. Always good to file your return in time, but if you're late, this basic checklist could help you.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBCTV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Okay, welcome back. Ajay Vora is with us. He's head of equities at Nuvama Asset Management. Ajay, good to have you with us here. Thanks very much. I mean, of course, not to ask you about your stock, but it's been an absolute, what can I call it, banger. So 60 rupees in earnings, very, very strong growth, and wealth management is doing well. I mean, and I was looking at some estimates which suggest that even after the very strong performance we've had, the P multiples on F525 are in the 20s. If you, of course, consider that markets, etc., stay pretty solid. What's your view about the space? Not about Nuvama itself, because I know you can't comment about it, but on the wealth management as a space.
Hi, Prashant. Good afternoon, and thanks for having me on the show. So you're absolutely right. So, I think, wealth management is a subset of what is happening at a larger theme. And I think the bigger trend, what is playing out in this country is the wealth effect. And you need to pick and choose the subsectors which will benefit because of this theme. And obviously, the wealth managers are participating this in a very big way, and they are at the front end of this whole theme. Because as and when, more and more people are getting wealthier, as we all know, people are looking for more sophisticated products, diversification into different categories. And the only way where investors can actually get access to these kind of products is through wealth managers. So eventually, just like any other business where the distribution becomes the core to grow your business, similarly, these wealth managers is at the core of any financialization of the savings. So I think that, the trend is very strong. And, apart from that, if you look at other themes also within this large theme of wealth creation, you look at real estate or you look at travel as a theme, they are also doing exceedingly well. So I think the way I when I talk to investors, I would generally, recommend not to look at, more of index where it is heading, but it is the trends which are playing out in this country and the subsectors which can benefit because of this whole large wealth creation theme, which is one of them.
Jay, if markets were to see a bit of a shakeout, how does that affect wealth management companies? I mean, if there were some redemptions or whatever, we don't know. If there is a bit of a, not a very sharp pullback, but a 5-10% kind of a correction, does it have a direct impact?
So I'll tell you that, obviously it does have an impact. So there are two parts to it. One is the MTM. So, we talk about the AUM under advisory, which works more on new flows as well as the, MTM that gets impacted. And secondly, people may hold on to their new investments. But at least, from my interaction with the investors, what I've realized is that at least if you look at equity as a whole, a lot of investors are looking for some pullback since a very long time and are looking to deploy into different products. But unfortunately, market has been trending up, almost for last 6, 7, 8 months. And people have been on sidelines, although they have participated, but I think not wholeheartedly what they would have participated. And therefore, even at lower levels, just like what you saw during the election time, incrementally, we are seeing a lot of inflows. So my sense is that, it can be a knee-jerk reaction, but investors who are looking at this theme are having a view of at least, I would say, 3 to 5 years. And therefore, the wealth managers' overall size also, if you look at it, the market cap of 2-3 players put together, it's less than $10 billion right now. So my sense is that the opportunity is pretty large and not to get swayed away by the near-term movements.
Ajay, but at Nuvama, what's the call? Is a shakeout in the market coming, perhaps in the next 6 to 9 months? Do you foresee a significant correction, one that we've not seen in a while?
So, Rima, the thing is that, everyone has been talking about a shakeout and a correction since a fairly long time. And I think people have lost more money staying on sidelines rather than participating in this. So the way we are looking at this is that, all the large events are behind us. Globally as well as locally, now we are entering into a period where, globally the rate cycle may start. Locally, if you look at it, election was budget and election, both were the biggest events which people were worried about. They are behind us. But at the same time, I would say that, not much may happen at the index level, because if you look at FY26 earnings, which is expected to be around 1250 rupees EPS for Nifty, Nifty is trading at around 20 times at an aggregate level. And even in this quarter, so far, the numbers, which has come out, there has been a little bit of disappointment versus the expectation. So my sense is that, at index level, not much may happen. The compounding can continue at around 10-12%. But I think the money-making opportunity is more at the broader level, broader themes, the bigger trends which are playing out across, market, be it manufacturing, be it, exports of goods, or as we discussed about real estate and a couple of other themes. And I think that is where one should focus on.
Hi Ajay, good afternoon. Good to see you in. What do you make of this recent announcement on the real estate theme? You know, they've gone ahead, they've cut the tax rates a little bit, but indexation goes out. You were positive on real estate, so I ask you this. What's your current view?
So, Nigel, we continue to maintain a fairly positive and constructive view on real estate. I think that, it definitely opens up an incremental avenue for people who have that excess liquidity. With the duration of holding coming down to 2 years and the taxation coming down from 20% to 12.5%, it definitely opens up one more asset for the investors to diversify, whoever are not holding it. Obviously, people who have bought in from 2001, there is an impact because of indexation going out. But I think if we take a fresh look from here on, there would be definitely a large part of the investors who would look to diversify now into real estate. And more than investor community, I think that the end user, as I discussed, the wealth creation impact, I think real estate is at the front of that whole opportunity. And my sense is that, lot many households are yet to upgrade. And as and when their portfolios or the wealth increases, most of the families would look to, buy a new house. So my sense is that the real estate theme is not a 2-3 year theme. It is here to stay for a longer period of time. And therefore, we maintain a constructive view over there.
Got that, Ajay. So you think the good times have only just started in real estate. What else? I mean, where else do you see value is a very difficult term to use in a market like this, but where else do you see at least reasonable prices where one can expect reasonable growth to come in as well? Give us some more themes, anything new on the horizon. And by the way, we'll have a brand new segment opening up with the Ola Electric now. First of its kind, pure play EV sort of theme to back. Thoughts here?
Yeah. So Surabhi, actually, we are fortunate enough, that our market at any point of time throws up n number of opportunities. So I think that as money managers, we are fortunate that we don't get stuck with a particular theme, and therefore, you keep looking for themes. Eventually, you'll end up getting many such opportunities. So one such, I would say a trend or a theme which we are working on and we are pretty constructive are the companies on the manufacturing side which are nearing their overall capex. So if you look at tires as a segment, they have been into this whole capex mode for last 2-3 years, and more or less by this year or next year, mid of next year, they'll be done with their whole capex. And if you look at the valuation versus all other auto ancillary, they are trading at 2x kind of a valuation versus the tire companies. And if you look at the way crude is behaving over last maybe few weeks or so, and going forward also, we are not very positive on crude prices. If that stays lower, the margins which most of these tire companies will make, and therefore the valuation which they're trading at right now, I think there is a significant money to be made on this whole tire space. Similarly, the second theme, which we are extremely positive, and we have been, on the right side for a fairly long time now, almost a year or 18 months, is the whole OMC space. I think if you look at, or if you listen to the HPCL con call also today, they have been very positive on the outlook. And, they are nearing their completion of the large part of their capex by end of this year, which will add to a lot of, efficiencies and improve their refining margins by almost $3 to $4. So my sense is that, if you look at the ROEs of all these companies over a longer period of time, say 8 to 10 years, they have been doing 20% ROE. And if you do the math and put in all the numbers, these companies with a 20% ROE are trading at less than 10p or maybe 5 to 6 times EV to EBITDA. My sense is that over here as well, a significant money can be made over next 1 or 2 years.
Actually, IOC has just reported the Q1 numbers. It's a miss on revenues, it's a miss on margins. But as Ajay was pointing out, perhaps the outlook is better. Even for HPCL, if you remember, Q1 was a miss, but the outlook in the subsequent quarters with respect to, the GRMs, given crude prices have fallen by nearly 8% in the month of July, is far more robust. So IOC too, it's a miss in Q1. We'll await Sonal. She'll join us in just a bit. But I think the stock is holding up, still up, close to about 1.5%.
Absolutely. Actually, Ajay, just come in with some more detail on this, because everyone was trying to wrap their head around it, because on HPCL, that under-recovery picture was really ugly on LPG, right? Almost 2,500 crores of under-recoveries, and God knows whenever they get the money in from the government. Is it that you're just expecting that a company like HPCL is nearing the end of the capex cycle and therefore ROE will improve? What else is the trigger? One trigger is, just crude. So it could be a great trading play as well because the price was below 80 in the morning. Just explain more on why you still like oil marketing companies.
So just if you take the example of HPCL, and they clarified on the con call as well that the LPG under recovery which had played out in the current quarter, they are pretty hopeful of recovering that from the government at least by end of the year. So that was one major clarification. Secondly, if you look at it that they have been talking of demerging their entire lubricant business. Now, if you look at their lubricant business, that is 3x the size of Castrol. Although the mix is different in terms of B2B and B2C. But today, if you look at Castrol's market cap, that is somewhere close to 27,000 crore. And HPCL market cap is somewhere around 85,000 crore. So I'm not saying that, like to like, there can be a similar market cap assigned to the lubricant business for HPCL. But whatever math, if you end up doing, and if you strip off the entire lubricant business and then you look at HPCL on a standalone basis, there is a large part of investments also into other companies. So if you strip off all those things, company has officially guided for around 40,000 crore of EBITDA by 27-28. And therefore, then if you do the math, these stocks are trading at around, I would say, anywhere between 3 to 3.5 times EV to EBITDA. So my point is that once you have the capex completing, you will have a significant cash flow generation possibility going forward. And especially when the GRMs are likely to improve because of their newer capex, these stocks are looking pretty cheap. So therefore, we can talk about, the other two companies as well. But I think this whole space, because of the factors which we discussed, is looking interesting.
All right, Ajay, we'll leave it there. A great chat as always. Thank you very much for joining us. It's a pleasure, as always. The market's cooled off a little bit. So 45 points is all that the Nifty's got left. So 24,881 is where we're at. We'll take a break, and as always, we'll get you the D-Street chatter, what's happening in dealing rooms, what are the stocks to watch out for with Nimesh, and some trading ideas as well. Stay tuned.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high. We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC TV18 embarking on a quarter century of excellence.
Kamala.
Hello. Hi.
Hey there.
Oh, hi, you're both together. Oh, it's good to hear you both.
I can't have this phone call without saying to my girl Kamala, I am proud of you. This is going to be historic.
Sensex and Nifty and flat, but at a new record close. The Nifty fails to stay above 24,900. Mid-caps outperform.
Colgate-Palmolive India regains its sparkle with toothpaste volume growth far exceeding expectations on the back of a pickup in rural demand and profitability to season improvement. The stock twinkles in trade.
Power Grid ups its FY25 capex target to 18,000 crore rupees from 15,000 crore rupees earlier and charts an aggressive path ahead. NTPC stays on track to add 26 gigawatts by 2032. Lists its new green business and eyes double-digit profit growth ahead. Both stocks jump.
Hello and welcome to Markets Forward, your go-to show where we aim to get you all the key data points with regard to today's session and also get you ready for tomorrow's trade. I'm Raj D'Souza, join me as always, Surbhi Upadhyay. Well, Surbhi, we thought we headed to the 25,000 mark today, but it wasn't to be yet again.
Fear of heights. I think that's what maybe we can say. Though, I mean, I'm surprised the bulls are fearful of anything, considering they've been on such a huge charge. But yes, that's what we had today. We'll talk about it as we go forward. Lots to sort of cover over the next 20 minutes as well. All the key developments on the street, top corporate voices, lots of earnings, and then, of course, the events to track. But very quickly, Nigel, just to talk about, the day, it really summed up in the intraday graph. And we should pull that up for the Nifty or the Bank Nifty, because we were cruising along till about 2:30 or so. And then suddenly there was selling coming in again. This is the second day running that the market has sold off in a manner of 10 to 15 minutes. It happened yesterday. It happened again today, and the result was on the screen. So weakness in banks for sure. The bank index was actually leading the market up till 2:30, but then things turned around completely. But there were some other segments as well. I mean, consumer stocks saw some buying, saw some selling. There was weakness in IT once again, and some of the FMCG names, they were also looking at profit taking. The action was more about individual stocks, specific reactions coming in on earnings, and some very, very sharp reactions in that. And Nigel will talk about it as we go forward.
Well, that's right. Surbhi, today there was another factor that played out. It's a Tuesday, so we have the Nifty Financial Services Index that plays out the weekly expiry. So we just pull up the Nifty as well as the Nifty Financial Services Index. If you try to get a split screen up, you'll see that, both of them fell in tandem, which told you that some of those non-banking names, which are insurers, NBFCs, which are part of the Nifty Financial Services Index, there's a bit of an overlap with banks as well. That's the reason why, in fact, we could be a little bit nervous by the time we wound up. That screen tells you the picture. Perfect. Well, if you also see, there were a couple of themes, though, that played out today. OMCs, HPCL's numbers, when we started off trade, everyone thought that those numbers were disappointing. Well, that stock, just take a look at it, ended virtually at the high point of the day. IOC came out with a set of numbers. First look at it, it looks disappointing, but the street wants to buy into these names. They believe they're generating a number of cash. Post general election, maybe the risk with regard to, on petrol prices, that's behind them. And those stocks actually, they were shining in today's trading session. But let's run you through what we have on the show for you today. We start off with all the top movers and shakers of the day with Vivek. Well, stocks on our radar include Colgate, Varun Beverages and NTPC. And stay tuned as we tell you why these stocks are buzzing in trade. CNBC TV18's popular segment, D Street Chatter, is also on the show. Nimesh will be joining you to tell us why protein was buzzing in today's trading session. Last but not the least, we'll delve into the key market events you need to track for tomorrow's session. But let's get straight to the top movers and shakers of the day. Vivek joins us to help us out. Vivek, take it away.
Well, thank you so much for that. Very volatile trading session, like you mentioned. But the first set of stocks, that'll be on our radar is the entire PSU basket. You did allude to the OMCs. In fact, some of the top gainers, even on the broad end of the markets, were these names itself. Along with that, even NTPC and Power Grid post the analyst meet, they too joined the rally. So OMCs and past utility stocks did very, very well in the session today. In the second half of the trading session, you saw a spurt in the agrochem space. Even fertilizer stocks did very well. So have a look at some of these names: UPL, SRF, Tata Chem, Deepak Nitrite, GNFC. All of these stocks, especially towards the later half of the trading session, saw a spike in the session. Along with that, insurance stocks. You alluded to this earlier, but both life insurance as well as health insurance companies, a lot of them actually saw quite a bit of spike, cooling off a little bit towards the day's end. Now, moving on, one stock that stood out today was Kansai Nerolac. Within the paint pack, Kansai Nerolac actually delivered quite a muted set of numbers, but the company gave strong commentary, and they also alluded to price hikes in the range of close to 2%. On the back of that, stock ended high by 8%. And APAR Industries, declared its results during the market hours itself. And on the back of that very strong set of numbers, 5% higher for APAR Industries. On the other hand, quite a few stocks saw quite a bit of selling pressure as well. Varun Beverages, good set of numbers, but despite that profit booking seen after the stellar rally the stock has seen, in fact, it ended as a top NSE 500 laggard. CSB Bank, came out with its results day for yesterday, weak set of numbers. Markets digested it today, down 4% lower. And lastly, Exide Industries, again another stock, despite reasonably good set of commentary that the management gave, the stock saw quite a bit of selling pressure emerge after the results were declared. Exide is the one that we're talking about.
Okay, yes, lots of reactions to earnings, Vivek. Thank you very much. Busy day today, going through a lot of those movers and shakers. Let's talk about the ones that really stood out. Vivek, thank you very much for that. Let's now get to the specifics. Colgate-Palmolive really has to be the stock of the day because the numbers were so solid and the stock was sparkling throughout, looking absolutely pristine, even when the market was a little wobbly. The gain towards the end was over 5%, just around 5% after the first quarter solid show came through. We've got Mangalam joining in with the details. Mangalam, so I think good brushing makes for, happy investors.
I'll just say no cavities in these numbers. Let's put it that way. The stock was a record high today. Across all parameters, it was a top-down beat. If you look at just, the numbers, the revenue, the EBITDA, as well as the net profit, all of them not only beat our street expectations, but revenue growth of 13% was the highest that we saw in the FMCG industry so far in the first quarter. EBITDA growth 22%, margin improvement of 240 basis points, 33% growth in the profits. So all these factors, whichever way you cut it, they were pretty good. In fact, the company said that it was led by high single-digit toothpaste volume growth. And again, the street was working with a number of around 2 to 3% itself. So that's a big positive. Brokerages were also pretty sanguine on these numbers. In fact, it's the third straight quarter of EPS upgrades from the stable of Jefferies. In fact, they've increased their, target price from a little over 3,000 to about 3,570 as well. ICICI Securities says that, these numbers are pretty strong. They estimate the volume growth to be around 8%. But with the concern that after a big rally that the stock is already seen at 50 times FY26 earnings, maybe it is a little stretchy with a few risks. So just hold is the rating that they have. And finally, we did have a comment coming in from Bank of America. While they maintain their underperform rating, remember, they've raised their target price from 2660 to around 3175. And at the same time, they've increased the premium, the multiple that they pay to a 20% premium versus what it was over the last 5 years as well. So it was, increased penetration of their products, faster growth in some of their premium products, and at the same time, improvement in their margins along with 8% volume growth that the street liked, and the stock hit a fresh record high today.
Okay, all right, got that. So that's Colgate-Palmolive, but Mangalam, while there was one big hit in the consumer space, there was one big miss as well, right? And it's a company that usually doesn't miss, Varun Beverages. What happened here after the numbers?
Well, one cannot call that a miss for Varun Beverages. Yes, it was a miss on the stock price move, post numbers down 6.5%. But remember, it's already seen a 100% rally in the last 12 months, and preceding 12 months, it's seen another 100% rally. In fact, over the last 5 years, the stock has moved over 1,000% itself. The stock split that the company announced with the results was also one of the factors that had the stock a little, off in today's trading session, but could be just a one-off because revenues, no problems. There was a strong quarter, 28% growth in the company's revenues, close to 7,200 crores on the top line. If you look at the gross margins, that also improved by 220 basis points. EBITDA coming in just shy of 2,000 crores with a margin of almost 28%, along with net profit coming in at around 1,260 crores. The volume growth for them was 28% as well, where India volumes grew by 23%. And if you look at the carbonated soft drinks, which accounts for nearly 75%, 76% of their sales, came in at around 32% higher. India, Sri Lanka, Nepal, which is the core of the business, accounts for about 83% of the revenue. And Africa, which will start to contribute in the second half of this year, largely because the current quarter was a low season, Africa in the southern hemisphere, so it's more winter than summer there. Net debt at around 5,880 crores, also pretty manageable given the size of their balance sheet. We had the management on our channel and they targeted overall volume growth at around 18-19%, the same as what they've done in the first half of this year, with margins maintained at current levels. Sting, which is a growth driver for them, was 7% in the same time last year, is now 15%, and they target this number to be about 20% by the end of this year as well. And Africa